Canada. I mean, look at those tariff rates, and then you suddenly feel that, my God, what's happening? But the headline on one of the dailies today caught my attention that it took less than 48 hours for Donald Trump to say that, okay, I may have said that there is going to be no extension, but I'm giving a reprieve to Mexico. It's all happening out there, seriously.
Yeah, but what struck me yesterday, I think a lot of people focused on the dead economy comment. If that's the way that you talk about your so-called friends, then I wonder how you will talk about adversaries.
You know, I think that got a lot of flack because opposition leaders also jumped onto it. A bit of an aside here from what we usually talk about, but opposition leaders jumped onto it, and I mean, whatever else it is, I don't think it's in the realm of possibility to say that India is a dead economy. 100%. There is just no data. I mean, the data is so overwhelmingly in the opposite direction, whether you have upgrades, you have GDP outlook improvements, you have fastest growing economy. I mean, that's at one point you have to leave politics aside.
Which didn't happen, unfortunately, and sadly so yesterday.
Okay, so no political commentary here. We stick to the news, and the global news is what we'll start with. US markets have ended in the red after a lackluster session. So you had mixed set of numbers. Amazon was not looking too great, and they've actually said that the outlook will be a little weaker. Decent ones from some of the other majors, but indices were all down in the red. The Dow leading the losses with about 0.75% of a dip. Now, all eyes are on the July jobs report, which is expected out on Friday. There are estimates of just 100,000 increase in jobs. Unemployment rate is expected to inch up at 4.2%. But so far, most of the economic data coming out from America has surprised on the positive, so keep that in mind. Bond yields have also steadied as inflation data, that's the PCE data, came in slightly above estimates at 2.6%. The estimate was 2.5%, so neither here nor there. The 10-year was at 4.37%. Oil prices have remained elevated as tariff confusion prevails. Brent is above the $72 mark. Asian markets dropped after Trump modified tariff from 10 to 40%. In fact, the Kospi probably would be hit the most. Nikkei is down in the red. Hang Seng and Shanghai is okay because now there is a hit on transshipments, and this is one of the first things we're going to ask Matt Orton as well. But just to clarify, the new set of tariffs, there's an executive order that has been announced and has been signed out ahead of the 1st August deadline, which sets the range of tariffs from 10 to 40%. Everyone not mentioned in the list has an additional 10%, and there's a 40% additional tariff for transshipments. That means if you want to avoid, a country wants to avoid its tariff, or an exporter wants to avoid its tariffs and routes it through a country with a lower tariff, that will give you an additional 40% tariff. I think that transshipment bit is also why perhaps you're seeing this knockdown on the Nifty, because we have to understand what the impact will be on crude imports for India. But Matt Orton is joining in. He's head of advisory solutions and market strategy and chief market strategist at Raymond James Investment Management. Matt, very good morning here from Mumbai. We always love our conversations. Are you able to find any method to the madness when it comes to tariffs?
It can be difficult sometimes. At least I think what we're getting today is relatively expected, in the vein that we knew we were not going to just get a complete cessation of tariffs. And I think if there's any silver lining in what it is we're seeing, it's that a lot of the what ifs with respect to the worst case scenarios are at least being taken off the table. And the tariff imposition that we're getting on August 1st doesn't preclude future deals either. So you look at a country like in India, where you know there are advanced tariff negotiations taking place, the tariffs of 25% is really more of a starting point of, okay, here's where we are now, but we're trying to get those levels back down to something, hopefully maybe around the 15% level, which can be more favorable than some other countries. So I think if anything, we're getting a little bit more certainty. We're learning where that baseline rate's going to be. I think the market was expecting something around 10%. And it's also not a surprise that Trump's trying to get rid of tariff cheaters as well, which is all of this, the moving tariffs from one country, trying to ship from other countries and get around what he's trying to do. So it's going to be interesting to see how things unfold going forward. But those countries that don't want to negotiate, or get on the bad side of Donald Trump, like Canada, for example, there could be more pain to come in the short term.
Take a look at the flashes on the bottom of the screen. This is an update coming through as we speak. The baseline tariff of 10% is going to continue till the 7th of August. I'm interpreting that to say that the 25% tariff will only take place on the 7th of August, which means that it's a bit of a reprieve. It's I wonder if something could happen in the next few days.
That's the point, Alex.
Yeah,
that's the point.
It's an extension.
It's an extension,
and you would expect that this extension is happening because there are talks going on. Like we said, right, in 48 hours, if we can take a U-turn and give Mexico a 90-day reprieve, there's no saying what will happen in India's case as well. So I think that is what you expect. Now, whether it happens or not is a separate case.
Yeah, so it's one more week, and in the context of things moving as fast as they have been, that's quite a lot of time, Matt. You could expect a mini deal, as we've been calling it here, and you could see what you were just saying about a lower tariff. What do you make of that, though? Is this something that is par for the course now? Everybody is looking through and saying, look, those initial tariffs, they seem to be a little bit of bluster, a little bit of saber rattling.
It is, but they're also here to stay in some way, shape, or form. And no matter where you fall on the economic spectrum in terms of how damaging you think they are, or whether you think they're going to help in the end, they're here to stay. And I think the key is, and I want to take a step back from all of this too, because this is really important and something I try and remind clients of. And it's especially important because we're in earnings season. And when you look at where we are in the market today, as you think about how these tariffs might impact overall economies aren't necessarily the markets themselves either. And I think with the Fed, with tariffs, with a lot of volatility happening at the macro level, we can lose sight of what's happening at the micro level. And I think one of the reasons why you're seeing the US start to resume outperformance over the rest of the world is because you're seeing not necessarily a reacceleration, but you're seeing continued strength on the earnings front, not only from the hyperscaler companies, or at least most of the hyperscalers. Amazon's numbers were good. They just weren't good enough for where the market expectations were. But in general, the numbers are good. CapEx investments are fantastic. Earnings breadth is increasing, and you're seeing good beats be very, very strongly rewarded. And I think you're not seeing that strength of earnings across the rest of the world. And that's why you're starting to see some of the big gains that so many of their markets had experienced up to this point start to settle down just a little bit. I don't think tariffs are the reason we're going to see that earnings growth stop. I think it will reaccelerate, especially as we have more macro clarity, because companies internationally now have the ability to properly guide and set expectations with respect to where profits and margins are going to be. So I would expect going forward that while US outperformance could continue in the short term, especially for those companies associated with the AI trade, there's so many other companies in India, other emerging markets, and other international developed markets that aren't necessarily exposed to tariffs, that have very vibrant domestic markets that are also tied to these themes. So look there as opposed to the macro.
On that note, let me ask you a specific question on India. I was reading your note, and what you said is that owning the index currently from an FII perspective is challenging. And what you're waiting for is the next positive catalyst to take that call. I'm guessing that a lot of other foreign institutional investors will be thinking the same thing. We've seen 9 straight sessions of selling and quite a considerable amount of selling by foreign institutions. What is that next positive catalyst?
So it's a great point. And I'm in New York City right now meeting with other institutional investors and clients discussing a lot of these same things. And I think at least where I fall and where I think some of the other investors fall is the catalyst is going to be next earnings season, and where we think in between now and then that companies are starting to move their guidance. Are we starting to see what you want for that reacceleration in earnings? I think if you can maybe see an inflection with respect to what's happening in IT services, or in India in particular, earnings haven't been inspiring, but maybe we're going to start seeing the bottom, especially if there's a little bit more macro clarity. Can some of the big behemoths that have printed excellent earnings, some of the companies we've talked about a lot in the past on the financial side, on the bank side, on automobiles that have vibrant domestic markets, can they continue and accelerate higher with respect to their earnings and margin growth stories? I think the answer is yes, but I think a lot of foreign investors want proof before they put their money to work because they're getting good returns in the US right now.
Just because you look so closely at Indian equity, Matt, what are you liking right now?
So right now, obviously, some of the perennial names we've talked about, ICICI is still, I think, my top pick that we discussed after their earnings. But in addition to that, I think what's been interesting for me, Eternal is a new name that's been popping up, just given their transformation, how they are starting to change the rapid commerce game in India. That's a very, very interesting name where I think there's some enthusiasm with respect to what the company is doing. Also, Paytm has had really, really good results, and you're seeing strength in e-commerce where India, as an entire economy, I think leads the rest of the world with respect to the digital infrastructure that's been set up. So again, there's opportunities to maybe take that technology and leverage it, not only in India, but other parts of the world too. So those are some of the names that are most exciting right now for me.
Matt, as always, pleasure speaking with you. Happy Friday and end to the week. Thanks so much for joining in.
Thank you.
All right, let's talk about what happened in trade yesterday and foreign institutions selling to the extent of 5,600 crore rupees. It was a very volatile roller coaster day for the Indian equity markets. But take a look at this. FII's sell streak is now extended to a 9th session. I pointed that out. But the amount that was sold, 30,710 crore worth of equity on a net basis being sold in just 9 sessions. And in trade yesterday, I want you to pull up the intraday chart, if you will, on the Nifty 50. The benchmark saw a roller coaster end to the July series. It dropped 2.9% in July. The average 10-year return for the Nifty 50 in July is actually 3.5% on the positive side. It's recorded its worst July since 2019 when it fell 5.7%. The Nifty 50 recovered 321 points from the day's low yesterday, only to end 0.35% lower, and the benchmark lost about 200 points in the last 2 hours of trade. The Nifty Bank and the broader markets actually followed a similar trajectory in that time frame. HUL stood out as the star performer in trade yesterday, gaining 3.4%. Quite a few takeaways from that conference yesterday. The last press conference by the Chief Executive Officer, Mr. Java. FMCG and consumption as a result were the winning theme yesterday, and all other major sectors lost ground. You had losses led by oil and gas. You had pharma, metal stocks, all of which lost over 1%. So it was an interesting day of trade, to say the very least. Not as bad as we anticipated at the start, and that, I think, is the positive silver lining to take.
Yeah, most certainly. But by the way, today is also an important day from another perspective, that typically a start of a new series following a last day of an expiry which has not been good tends to be positive. Do we see that today? Remains to be seen. It also caps a week of very important consumer results with ITC coming out today, right? So in that sense, it's a week dominated by consumption names. You can call Swiggy also partly consumption, right? And we'll have an exclusive conversation today as well at some point of time. So therefore, lots happening there. But range-bound movement, you would argue, expected until the Nifty probably breaks off this range of 400, 500 points, right? People probably believe that. I mean, yesterday was a key depiction of how the Nifty is wedged in a range, that the news as adverse as the 25% tariff did not lead the Nifty to break the range on the downside. That shows you the really strong support. And the market-wide rollovers were slightly higher month on month, so I'm not making too much out of them. But I don't know if Tamanna is going to comment on the Lawrence Blanco piece or no on Indian markets. But since we're talking about ranges, I'll just end this trade setup with that, because, well, Lawrence Blanco has been optimistic on India, and he said that there's a confluence of supports provided by the May and June lows at 24,462 and 24,473 zones. So roughly that 24,500-600 zone. He of course goes on to say that the 200-day moving average, etc., brings the major support at 24,000, which is way lower, but kind of indicating that that might be very, very difficult to break. But as long as price action holds above this support zone, we would continue to give the benefit of doubt to the upside. Remember, I think in some sense their idea was, Gautam Shah, etc., everybody believed that we'll see new highs in the months of July, August. Now July is past and we are far away from new highs. Could we see that in August? Remains to be seen.
Yeah. So that's an optimistic note. So I'll just take that with you said the same thing in July. You said the same thing before July. It's,
No,
it's
I'm saying
traditionally
Lawrence
been great.
Blanco is saying.
Lawrence Blanco is, but I'm saying that, you know, in terms of how things have become so uncertain.
Unpredictable, completely.
Because before July, and not just you, everyone was saying this, that July has always been great. In the last 10 years. This is the first time in 10 years it was terrible, but so much that you can't control.
And that drives home the point that you can never predict going forward what has happened or what will happen based on what has happened over the last 10 years. You can't. It's not
And you shouldn't.
You shouldn't.
Okay, what we can predict though, it's not really a prediction, it's I think an assessment, and one of the stocks or set of stocks that could be under pressure will be pharma stocks, because amongst the many other things that Trump is doing, he's also said that in 60 days there should be a reduction of rates of key pharmaceuticals in the USA. There's letters which have gone out specifically to all of the key and big CEOs of pharma companies. You might see an impact at least on a Sun Pharma over here, which has some sales there in the US. So a couple of things he has said. One, that make sure that your price is the same as outside the USA. So the pharma prices, retail prices have to be the same. And if you want to offset it, you can charge other people more. You can charge other countries more, but then repatriate all those profits into the United States. So I don't know which economics is going on here, but that is something that has been saying. Trumponomics is going on here. Meanwhile, the Nifty is of course facing a period of consolidation. That's apparent for all to see. It's a prevailing bearish sentiment. Index showed a remarkable recovery from its intraday low yesterday, but you're still seeing selling pressure at higher levels. F&O expiry session saw sideways action in the front line, and the renewed volatility is a cause of concern. 24,600 levels become a critical support zone. A decisive break below this mark could trigger a sharp correction towards 24,450 to 24,000. 25,000 is a formidable resistance. For the Bank Nifty, it failed to defend its 50-day EMA, suggesting continued bearish pressure. Support at 55,640 and 55,440. Resistance at 56,300 and 56,500. So those are some of the levels to look at. But new day, new expiry, and happy August to everyone. So starting off with that, Puneet, what's the setup?
Well, thank you for that. So definitely it's expected to be again a very narrow trading range. Yesterday as well we failed to defend 24,800, but we ended in the middle of a 300-point trading range, somewhere around 24,700 and 68 as key levels. The open interest of course has gone up, and that's largely led by the expiry, so that the number should be taken with that aspect. The Bank Nifty on the other hand continues to be in the middle point of the 2,000 point range that we've continued to talk about, between 55,500 as well as 57,500. The next key trigger would have to be something big for the Bank Nifty to breach 57,700 as a key level, and that does seem some time away for now. The other aspect is on the fund flow picture for FIs. We've seen buying yesterday largely because of rollovers into the new expiry. When you look at the index long, because of that, it's actually gone below 10%, and this number usually hovers between 15 to 16%. So we were at around 14% yesterday. It's continued to see pressure, which means that foreign investors as of now have continued the short position in the market and have not initiated any kind of index longs, thus putting pressure. So this does mean that out of the 10 positions that foreign investors have in the market, 9 are short as of now. The net OI PCR does continue to be around 1, which largely maintains the point of having higher puts compared to calls. Finally, in terms of open interest distribution and stocks, we've seen again the big candlestick being formed at 25,000, as well as some more key aspect and activity seen at 25,200, which is hopeful of a recovery, but does seem some time away. In terms of stocks, open interest gainers, we've seen key stocks like RBL Bank seeing a major change in the open interest, almost up 200%, while something like a Keynes Tech as well. Stock was up 10% yesterday post company's conference call earnings, and we're seeing a long build up on that as well. Some short build up seen with some rigor in CAMs as well as something like a granules as well. So watch out for these stocks if this momentum continues. Open interest losers, again a very sharp long unwindings, which was seen in stocks like Birlasoft, MGL, as well as something like a Hindustan Copper. Chambal Fertilizers has seen long unwindings. The company's results largely, nothing too much to talk about, but decent set of numbers. But again, it's a day where we will see some more pressure on the Nifty. It's indicating a 129 point downtick, and it could be hopeful that we could see some bounce back from 24,600 if that level comes to be. But another one which will be watch out for in terms of how we close the day versus the start.
Okay. Hopefully, we will see that rebound once again. But right now, we are seeing 130 points down on the Nifty. Let's get to specific stocks that you should watch out for. And we are bang smack still in the middle of result season. So we'll talk about some of those. Swiggy is the first stock on my list. It's a overall thumbs up because revenues are better than estimates. EBITDA and PAT losses have widened and have been higher than estimates. Losses in quick commerce have also increased because of the investments coming in dark stores. Gross order value and monthly transacting users, though, has shown good growth. Here are the core numbers. Net loss is at 1,197 crores versus a loss of 611 crores. So higher than what the street has estimated as well. But the revenues have grown about 54% at 4,961 crores. EBITDA loss has gone from 544 crores to 954 crores as well. So in terms of segmental performance, food delivery business has grown 18%. Quick commerce has grown 114%. So clearly there's a big bet on Bolt. Supply chain and distribution has also grown 75% year on year. Here's what Morgan Stanley is saying. They've maintained an overweight and hiked the target price to 450 rupees. They're saying they're playing a balancing act in Q1. Growth in food delivery is living up to expectations. They now see a slower pace of margin improvement. Good unit economics in Q1 and strong commentary around Q2. Now move up a profitability assumption in the quick commerce business. Jefferies has upgraded it to a buy from hold, hiked the target price to 500 from 380. They say Q1 growth in food delivery was strong while momentum continued in quick commerce. EBITDA margins came off in both, which management attributed to factors like higher payouts to riders, revision in staff comp, etc., with a pause on dark store expansion in short term and easing in competition. Q1 profitability marked the trough. Swiggy, however, remains prone to high volatility due to a low margin base. They call it a high risk, high reward play. So that's a Swiggy for you, and you might see this playing out. Watch out for the exclusive conversation with Rohit Kapoor and Rahul Bothra of Swiggy that we will have at 9:30 today. Meanwhile, Eicher Motors has also put in its numbers. We're giving it a thumbs up because numbers are in line with estimates. Company's efforts for increasing volume with concentrated effort is bearing fruit. Focus over volume growth rather than EBITDA margin continues. Margin has improved Q on Q after 3 consecutive declines. So revenue up nearly 15% to 5,041 crores. EBITDA up 3% to 1,202 crores. Margins have dipped from 26.5% to 23.9%. Profits are up 9.4%. The Q1 sales have been led by premiumization, so that's important to note as well. Jefferies has maintained a buy on Eicher with a target price of 6,500. They say margin corrections have alleviated. Margins have improved 40 basis points Q on Q after 3 consecutive quarters of sequential decline. Marketing and product initiatives have boosted volume growth. Exports continue to grow well. They expect Eicher to deliver a 13% EPS CAGR over FY25 to 28. In fact, Morgan Stanley, though, has maintained an underweight with a target price of 4,079. They say the quarter is in line. Management continues to pursue volumes over margins. They like the growth-focused strategy. They remain underweight because the pricing of the stock in high margin and high growth see downside risks to consensus margin estimates. So that's Eicher for you. But the third stock I have is Mankind, and this is a clear thumbs down. Tough quarter for them. Revenue was up 24.5% on the year to 3,570 crores. EBITDA has been okay, up 26.1%. Margins at 23.7% and net profit down 18.3%. Macquarie has maintained and underperformed with a target price of 2,150. They say the first quarter results are a modest all-round miss, so which is why the thumbs down. Consumer healthcare business grew 15% year on year, led by steady growth across all key brands. Exports business was up 81%, primarily due to consolidation of BSV supported by growth in the base industry. So mankind might have a bit of a tough morning. But right now, I would say all bets are off, because first we have to see what the markets open at.
No doubt, no doubt. So I have a couple of thumbs ups. I'm going to start with the good news first today. Coal India, it's a pretty good set of numbers. And if you looked at the operational performance, you will have seen that they've actually missed their targets once again. Production offtake numbers were not what they should have been or what the street was anticipating. But here are some of the key takeaways. It was a strong operational performance overall. In fact, it was a beat across all parameters. EBITDA improvement aided by a decline in raw material costs is what was one of the key takeaways. The revenue declined on account of lower e-auction premiums. Now here are the key highlights. You had revenue that fell about 5.25%. That's based as the last point that I just spoke about. But you have it coming in significantly higher than the estimate, which pegged it at 35,000 crore rupees. The EBITDA was up 6.2%, came in at 12,521 crore rupees, and that was considerably above expectations as well. The margins expanded by 376 basis points, came in at 34.93, nearly 35%. And that's considerably higher than expected. And the net profit as well was ahead of expectations, though it fell by as much as 9%, came in at 8,743 crore rupees. The EBITDA per ton, and this is one of the key metrics that you would look for, is actually significantly higher than the upper end of the estimated range as well. It came in at 655 per ton, and was estimated between 611 and 637. There's a couple of notes, but I picked the JP Morgan note. It says that it's maintaining a neutral on the stock with a target price of 415. It says that it was a largely inline set of numbers. The volume recovery will remain the key to watch. This is what I pointed out at the start. The volumes have not really come in as anticipated. The higher than expected e-auction premium of 50% is what was a key monitorable in the quarter gone by. It's likely that the Q2 premium will remain lower than last year, and they don't see any negatives from the print. They expect a slight positive revision to the consensus estimates given the 5% beat on PAT, but they also expect that the volume print and the trajectory of the e-auction premium will be key going forward. The second stock on my list is RR Kabel, and this is another cables and wires business that has posted a decent set of numbers. Here are some of the key parameters to look at. The margin expansion has led to a near 50% rise in EBITDA. The revenue growth was lower than key competitors, but it was still decent. The wires and cables revenue growth was 16% on a year-on-year basis. Volume growth improved by 6.5%, or it stood at 6.5% on a year-on-year basis. The export share has actually increased to 29% from 24%. Now look at some of the operational highlights. The revenue was up about 14%, came in at 2,059 crore rupees. Remember, they had a fantastic Q4, so actually they've seen a deceleration from that quarter. EBITDA is up as much as 50%, came in at 142 crore rupees. The margins expanded to 6.9%. It is lower than the fourth quarter, but considerably higher than the previous year of 5.3%. The net profit up as much as 39% as well, 89.8 crore rupees. So I think investors of this company will take heart from the fact that at least seemingly pricing pressure has not come through yet. I wonder if that will change going forward. That hasn't been the case for the other wires and cables businesses so far, at least. The last counter, though, is a bit of a disappointment, to say the very least. Aarti Industries. Pricing pressure has led to a revenue impact. It saw key raw material prices drop, causing inventory losses as well. And they've had to pass on the drop in inventory or rather in pricing of raw materials because of the pricing pressure that they've been witnessing. Specifically on benzene and aniline, those prices fell during the quarter. Margins were affected by input price volatility as well as temporary operational disruption. The impact was also seen on account of the postponement of bulk shipments from June to July. Now take a look at the numbers. The revenue was down 9.5%. EBITDA has dropped as much as 34%, coming at 196 crore rupees. The margin is eroded quite considerably, coming at 11.7% compared with 16.2%, and the net profit as a result is down as much as 69% to 43 crore rupees. Just when you thought that chemical companies were by and large moving out of the bog, then you have to think again.
No, this we determine. Let the corner be turned, because it's been around
a long time.
around the corner for a while now.
There seems to be a revolving door right at the corner.
Yeah. Okay. Very quickly, the three stocks on my list: Chalet Hotels, and The hotel companies have surprised positively, which is great to know. Revenues up 147%, margins at 39.9 versus 38. Net profit 203 crores versus 60 crores. You can't really find a fault with these numbers. A good solid quarter, very likely the stock could react. JSW Energy revenues were up 78% at 5143 crores, margins at 54 versus 49. Profit after tax up 42% at 743 crores. You will hear from the management, by the way, today on India Market Open. And I was reading the Motilal Oswal note, which said that the revenue was 6% above their estimates and beating estimates. EBITDA beat estimates by 24%, driven by higher the estimated contributions from the recently acquired assets, which is KSK Mahanadi and O2 Power, alongside higher generation from fully contracted Vijayanagar coal plant. So suffice to say, this one, a good set of numbers, and let's see if there is any positive reaction there. What will be negative is Sun Pharma. Now, Tamanna highlighted one set of pressure points, which is that Trump has pressurized 17 pharma CEOs to cut US drug prices. Could there be a natural impact thereof? That is one. But other thing for Sun Pharma specifically, and I'm borrowing this MK note, they say that the key negative surprise in the Sun Pharma con call was the full year ETR guidance, which is the estimated tax rate guidance, which is at about 25%. They say the tax rate guidance was well ahead of the earlier guidance, which was going to be a gradual increase as opposed to a step up jump, and that is what has now happened. And this uptick is primarily on account of exhaustion of Ranbaxy linked tax benefits. So MK says that the back-to-back negative surprises on the guidance front could impact multiples. They cut the FY26 and 28 earnings estimates by 9% and target price by 11% to reflect the change in multiples as well. Watch out, Sun Pharma could well be the accident of the day today. That's on my list. By the way, Newland Labs is the other one. Accident of the day.
I was going to say.
Very high multiples even now. Has rallied from 11,000 to 14, 15,000 odd, wherever it is right now.
Horrid
and the numbers were horrible.
Horrid numbers. We might be able to talk about it, but there's so much to talk about on the earnings front and otherwise this morning. Of course, there's auto is in focus on the back of two reasons. A lot of four-wheeler companies have reported their Q1 numbers, and it's a mixed bag. And also, of course, today is the first of the month, so auto sales numbers for the previous month, for July, will start trickling in. And Puneet joining in to give you a perspective on what's happening in the space. Puneet, generally you see ahead of the festive season some build-up in inventories. Wholesale data sometimes reflects that. Is that something that you will see as early as July?
Well, definitely, Alex, and that's been the pain point because we've already seen inventory build up over the last 2 months. So we could expect in terms of auto sales some disappointment in most of the players, especially in the four-wheeler space. So Maruti, Tata Motors as well as Hyundai is expected to have a weak month of July, while someone like an M&M will continue to outperform. Two-wheelers have been boosted by good monsoons as well as a positive rural sentiment. So we are expecting sales growth for Hero, TVS as well as someone like an Eicher Motors, with Eicher Motors being the highest. For commercial vehicles, that trend hasn't started yet to pick up because of government spending amongst other reasons. So VECV, which is the commercial vehicle arm of Eicher Motors, will be a key beneficiary, outperforming the industry, while Tata Motors and Ashok Leyland will be subdued. In tractors, Mahindra continues without a doubt as well. And in terms of the results as well, we've seen 5 key results over the last 2 days. Hyundai, Maruti as well as Mahindra have come out with earnings, with Mahindra being the top one. But for Maruti as well, the commentary as well as the execution of electric vehicles over the next the next 2 quarters will be one of the key ones to watch out for. For TVS as well as Eicher, the earnings were really strong. Management commentary remains optimistic, and the demand also is quite good. So we are anticipating a lot of action on these 5 names especially, but for the others will also be in focus on the back of July auto sales, which is expected to be, as I mentioned, very diversional between the segments.
Thanks so much, Puneet, for laying the context for us. We're joined this morning by Ashwin Patil, senior research analyst at LKP Securities, who tracks the automotive sector very closely. Ashwin, very good morning, and thanks so much for taking the time. Most numbers in, and so therefore, what do you make of it? What is your big winner and big loser from the auto pack based on the numbers in the first quarter? And are you at all optimistic on any one of the numbers that will come through over the course of the day, today and tomorrow?
The numbers were kind of a mixed bag for me. As far as Maruti and Mahindra, the four-wheelers, the two big four-wheelers, if we talk about, then Mahindra was quite strong margin performance, strong pipeline for EVs, and the performance of its volumes also were quite strong. The launches that they have done, the two EVs that they had launched last quarter, they are performing well. The pipeline launches are also looking quite promising. And if you look at the margin performance also, they are quite strong on that perspective. And if you look at the tractors, the FES segment, that has also performed well. The company has guided for a mid-single-digit growth for FES and mid to high teens growth for SUV segment going forward for FY26. So we are quite optimistic on M&M, and we have maintained our buy rating on the stock with a target close to 3,700. So we have slightly upgraded our estimate on Mahindra, and we continue to be quite bullish on Mahindra, and that remains a topic within the auto space. Talking about Maruti, on the other hand, the numbers were not really very great because most of the bottom line was pumped up because of the other income, which was actually doubled, driven by MTM gains and some treasury profits that they have done this quarter. So that, speaking of that, maybe the bottom line would have declined. And the top line also, we have not seen a very strong growth because, pressure that they have seen in the lower segment of the four-wheelers. And that also, though the contribution of that is declining and the SUV is improving, the exports performance has been really very promising.
Right.
So we think that, some things we can look out for Maruti going forward, like the couple of launches that the company is going to do on the side as nice.
Got it.
So I think, we are maintaining our neutral stance on Maruti, but we are buy on Mahindra.
Buy on Mahindra. Any of the two-wheelers players that you have a buy rating on very quickly, Ashwin?
We like Bajaj Auto, Hero MotoCorp, as well as TVS also is looking good now. But among them, looking at the rural growth and all, we like Hero more than the other two.
Okay. So buy rating on Hero. Any target price?
We'll be revising our target, but right now we are having an upside of about 10 to 12% on Hero.
Got it. Ashwin, absolute pleasure speaking with you. Thanks so much for taking the time. Have a great day. All right, we have to slip in a very quick break, but there's lots to talk about, not least of which earnings. We've taken you through a few, but there are a lot more to talk about, and there's more news as well, so stay tuned.
Has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा टेकिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
You heard the story of Pandora's box. Once you open it, a lot of things keep coming out. Well, it seems like the Jane Street saga is something similar. A major tax controversy is unfolding involving Jane Street, and sources have told NDTV Profit that the firm used its Mauritius arm to trade in futures and options, booking profits tax-free by leveraging the India-Mauritius Treaty. Shrimi is joining in with those exclusive details. Shrimi, what are you picking up here?
Well, that's right. The Income Tax Department, which surveyed the Nuvama Wealth on Thursday, is probing a potential case of treaty shopping involving global proprietary firm Jane Street. Sources tell NDTV Profit that Jane Street allegedly routed its future and option trades through its Mauritius arm, booking significant tax-free profit by claiming treaty benefit. And at the same time, the firm booked losses in equity investment in Indian companies, resulting in zero tax paid on its overall trading activity in India. Now, the tax department believes that this entire strategy constitutes as treaty shopping, shifting profitable trades offshore to avoid any sort of Indian taxation while declaring losses locally. Department, who surveyed at Nuvama, which acted as a sole clearing agent, trying to gauge that why the tax were not deducted when it was liable to withhold tax under the Income Tax Act. Now, department is now looking at the books of Nuvama, the data and the trading details, and could perhaps move to recover dues from them, holding them accountable for non-deduction of tax on behalf of FPI. In this case, the Jane Street. For the benefit of our viewers, India-Mauritius Treaty had allowed capital gains from the sale of shares in the Indian companies by Mauritius-based investor to be taxed only in Mauritius, and due to this exemption, Mauritius became the preferred route for foreign investor for trading both in the equity and derivative. This led to, however, a lot of concern around the treaty shopping, where the entities set up shell companies in Mauritius purely to exploit tax benefit. However, the India renegotiated the terms of this treaty somewhere in 2016 to curb the abuse, and capital gains now on the Indian share acquired after April 1st, 2017 are taxable in India. However, derivative and certain more instruments still have some grey areas, and that's why the dispute like Jane Street keep emerging. Remember, earlier this month, Jane Street disgorged around 4,800 odd crore in profits, after which SEBI lifted a trading ban imposed on this global firm.
All right, let's get in our experts to try and talk about all of this and more. Remember, Jane Street, tariffs, post-Fed, new expiry, lots to talk about. Kush Bora Johnson to talk about the technicals and the derivative positions. Kush, great having you as always. Thanks for taking the time out. Sajid, our colleague, was telling me, and I'll say what he exactly mentioned. He said that the FPIs hold the lowest long positions in at least 1.5 years for the August series. Now, how does this set us up for the August series, if it's possible to predict the whole series at one go?
I'll come to that, Neeraj, in just a bit. Good morning, guys. But we're firmly, well and truly into my favorite half of the year, where you've got all the festivities starting. This month alone has 4 festivals: Raksha Bandhan, Janmashtami, Independence Day as well, Ganesh Chaturthi towards the end. So yeah, happy days ahead. And if at all anyone ever wanted to see how a dead economy celebrates, come to India now, this half of the year.
There you go.
Had to come out of the system, right?
Yeah. You were waiting for that.
I was waiting for that. I had something more dramatic planned, but I settled for a subtler one. But yeah, Neeraj, you're absolutely right when you say that the FII long positioning on the index is below 10%. Now, historically, it's happened only a handful of times, and every time that has happened, the rebound in the next couple of series, at least, not just one, in the next 2-3 series, has been phenomenal. Anywhere from about 1,500 points to 3,000 points as well. That's the kind of rebound that you've seen. I don't see a reason why that should not happen this time around. Now, let me tell you the reason why. Markets are probably seeing the worst of the news being factored in already at the current prices, right? Tariffs are at 25%, which was the worst case scenario, probably worse than the worst case scenario. So this is the ceiling now, and anything from here on will only be better. Results haven't been so great, but markets have taken that in this stride as well and are pricing that in. What's missing here is a positive trigger. We don't have one yet. If the festive season cheer does come about and you get that positive trigger, I think the markets are due for a very sharp round of short covering. up until that happens, Nifty can consolidate with this negative bias for some time. The immediate level of support is 24,600. Now, I know as we've been speaking for the last couple of sessions, the range has been shifting lower. Now, if 24,600 is held, then you could see some sort of consolidation and a rebound. If not, then the recent lows of 24,450 come into a bit of a testing. So be on the lookout for any kind of positive news, and a rebound trade might not come today, but maybe around the corner. So positional trade on a long side makes sense as long as 24,600, 24,450 is held.
Got it. Let's also talk about individual picks. And I saw in trade, if I'm not mistaken, earlier in the week, Kush, you had a sell call and a buy call, right? So is that the case? Is that how you're operating today as well?
Very much, Alex. And the reason is that markets are volatile and the short trades have been paying off. So why miss out on those trades as well? So yes, I've got a long and a short trade. Like last expiry when we had Max Healthcare as a derivatives pick for the series. This time around on the long side, it's PG Electroplast. The stock has had a good run. Yesterday also, when the markets were consolidating with a negative bias, the stock actually did well. In fact, for the last 3 sessions, it's been doing well. And you have a small cup and handle formation that is coming into play, breakout around the corner. So maybe slightly preemptive, but a positional trade on PG Electroplast, 835, 860 target, 785 being your stop loss. On the short side, I've got IRCTC. Again, nothing much to write home about the stock. Every time it touches the 20-day moving average, you see a downward pressure on IRCTC. Near-term support zones also broken. So if you're considering a short trade as a hedge, IRCTC is your short trade. 717, 707 are your targets, and 737 is where you place that stop loss.
Okay. Well, time of the show wherein we get to you what dealing rooms are talking about. All the chatter in dealing rooms with Soumit Sarkar. Soumit, good morning. क्या है आज सरकार के पिटारे में?
Good morning. That's a nice one.
It's a good one.
तो आज अगर हम देखें तो फर्स्टली इट्स डिलीवरी so today it's delivery and Thermax firstly, where dealers are indicating that there are buy flows on institutional desk, and dealers are also indicating that the Q1 numbers are expected to be on the stronger side. Specifically for delivery, they're expecting margins to come out quite strong. For G Power, there are buy flows on large HNI desk on expectations of a turnaround quarter in the first quarter. They're expecting the company to report an EBITDA positive here. Now, for the past few quarters, the company has been reporting losses. When it comes to ITC, dealers are indicating that there are buy flows on DI desk, given the fact that ITC is a pure play domestic company, and so no impact of this Trump tariffs that have been announced. Plus, also there's some comfort on the valuation side for ITC. And lastly, when it comes to all cargo logistics, there's a buzz of a potential corporate development that could come in, something that could be on the positive side for all cargo logistics. So keep an eye out for that counter as well.
Okay. All right, so quite a few stocks. Thanks so much, Soumit, for the Sarkar ka pitara. On that note, let's welcome in Vineet Bulinjkar, who's Head of Research at Ventura Securities. Vineet, a very good morning to you. Just wondering, and before we get into any specific stocks, seemingly the kind of drop that you've seen in trade yesterday in the buying at lower levels, and some very big names moving quite dramatically, HUL one of them. Any opportunities in stocks that have taken a bit of a beating in the recent past that are strong fundamental buys in your opinion? Something that you've kept on your radar?
So I think Guja Bambuja looks very good. They've also come out with stellar results yesterday. And I think that that stock will perform really well going ahead. So that is one stock that really stands out for me.
Let's talk about some of the automotive companies then. Today in focus for multiple reasons. Of course, earnings came through for quite a few of them yesterday. And of course, today and tomorrow, you will see some of the wholesale numbers come through. And according to Puneet, our researcher, it seems like it's going to be a mixed bag once again in the month of July. Anything that stands out to you after Q1 that you would buy, and anything that you would remove from your portfolio based on what you saw?
So, one interesting counter that comes to mind is Ola. I think their numbers were good, and I believe that they captured the complete value chain, and that could spring a surprise. And at current valuations, I think there's nothing left to lose. And if you hold on to this stock for a few quarters, I think you'll be rewarded amply.
Right. Let me get Kush's view on some of those. Ola is something we need talked about. Let me add 197, an Eternal and a Swiggy.
I think
Interesting list.
Yeah, very, very. When it comes to Ola and 197, they are at the opposite ends of the spectrum. I wouldn't touch Ola with a barge pole, right? Even if they gave the stock for free, I perhaps would not consider it. That's the kind of setup that it has been for a while.
Wow.
For a turnaround, if and when it happens and the price action confirms that, I'll consider. I don't believe in the first mover advantage, more of a second mover advantage. So yeah, let the price action confirm that for me and then perhaps we'll consider. Paytm on the other hand, we've constantly been bullish on this stock. Even about a month or so ago, around the 975, 980 levels, we gave a call on Paytm, revised that again. We mentioned that on the channel as well a couple of times. So still bullish. What you've seen in the last few sessions, more of profit booking, more of consolidation, and that too in a market that has been consolidating with a negative bias. So yes, remain constructive on Paytm. I think about 1130, 1170 on the upside, may not be such a big surprise, if the stock were to hit those levels also. On the downside, supports near the 1045, 1050 mark. So keep that as your stop loss if you have a position.
I just want to bring in your viewers just one point that there's a difference in the strategy simply because Kush follows charts and charts need to show the proof of an up move before Kush would go out and buy it. What Vineet is talking about is fundamentals and I'm sure market gossip, because I think 2, 3 or 5 days or 6 days ago we spoke about this as well, that there's some smart money who's logging into Ola in a big way. So maybe there's some bit of scuttlebutt as well out here in Vineet's part and trying to figure out what the market whisper might be. So there's a difference, and which is why Vineet is going out and recommending Ola and Kush is saying I won't touch it with the barge pole.
Yeah.
Vineet, you want to round robin off this conversation?
So I think, they've had their fair bit of flack, and we were also extremely bearish on them. But, this result, we've seen the new vehicle that they've launched get encouraging response. And, they've kind of getting their act together with the entire value chain being captured by them. So they own distribution, they own the battery, they own the, motor unit. And, permanent magnets, they're replacing with non-ferrous magnets, non-rare earth metal magnets. So I think, if they get this act right, I think the stock at the current valuations is available to you for a song. And, things can turn around very quickly because, automobile stocks can move very fast in good markets.
I'm just wondering, Vineet, would you be looking seriously at impact of any of the overnight announcements on tariffs? Do you see a Sun Pharma or pharmaceutical companies overall coming under pressure, some pressure there on autos as well? And the mood overall is a negative. Do you think tariffs is still weighing on Indian markets, or are there other problems that we're looking at?
See, it's more geopolitical than, tariff related. They're trying to align India and isolate Russia, and that is not really happening. And so we will see more action oriented towards India in the coming days. And so we are going to see about, another few quarters of, grappling with this issue. The big elephant in the room, which no one is addressing, is that what happens if India has flatly registered the F-35 and we go and buy more of Russian military hardware. Will they impose CATSA on us? So, that is the elephant in the room, as I said. And that could further pressure the market because, yesterday 7 Indian companies have been sanctioned by the US. So we are going to go through that little bit of sanction and trade tips going over the next few months. So we could see the markets, get a bad taste and linger around for a while.
Vineet, sorry, this has missed my attention. What are the individual companies that have been sanctioned, you are saying?
Those who supply oil, those who buy oil from China, Iran.
Russia, Iran. Oh, okay.
Yeah.
Thank you for that, Vineet. Okay. Certainly keep an eye out for this. And by the way, Vineet spoke about Pharma. We'll talk about Pharma in detail with Varsha in a bit because a lot of things are in news flow. Sun Pharma for individual reasons, all of those generic companies for a broader reason. And we will also have some commentary on Newland Labs because those numbers were very, very weak. And we'll do that in a bit. The other set of stocks that could be in focus would be stocks like Suzlon, because the government has increased domestic content requirement for wind turbines, and wind OEMs will now have to manufacture almost all of the key components in India. I believe Chinese companies had started gaining a lot of market share as well. Vineet, do you guys track this as a house, the wind equipment manufacturers? Any thoughts here?
Yeah. So we still believe that Ola is a little expensive. We had come out with a sell note when the price was around 75.
Vineet, I'm talking about the wind equipment manufacturers, the Suzlons of the world.
I was talking of Suzlon.
Oh, I thought you said Ola. That's why I heard you say Ola.
By a slip of mind, by mistake.
Okay.
Suzlon, we have a sell note on this counter, and we still believe that the stock is expensive. I have announced plans to, they have got a very good order pipeline, but on a valuation perspective, there's no comfort. I think around 45 to 48 is where, if the stock comes, we will look to initiate a buy on the stock.
Okay. Well, let's see. So the fundamental view from Vineet Bulinchkar is that the stock should come down lower. We need to actually, I would love to, Kush, you have a 20-second answer, Suzlon and Anox, 20 seconds?
Both are in a bit of a downturn. Wait, you could perhaps accumulate at lower levels, not at the moment.
Okay, the similar view, viewers, so keep that in mind. We need to slip into a break. Back with Pharma, with a clutch of other names, including some key brokerage notes. Stay tuned, we'll be right back.
Has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
Welcome back. We just have a couple of minutes to the pre-open session and more exclusive news coming in on what's happening with the Anil Ambani case. Remember, the Enforcement Directorate has summoned Anil Ambani on the 5th of August. They're now probing a 68 crore fake bank guarantee linked to the case. ED has conducted searches in Bhubaneswar and Kolkata in the case. This is exclusive information coming in from NDTV Profit Shrimi Chaudhary. The Biswal Trade Link is accused of issuing fake bank guarantees for 8% commission. That's off the amount of 68.2 crores given to SECI. Remember, this whole case and investigation on the Solar Energy Corporation of India. The search action is based on evidence seized during Anil Ambani Group's search ops. ED has linked fake bank guarantees to Reliance NU BESS and Maharashtra Energy Generation Limited. They find a spoofed email used to impersonate SBI with a fake domain name used to mislead SECI. This was the case actually on which there was a settlement So we will get Shimi up on this as soon as we are done with market open. But that news that we're addressing right now, so that's the big one which is coming. Meanwhile, Indian pharma companies may take a hit as Trump is demanding 17 pharma giants lower US drug prices. What are the implications for Indian companies? Varsha is joining in with more details.
Yeah, thank you for that. So, first on the news, Trump is demanding that these companies, 17 MNC companies, they should immediately lower prescription drug prices in the US to match the lower prices paid by the other developed nations. So, letter has been sent to 17 major drug makers, which includes Eli Lilly, Pfizer and Novo Nordisk. Now, specifically, if you see, Trump is calling for immediate reduction in prices for existing drugs sold to Medicaid, and he insists that the future drug launch in the US must be priced comparably to international market from day one. And he has also presented a unique proposal. Now the US government would help companies raise drug prices abroad to match American levels, but then any extra profits earned overseas would then need to be brought back to the US to offset domestic drug prices. Now if I were to talk about the impact on Indian pharma companies, Sun Pharma has the largest exposure when it comes to US branded specialty drug sales. Their key drug Ilumya, which treat plague apaurosis in adult, if you see in FY25, that contributes around 5,000 crore, which might be largely affected because of this regulation. Over 50% of the Ilumya sales are generated overall when it comes to specialty portfolio, and Ilumya's US price is reportedly 4x higher than the other developed nations, and the lowering prices to global parity could significantly affect Sun Pharma's Ilumya drug. So overall,
it's largely Varsha. So it's largely Sun Pharma.
Yes, it's largely Sun Pharma.
Okay, so it's the hit is focused on a Sun Pharma is the point to note. Let's look at Sun Pharma in the pre-open session just a minute in. So we'll have to see how that really pairs out. But Vineet, in terms of Sun Pharma and pharma sector companies right now, anything specific that you think is a buy?
So I think CDMO space is quite insulated from the generic players as such. And, those are the stocks to go with. And here we like Divi's Lab, we like, Laurus Labs also. So I think these two stocks will continue to do well. As far as Piramal Pharma is concerned, we are slightly skeptical. We believe that it does not have enough mojo in the stock. And, while they pointed to, teen kind of revenue growth, it's a little struggling with capacity utilization. So until they don't get the capacity utilizations right, I think that stock will sell off a bit. We think it's fully valued at current levels.
Okay, so some early movers, PNB Housing, there has been a change in management and an announcement overnight. So you're seeing that impact coming in early trade. JSW Holding also hurting. Reliance Power, you can expect that after summons from the Enforcement Directorate to Anil Ambani. So you'll probably see that impact there as well. Aarti Industries seeing some amount of hit. RR Kabul. Nuvama, there was a survey by the IT department on Nuvama yesterday. And that in the Jane Street case actually, and then of course a statement coming in from Nuvama later, so you might see some pain there in early trade as well. Chalet Hotels shining this morning, so is Inventorist Solution. GVT and D continues to show movement second day in a row. JSW Energy also looking good. So these are some of the earlier. I see fertilizer stocks also looking decent in early trade. But IIFL Finance is the other one that we should quickly address. Their AUMs grew 7% quarter on quarter and 21% year on year. Credit costs for the microfinance segment are declining. Gold segment has seen recovery, which is quite heartening. Their unsecured MSME and micro lab credit costs are rising. HSBC in fact sees MFI disbursements likely to pick up. Their net interest income growth to be supported by lower funding costs. These were the core numbers which came out actually. Operating profit at 836 crores, which was up 31%. PAT was down 19% and gross NPA ratio actually stayed fairly steady. So that was one to look at. Well, we wanted to also see PNB actually, because you've had a change in management
PNB
there.
Housing, yeah.
Yeah.
Girish Kausgi moving out, and therefore that could be. So there are two things here, right? One, PNB Housing, of course, I mean, this is early days, but suffice to say, him resigning should bring about a downtick. The other thing could be, could PNB Housing become a takeover candidate? And would that limit or cushion the downsides? I think that will be remaining to be seen. I wish Somit was here, because we would have asked him if dealing rooms are talking
He
about
is, in
that.
fact.
Okay,
Yeah.
but
Your
not
wish
for
has
dealing
been
rooms.
granted.
I
Did
wish-
you want to revise if your wishes are being granted today? Is that your wish?
I
that
would
Somit was here?
I would like
a trade deal, India imposes 35% tariffs on US.
no, that actually
Let's
not
leave
good.
that out. Just kidding. But Somit is here. Somit, before we get to the brokerage of the day, just wondering, do any of the dealing rooms talk about PNB Housing being a takeover candidate in any fashion whatsoever?
Well, so far there was no chatter about any of such thing, because the street was not aware about the resignation that was expected to come in. Hence, we are also seeing this kind of a downtick when it comes to PNB Housing, 10.5% down. So far there is no chatter about PNB Housing being a takeover candidate, because standalone the NBFC was performing well, and Girish was also leading this company very good is what I am understanding so far.
Somit, fair call. Maybe today, viewers, at 2:30, we'll urge Somit to try and figure out if there is some other chatter on PNB Housing now that this event has happened. So maybe tune in for 2:30 as well. A shameless plug there. But on to the big brokerage call of the day. Morgan Stanley remains bullish on Kotak Bank, maintaining an overweight rating. Somit has those details. Somit, fill us in.
Well, yes, Morgan Stanley has come out with this note on Kotak Mahindra Bank, where they have maintained the overweight rating on the stock with a target price of 2,600 rupees. So it's a tactical buy report that Morgan Stanley has come out on Kotak Mahindra Bank, and one of the reasons why this tactical buy has come in is because Kotak Mahindra Bank has underperformed the Nifty Bank Index massively. In the last 3 months, Kotak Mahindra Bank is down nearly 11% while the Nifty Bank Index is down just 1%. Apart from that, they're expecting, the brokerage is expecting Kotak Mahindra Bank's earnings to accelerate in the second half of this of this financial year, and this will be led by improvement in loan growth, margins and asset quality. They also say that Kotak's starting point of profitability is much better compared to what other peers have, and at this valuations of around 1.6 times FY27 core book, the valuations are quite cheaper, given the fact that the bank generates a return on asset of close to around 2%. And because of this underperformance and strong growth that the brokerage is expecting in the second half of this financial year, they have come out with this tactical buy rating on Kotak Mahindra Bank, and they expect the share prices to relatively outperform the industry over the next 30 days.
Term outperformance expected. Somit, thanks so much for highlighting that. One of the stocks that you should keep on your radar, not just today, but over the course of the coming sessions as well. Neeraj spoke about chalet hotels, and he said that the numbers are not something that you can complain about. Certainly, the street is not complaining. The stock seems to be the outperformer in trade today. Vineet, if you've looked at the numbers, and we've been speaking off and on about the hospitality space. Of course, the last quarter was actually painful if you think about it, because of geopolitics and various other factors. Chalet is up 10%. Would you go out and buy at this point?
We have a buy call on the stock, and I think the company is doing very well. Their portfolio is performing reasonably well. Their project, which was there in Bangalore, is coming to culmination. So I think, this stock has easily the potential to rise another 30% from current level.
On the charts though, Kush, what are the opportunities that you see?
So not for a fresh trade, because now you're staring at a resistance of 1015, 1020 mark. That's where the stock had actually tanked from, if you see, at the start of the year. So I think some supply is likely to emerge at those levels. Anyone who bought it at those levels will actually look for an exit around this mark. So wait for a dip. Perhaps once again, if the stock actually dips closer to the 970, 980 zone, or perhaps a little lower as well, that's when it makes sense. The medium term structure for the stock still remains bullish, but a buy on dips rather than a fresh entry at this point.
The other set of names, JSW Energy, let's see if there is any reaction on that one post its numbers. So certainly something to watch out for. Should come up on your screen, about 3% higher. The other one is Sun Pharma, and I wonder What's the extent of damage to that stock? Actually, not too much. Just about. Maybe Newland is the other one. Maybe there is some exaggerated move there. Let's see if that stock. Yes, certainly about 4% lower. Actually, Vineet, I'm wanting to come to you since you spoke about the CDMO space being relatively insulated. But Newland is an exception to the rule. A very torrid FY25. Expectations were FY26 would be strong. Q1 is hardly an indication of a strong FY26. Why does it trade at the valuations that it trades at?
So I think it's, I didn't track it very actively, but, obviously it's the portfolio that you talk about and its capabilities. When it comes to the CDMO space, is your capabilities that matter. And I believe that over a period of time, more business will come in, more molecules, drugs, and outsourcing will come in. So it's just one of those quarters where things are, sluggish. But I think eventually the trend will pick up.
I wonder what's happening with Aarti Industries though, and we briefly mentioned this at the start today or before the start today, pull it up, and it's down about 2.4%, not the best set of numbers. We need coverage on Aarti Industries. How does it stack up if you talk about specialty chemical companies and chemical companies in general? You had some pockets of brightness, but then this is certainly not a good number.
Yeah, but I think the outlook is going to be more encouraging. I think the Chinese supply side pressure on lower prices is kind of waning away. We have seen that play out in the agrochemicals, and soon, these specialty chemical companies will tend to follow. So we have a contra call out here. I don't think it's maybe it's not the best time to buy, but definitely worth keeping a track of these stocks.
What level would be good to consider then? Have you considered that, Vineet?
375, 360, very reasonable levels to a lot of value out there.
Is that possible on the charts, Kush, on Aarti?
Yeah, I was just going to say that the same thing, that yes, about 385 to 375, that's a good accumulation zone for Aarti. Near-term structures have changed. So if you get it around those levels, not a bad entry point for Aarti. It might actually hit oversold territories also, and then a rebound play also comes into action at around 375, 380 levels.
Yeah, anyone saying why the pre-open has settled, it's not half bad as per what the implied was showing us. Yeah, you want to comment on that, Kush?
Yeah, so what I want to say is there's perhaps an outside chance that, we might actually slip a little lower as well, not going by what GIFT Nifty was suggesting. What I've observed in the recent past is that, if any major news comes about on the expiry day, especially the monthly expiry, we tend to dance to our own tunes, but the real effect of that comes in the following day. So if today we're able to hold above the 24,600 mark, then I think we can safely say that the tariff impact is done and dusted, and, the markets have taken it in their stride. But if not, then we might see some reaction to that today as well. So just a word of caution, 24,600 is an important zone.
On the tariffs, I think what could be an additional news point also, which has been a bit disappointing, is that overnight they have tweaked some tariffs and not ours. So now you become relatively higher. So for example, Pakistan's tariff has gone from 29 to 19%. You've had the others going, like Japan, 24 to 15%. The differential has been a bit different about before and earlier. South Korea, of course, went from 25 to 15. India went from 26 to 25. If I look at April 2nd and then I look at what's going to come in on August 7th, and forget about all the noise in the middle. So that could be something that's pairing out.
Just a quick word. अभी तो अनाउंस किया था, अब अभी अनाउंस करके एक रात या दो रात में चेंज कर देते तो टाको ट्रेड would have still come into play. So I don't expect an immediate revision, but as I said at the start of the show, this is the ceiling. This is the ceiling now. For anywhere we go from here on tariffs front will actually be lower in all likelihood. So I think market is pricing in the worst.
7th, by the way, is a Thursday, right? Yeah. So it's the next weekly expiry is when you can anticipate that the reprieve ends, and so if anything comes about. By the way, a minute in. Left for the start of trade. Anything that you're spotting beyond what you had suggested at the start?
So Alex, one quick mention of Deep Industries. Now the reason I bring this up is because 2 weeks ago we mentioned that as a weekly pick because of market volatility and already run up texture. It saw some profit booking, but see the last 3 days it's had a phenomenal recovery. So still bullish on Deep Industries. If you did buy it, I would suggest a hold on this. If not, you could still consider a fresh entry.
Wow. Okay. Sorry, Kush, are you saying that that's your top call for the morning today?
From a positional standpoint, yes. From anywhere from a 1 to 3 month kind of a time horizon, yes, I still maintain a buy on Deep Industries.
Okay, so buy on Deep Industries from a positional standpoint for sure. Kush, I'm tempted to ask you very quickly for the day today or for next 2 days.
Still going with PG Electroplast that I mentioned in the morning.
Okay, so long on PG Electroplast, viewers. That's the call that Kush Bora is making today for a short-term trade, 1 or 2 days. But the market's about to start. I think not half bad was the way I think the pre-open session ended. Let's wait and watch if that's how it begins and that's how it ends. Flat as flat can be. Hardly any change there for the Bank Nifty as well. Nifty IT corrects a little bit. I mean, this is unpredictable to say the least what happens in IT, to be very honest. And some noises in the newsroom as well. Mid cap index flattish. The small cap index flattish too. Let's get the heat map and see if there are movements. A lot of red on expected lines, very little green. Now what's doing well? Sorry, I'm tempted to go to the green because HUL is on a tear. It easily qualifies as the stock of the week. I can't call it the stock of the month because it did well in July and starting off August with a bang too. Aside of that, iShare, no big reaction to what seemed to be a pretty decent quarter, by the way. Brokerage is up the target price there. Nestle, Tata Consumer, Maruti, Hero MotoCorp, Asian Paints. So a bit of a consumer and an auto flavor to the gainers today. But on a flattish day, a lot of stocks correcting. Sun Pharma 3.5%, Dr. Reddy's. Pharmaceuticals and IT remain the key losers in the session, with Sun Pharma down for more reasons than one. The tax rate guidance as well is something that has not pleased the street, and that stock is down 3.5%. HUL now settles down a little, which is probably welcome as well. It would have been quite interesting to see it gain 7% after a 4% up move yesterday.
You know, the last time we saw these kind of moves in this segment of stocks was around the elections, after the budget, where you expect consumption to move. But this is on pure numbers, which is why a real positive as far as HUL is concerned. iShare also on numbers. Nestle also, joining in the party. So is Tata Consumer Eternal. The consumption theme is well alive and kicking this Friday morning. The VIX benign, I would say, about 2.5% up right now, but under the comfort zone of 12. Let's pull up the broader markets if you can. The small cap and the mid cap. Mid cap completely flat, but at least in the green. The small cap 250 also completely flat right now. Let's pull up the sectoral heat map and see what's happening here. I reckon Pharma will be hotting. Yes, Pharma at the bottom about 1% down. Not very bad considering that the implied was indicating a painful start. That's not happening for sure. You're flat, you're consolidating, and that's fine. Healthcare, Nifty Healthcare also hurting. IT. So you're seeing tariff-facing stocks seeing more pain as a broad theme. On the other hand, domestics are doing well. Nifty FMCG, I mean, you can put how much of a tariff you want. There are enough Indians there to buy your soap, toothpaste, shampoos and whatever else. So your staples, your Nifty FMCG is doing well, Nifty MNC also okay. So you're seeing that entire theme. I've not seen Nifty Rural here for a while. So there's a whole different kind of a theme going on right now. Let's get to the stock specific story because so many numbers have come on, so much news happening. We'll try and capture as much of it as we can. I'm going to start with results impact. Inventuris, Chalet, Indegene, some of these that have reported and that have been seeing, some kind of a decent set of numbers. Chalet Hotels is the stock. I mean, there's competition today for stock of the day. HUL, Chalet, both are competing. Both are talking about people's spending power. If I were to draw a theme over there, Inventor is doing okay. So is Indegene, all back of numbers. Newland Labs, not such a good set of numbers. Nor was Niva Bupa that great. So you're seeing that being hit quite hard. RR Kabel was a decent set of numbers and is perking up now. Reliance Power, ED summons Anil Ambani on the 5th, so you might see some pressure there in that stock and related stocks as well, actually. Sun Pharma and KRBL, we should look at it in terms of tariff impacts, and we saw Sun Pharma there on the Nifty as well. KRBL also the other one where, you know, exports are going to get hit to some extent, but it's pared down. Auto sales is the other big story this morning. Eicher, M&M, Tata Motors, Hyundai, Bajaj Auto, TVS. Let's pull those up. Some numbers out, some will come. Eicher on the back of results as well. M&M, Tata Motors. M&M taking a breather actually after a good run up. The others are in the green, especially TVS Motors. TVS Motors has a slew of positive brokerage notes on it today. The numbers have been good. They have, though, cited the rare earth crisis as a bit of a problem. But otherwise, you're seeing autos also giving some perk to the morning.
Tamanna, Chalet Hotels, very clearly the stock of the morning, 16% higher. And there are a few other names from the broader markets that are doing incredibly well, reacting somewhat to news. We pointed out that the fertilizer space is moving, has been buzzing in the recent past. Chambal Fertilizers is the other big winner today. Not so much the other ones, they've moved up in the recent past, but Chambal Fertilizers doing well. GVTND once again hitting that 5% mark in trade on the upside. Suzlon Energy, we spoke about it, and both on the fundamental basis and on the technical basis, the suggestion was that wait for lower levels. That may not be something that is easily achievable, at least in the near term, because the stock is perked up 5% higher at the start today. Indegene up and about 5% higher. Restaurant Brands posted its numbers, a good set of numbers, the street says, up about 4% or so. Netweb Technologies also doing reasonably well. Schneider Electric up about 3% or thereabouts and doing well. HUL holding on to gains, in fact building on to those gains, 4% up at this point. Clearly by far and away the best performing large cap at this point. Flip the script and talk about those that are not doing well. Niva Bupa Health, we've already spoken about PNB Housing, which is down about 10%, but Newland Laboratories down close to 6%, Niva Bupa Health, Sun Pharmaceuticals all losing ground. IFL Finance also a little bit of a underperformer in trade, losing about 3.6%. Specifically on PNB Housing though, Vineet, would you say that the exit of a chief executive officer warrants the downtick that you're seeing right now? Or would you say for a company that has performed reasonably well, this is a good buying opportunity?
PNB Housing was cheered by the CEO, and he was a star campaigner for the company. His exit is a loss for the company, and so you're seeing that reflected. But I think a 10% is a little exaggeration. But you know what? By the time they find a new suitor and who comes to lead the company and it performs well, it will take its own time. So I think that best to avoid this stock at current levels. Otherwise, it was a great buy. It was one of our most preferred stocks. But now it, with his exit, it kind of just becomes another housing company. We look at other names until a new CEO is announced.
Is that a good bucket though, Vineet? Since you mentioned you are constructive housing finance, what else would you look at?
Home First looks good for us. I know the results were not that exceptional.
Yeah.
But definitely the growth trajectory is there in place.
Okay. Now, what else? The advanced decline is okay on the Nifty 500, by the way, I must say. So even as the index is doing what it is doing, the breadth is fine on the Nifty 500 and market-wide to 1378 versus 928. So the breadth, not too much to do there. Just that the pharma space is taking a stick. Sun Pharma is now down 4.67%. Actually, Kush, I'm wondering, is there a trade on the downside on Sun Pharma? Would you go ahead and short it at these levels? Or is it too late now?
No, actually it is a shorting candidate because the support zones were at 1640, medium term support zone about last 3 months, that is what was held. Today it's down on the back of fairly decent volumes for whatever time the markets have been open. Yeah. Actually not a bad idea to consider a short trade on Sun Pharma. 1605 is the first target, the second one is about 1580, and keep a stop loss slightly higher just in case of volatility around the 1660 mark. But yeah, this is broken support levels, it was consolidating, and so makes it a shorting candidate.
Now viewers, keep in mind that Kush is recommending a risk reward which is almost even Stevens, because the stock has already fallen. So take it if you are a high risk trader. He does believe supports are broken and therefore it's a good short candidate. But remember, the stops are also wide. So take it if you can bear and stomach a bit of volatility here. But Kush Bora, Vineet Bolinchkar, on that note, both of you, thank you so much for taking the time out and being with us. Time for an NDTV Profit exclusive, and you saw the flashes at about 9 a.m. But we just give you details now. The Anil Ambani saga continues as the Enforcement Directorate uncovers a 68.2 crore fake bank guarantee scam with alleged links to the Anil Ambani group. We have Shrimi joining in with more on this. Shrimi, you broke this story, I believe, at 9 a.m. or just before that, but now fill us in on the details here.
Yeah, that's right, Neeraj. So ED has launched a search operation today in 68 odd crore fake bank guarantee racket, and this is linked to Biswal Trade Link, an entity based in Orissa, and its director, as well as one location in Kolkata connected to an associate of this group. Now, this whole operation follows after the Delhi Police Economic Offence Wing has filed a case against this company. Now, sources tell us that this is in expansion to what they are already probing, and all those documents which they seized during the search operation against Anil Ambani group of companies. So now this Biswal Trade Link and its associate allegedly issued fake bank guarantee in exchange for a commission of 8%, and also facilitated fake bills to channel the money. Probe is also revealing the fact that, how this fake bank guarantee was submitted to Solar Energy Corporation of India, which is SCCI, on behalf of Reliance NUBESS Limited and Maharashtra Energy Generation. Now, this false guarantee was backed by, interestingly, spoofed communication using the domain sbi.co.in to impersonate the official domain of State Bank of India, and, of course, in a bid to misled this SCI. Now, ED sources says that company operated as a shell entity with its registered office located at residential property belonging to a relative, and no statutory company records were found at the location. So, currently, the sleuths uncovering multiple undisclosed bank accounts with suspicious transaction amounting to crore of rupees. And additionally, key individuals in the racket were found using Telegram with disappearing messages, that also indicating deliberate attempt to erase communication trail. So critically, the entire operation has been linked to the evidences seized during ED July 24th search operation on Anil Ambani group of companies. And in fact, sleuths are confirming at this point that a lot of material being collected during those search operations pointed towards this ongoing racket.
Okay, so this is going to turn into a big story. We're already on top of it and we're tracking it. Thank you for that, Shrimi Chaudhary there with all of those exclusive details, and you can see all of it first, of course, on NDTV Profit. Shantanu Sengupta with us this morning is Chief India Economist at Goldman Sachs. Mr. Sengupta, always a pleasure to have you on, and this is such a timely report, a timely conversation to have, as we're just wondering what the India-US tariff is going to settle at. Now, from everything we've seen in the last 48 to 72 hours, is it now becoming clear at least that 25% is not the final rate we will see between India and the United States?
Yeah, thanks. So we think that, there's still some time to go, and possibly you could get a settlement which will be at a number maybe less than 25%. What we are unclear of is the penalty is unspecified on energy and defense purchases from Russia. So we'll have to look for that. We haven't made any changes to our growth estimates as of now. What we have done at this stage is put out sensitivities, which is easier for or more useful for clients to understand at this stage, pending the final official announcements. The final point is that they have been in deliberations for a long time now. And the US team the Indian team has been in DC. The US team has been in New Delhi multiple times. So negotiations are still ongoing, and the Commerce Ministry also put out a press release stating that they're looking for a fair, balanced, and mutually beneficial trade agreement.
Shantanu, hi, morning. Alex here. Worst case scenario, are you building that in, that 25% stays? And if that is the case, then what is the implication for GDP growth? I see you've penciled in a 30 basis point drag. But is there any way that that can be mitigated because of domestic factors at all?
So I wanted to be clear that this is a sensitivity at this stage. We have not made any changes to our estimates because the announcement is not final yet. You're right that the annualized incremental impact, if you were to be at 25% tariff rate for all products, and then for steel, aluminum, and auto products already at higher tariffs, the blended rate would be around 26.5% in our view. This is taking out the unspecified penalties. We do not know that yet, so we have not incorporated any of that in. That would mean an incremental drag of 30 basis points on an annualized basis. What that will mean for about 5 months left in the year will be around 10 basis points. But as you know, the direct impact of these are more limited. The indirect impact actually comes from the uncertainty effect on investment. And there, from both top-down and bottom-up, we have seen an impact on CapEx spends by companies.
Shantanu, good morning, Neeraj here. And tariff issues notwithstanding, let's assume that the eventual rate is anywhere, as you said, less than 25%, maybe above 10%, whatever we settle it at. What's the slightly medium-term prognosis? 0.3%, 0.2%, whatever the impact on GDP might be. Just the basic building blocks with all that the RBI has done and the government is doing for consumption. There was a lot of chatter around how FY26 needs to be the year of the consumer as opposed to be the capex on the corporate side. How are you figuring the medium-term trajectory for Indian growth?
Yeah, thanks, Neeraj. So on the domestic front, we are quite positive on the bottom end consumer, especially. We think that there are multiple macro factors working in favor for the rural side, especially, and the overall mass urban side. One, the agricultural production has been quite good. Two, food inflation is down, which gives a boost to real incomes. In fact, real wage growth is nearing 4% on the rural agricultural side, which is at a multi-year high. And on top of that, you've had some fiscal transfers coming in at the subnational level, targeting women, especially in the lower income households. So all of that combined, we think can act as a catalyst for the rural and the mass recovery. And that is completely endogenous, so that it has nothing to do with tariffs or the rest of the world and what's happening on the export front. The part which we are a little more concerned about, as you said correctly, is more the capex side. And then if you put in together the 100 basis points easing by the RBI, the liquidity easing, all of that monetary policy easing feeds into the real economy roughly with a 2 to 3 quarter lag. So by the end of this year, or at least in the second half of this fiscal year, is when you should start seeing some of that effect. Also remember, the final point is that the fiscal has been big drag on growth in the last couple of years because it was consolidating by 80 basis points each in the previous 2 years. So you had a total 1.6 percentage point of consolidation. The planned consolidation this year is only 40 basis points. And that itself will be a lesser drag on growth than what has been in the past. So we would say that overall policy drag is lower, monetary policy is acting as a boost. So the domestic levers are looking better, while the rest of the world, or at least on the export side, is looking as like a headwind.
I want to come to you on the assessment of India's GDP impact potentially to final demands of the US or the tariff number, because the number has been ranging around 2.2%. You peg it to 4% of GDP. Can the impact actually go that high if we don't come up finally with a deal which works for India?
And number is the Indian economy's domestic value addition associated with the US final demand. What that means in simple terms is that, one, you can look at a direct export exposure, which is how much India is exporting to the US. Two, you can look at how much India is exporting maybe to other partner countries, and from there, the final product is reaching the US. If everybody is getting tariffed, then you are impacted you're impacted on aggregate. So in our mind, the number is closer to 4% than 2%. But the elasticity assumptions and all of that also goes into these calculations. We have found that about 0.5 elasticity is a good number to go with. There's an IMF study on that as well. And therefore, we think that the direct impact is going to be barely 10 basis points this year. If this stays at 25% tariff for the rest of the next year, which is quite an extreme assumption, I would believe, even then the annualized impact is only 30 basis points incremental. But as I said, all of this ultimately feeds in through the second round effects of investment uncertainty on growth. And there, you might have policy levers being put out. I mean, if really growth is seeing that kind of a drag, the risk would be that the central bank, the RBI starts easing a bit more than what is baked into our forecast, or you could have a fiscal which consolidates lesser.
Shantanu, last couple of days, we've seen the slide of the rupee against the dollar. We're at 87.44 as we speak. I'm just wondering whether you have any anticipation as to where this pair is heading, particularly because in the recent past you've seen the strengthening of the dollar against a basket of currencies, and what that means for India in the context of the uncertainty of crude prices. We don't know where it's going right now. It's been more or less benign, but if it does inch higher, and if India is forced to, because of trade concerns, move away from certain suppliers of crude, does that have a bearing on the economy?
So the first point I would mention is that there's a confluence of factors which are working on the rupee at the moment. One, RBI has a large short forward book. Some of those deliveries come up. Two, you've been having some equity outflows, as you know, especially in the month of July. And on top of that, as you pointed out, there's been a slight bit of dollar strengthening in the past month or so. And that has caused the rupee to depreciate, but you've seen the depreciation across other Asian currencies as well. And rupee would have been in the middle of the pack as the overall Asian currencies depreciated. Look, our house view still remains of a weaker dollar in the medium term. So we would treat this as an aberration. We think the dollar slides weaker over the next 6 to 9 months. And therefore, we are not really baking in a much sharper depreciation of the rupee in our forecasts. But as you pointed out, if you have a scenario where oil prices are higher than the sort of $70 range that you're seeing now, and the dollar continues to strengthen, which is not baked into our forecasts, that would mean a weaker rupee, and that's also the right adjustment mechanism for the economy when you're going through this kind of a tariff episode, right? So if tariffs are imposed on you, you're having a slower growth. One of the ways of policy to react would be to have a slightly weaker currency in that case.
Shantanu, always a pleasure speaking with you. Thanks so much for the clarity that you brought this morning amidst this swirling uncertainty. All right, well, there you have it. And let's talk about something else now.
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
To ask, as one of the 5 people in India who's driven the Tesla, what do you think?
No, I'm sure a lot of others have outside India.
Exaggeration.
No, so for me, the interesting thing was the conversation, because it's an exclusive conversation with Dinesh Thakkar, and he is a complete motorhead. I don't think he'll even bother buying the Model Y. He said, I'll buy the Cybertruck when it comes. So that was on, what kind of demand you see. But yeah, the experience of driving the car was fab. I must say.
Sorry, I wanted to get to the car straight away.
Yeah,
I didn't care about the conversation, to be honest.
That's why
Simply
I
because it's such a fabulous
I know
car,
that the
right?
conversation with Dinesh is going to be fantastic. That's why I was curious about the car.
Yeah, no, it was a superb experience.
Did you get, men thrive on taking out a good car or a bike and people looking at them, wow, did you feel like that? Were people staring at you?
I was, first of all, I don't know if people were staring at me. I was like, let me not bang this car.
You don't want to get a scratch.
It costs a lot. So I was just really focused between the car and the conversation. I swear, I did not take my hands off the wheel or my eyes off the road. So I was very good. But
yeah,
it took all of 15 to 20 seconds to figure out how. Not because I'm a great driver. I'm very average. Some would say below average. But it's very intuitive. Like a dumb person can drive this car. So
let's not give ideas. Sorry. Let's
I managed.
No, but I've driven one electric car, and this is the Mahindra E2O of all cars. I'm yet to drive something like the Tesla. But the one thing that stands out, and correct me if I'm wrong, because you drive an internal combustion car, the lack of sound is a little disconcerting, isn't it?
I mean, we were doing a lot of chatter in the car, so that was not a problem. But just the feel is very, very different.
I think you get used to it. You get used to it. So that's one. But just before we get to a whole hog on the car, very quickly on the conversation as well. What's to be anticipated? What came out on the conversation?
So the consumption boom is definitely here, and for the Tesla though, at the 63 lakh price, they're going to have a tough time unless that 110% tariff goes on. And with everything that's happened since I drove that car, I don't see that happening anytime soon. Having said that, some gupshup, as we were hanging around the dealership, a huge amount of interest coming in, and not so much from mega cities, from across the country.
For Tesla, you're saying? No,
for Tesla.
For Tesla,
from farmers, from politicians.
Really?
Yeah, that's a bit of the chatter that I picked up. So,
interesting.
So the demand appetite is what the big story is out of there. In fact, the next conversation is also talking about the demand appetite. It's an exclusive conversation with Swiggy. What's cooking at Swiggy? The company posted its Q1 results yesterday. The revenue remains better than estimates, but PAT loss has expanded. So before we talk to the management, let me go across to Mahima to set the context.
Right, so Taman, as you rightly mentioned, revenue was way better than what was expected by the street, but losses have widened in quick commerce, and this is both sequentially as well as year on year. In terms of food delivery, the growth has been better than Zomato, but overall gross order value and monthly transacting users growth has also been strong. Dark store additions have now peaked, is something that the management has guided for. In terms of the overall numbers, revenue saw an uptick of around 54% year on year, EBITDA loss at 954 crores and net loss at 1197 odd crores. In terms of segmental performance, food delivery saw growth of around 18% YOY, quick commerce saw growth of 114% YOY, and supply chain and distribution grew around 75% YOY. In terms of the key con call takeaways, they said that they'll expand dark store now on need and demand basis. Competition is at elevated level, they've acknowledged that. The take rates will improve going forward is what they've said, and they would want to expand into affordability and faster delivery is what they're saying when it comes to the food delivery segment. Lastly, Bolt contributed around 10 to 12% of the total revenue. So this is the entire view of how Q1 panned out for Swiggy, and it'll be interesting to watch out for as to how management sees the profitability path going ahead, as well as how they're seeing competition as well.
Okay. All right. Rohit Kapoor, CEO of Swiggy Food Marketplace, with us on the show this morning. So is Rahul Bothra, CFO of Swiggy. Welcome to both of you. Rohit and Rahul, great to have you on the show. I'm actually going to start the question with Rahul first, which says big boost in revenues, Rahul. What segments were firing?
Overall, our platform GOV on the B2C businesses grew by 45%, on a year-on-year basis, led by the quick commerce business, which grew 108%, and the food delivery business also accelerated its growth to close to 19% on a yearly basis. So these two, contributed to, and our dining out business again grew handsomely at 61%. So pretty strong performance on a top-line basis, overall growth.
Rahul, let me do a follow-up on that. At the same time, your losses have widened. Is this due to investments in quick commerce? Because losses in your EBITDA level and on net level have doubled.
So overall, if you look at on a percentage basis, we actually improved our contribution margin on the B2C businesses by around 12 basis points. At the same time, our absolute EBITDA, investment in the quick commerce business was higher. This was largely led by our marketing investments in the new user growth side. If you look at from our contribution margin trajectory, we actually improved our margins by 100 basis points in the previous quarter. We have also given a guidance that we will get to contribution margin positive in the quick commerce business over the next 2 to 4 quarters. So we have started that journey.
And overall, what is the target for turning EBITDA positive? Does it remain at first quarter of FY27?
Yeah. So specifically on the EBITDA for the corporate side, while on the food delivery business, we have given the guidance that, over the medium term, you should expect a 5% positive, on the gross order value. On the quick commerce side, we want to make certain calibrated investments. So the guidance currently is only on the contribution margin line. We do not want to right now box ourselves on the EBITDA side, considering that the category itself is seeing pretty heightened levels of growth, as well as new players coming in and marketing investments that need to be supported to make up and to support the 100% plus growth that we are seeing. So we want to make keep ourselves the flexibility to be able to continue to invest for growth in this segment.
Another thing that was mentioned on the call, Rahul, and my question to you again, why are you going for larger stores, dark stores versus a more number of dark stores? What is the strategy there?
See, if you look at our overall strategy, it was two-pronged. One was our, average size of the store used to be, 3,000 square feet, which we have over time increased it to like roughly 4,000 square feet. That gives us the flexibility to have a lot more SKUs and selection for our customers and increase the overall assortment. So that's on the one axis. The other axis that we have, expanded our network is on the mega store side, where we have, larger stores of 8 to 10,000 square feet that can potentially house up to 40 to 50,000, SKUs. So it's a combination of the larger, dark store as well as the mega stores. Our ability to service our consumers with a wider selection at faster speed has, immensely gone up. So if you look at the overall network, we are currently at around 4.3 million square feet of overall, coverage in terms of our dark stores across 130 cities. And we feel pretty good about our ability to service the incoming demand as well as continue to grow from here.
Rahul, should I interpret that as slowing down on adding dark store capacity?
No, we will continue to expand, but this expansion will be more growth-led versus us, wanting to enter, say, newer hyperlocal areas. As I said, 130 cities. We will add a few more cities depending on the performance of some of these, tier 2 and tier 3 towns that we are entering. So the expansion journey has not stopped. At the same time, it will be calibrated from here on because a lot of these are underutilized. A lot of them are, less than 6 months old. So we do have a lot of, surface area to be able to continue to grow with the existing network. And, we will continue to add, wherever there is a, utilization reaches 100%.
Let me take the next question to Rohit. Rohit, just on Bolt specifically, what is the trajectory that you are seeing?
Bolt has been in the 10 plus % range in terms of order contribution. What we have focused on last full quarter was to work on two things. While maintaining the order contribution, we work with the restaurant partners because there's some small percentage of food items which were sort of not getting ready on time for the right speed, for example. So either we've taken them out or work with the restaurant ecosystem to improve that. Second is worked on our own delivery model, fine-tuned it to just deliver a fast, superior experience on Bolt. So we are actually 1 quarter out more confident on our ability to execute Bolt at scale. And it remains quite a consumer love piece because a lot of consumers I speak to, when they get their favorite coffee in 10 minutes or when they're rushing and they want something in 10 minutes, it's a completely different experience. I think, frankly, they love it. From here on, I think the way we continue to build is to build more use cases on top of it. The economics are fairly good because while the AOVs are slightly lower, the delivery costs are lower. So we feel very good about the offering. I think we introduced this first in the category and we continue to remain strong believer in the 10-minute food delivery model. Yeah.
And what are the targets, Rohit, you've set for Bolt? And yeah, I can completely agree to that. Getting your favorite coffee in 10 minutes is great. But what are the targets you've set for Bolt in terms of revenue contribution?
Yeah, so as I said, this remains in the 10+% order contribution range. In terms of overall growth target, we'll see Bolt moving in line with the platform growth, because also, as you can imagine, Bolt being the kind of offering it is, also limits the restaurants that can serve a consumer to a 2 to 3 kilometer radius. Given the speed is the primary access of the offering here. So I expect the Bolt growth to remain in line with platform averages.
Rahul, my question to you on the competition in the space. You have an Amazon coming in now, more and more players coming in, and that's something that weighs on investors' minds, that even though Swiggy has the first mover advantage in some segments, in quick commerce, the competition is really heating up.
So so the quick commerce one, see clearly what we are seeing is a huge market opportunity, right? So there are established entrenched players who are offering this 10-minute delivery version, and then there are also players who are also wanting to play the quick commerce game. So I think there is going to be increased spending and marketing for user acquisition. At the same time, there is a certain segment of penetration that has already happened where the top 2-3 players are continue to get that benefit. So we will see increased interest from various players, and we are seeing that in the market. At the same time, I think necessarily these may be quick commerce also players and not only players, right? So I think there's really a clear distinction between the proposition of various players, and those who can offer the 10-minute service and those who will do a slightly more delayed scheduled delivery kind of services.
Okay, and the same question to you, Rohit, but for quick food delivery. Bolt also has a lot of competition coming in.
On the quicker food, there are two models. One is the marketplace models, where actually the quick commerce is being delivered from your same set of restaurants, and that the only offering in the market today is Bolt. So that we continue to feel very good in the way we are building it, the way we are sort of making it highly relevant to the consumer. On the other model, which is I'm sure you're referring to, let's say what we are trying to do on snack. I think on snack, I can say this for us and for the category. This is an interesting new use case. There is clearly some consumer love. There's clearly some consumer excitement around the offering. We can see it in our consumer ratings, in our data. But I think that market is yet to play out fully. It's very early days for that market.
Rahul, my question to you on another part that you need to address. What are you planning to do with Rapido? Because Swiggy has an investment in Rapido. They've now started a competing business, a bit of a conflict of interest there. What are you planning to do with that?
Yeah, absolutely. I think we have covered it in one of the shareholders letter that we have published. I think our investment in Rapido was slightly more strategic in nature. We wanted to see if we could get certain benefits on the delivery side, considering the large network of riders that they have. And we did a few experiments, but we realized that the overall synergy was not to the level that we were expecting on it. We've also recently seen their ambition to enter the food delivery business with a slightly say on the lower average order value or a more value meals side. So there is a certain amount conflict of interest that will ultimately emerge. And therefore, we are reevaluating our option of the continued investment. We are getting significant interest in the purchase of our stake, and we are going to make a decision at an appropriate time on that.
Okay, and as we wrap up this conversation, Rohit, let me come to you and ask you what is exciting for the rest of the financial year? What is interesting to you guys at Swiggy out there?
I think, look, we are fortunate enough to be in 2 or 3 very, very exciting categories. Like food continues to be underpenetrated, fairly exciting. Quick commerce is probably one of the fastest growing categories in all of consumer tech, all of consumer internet, if I may say so. Dine Out, you've seen our results is tracking quite strongly. And we always, as a company, we always believed in continuing to tinker around in terms of trying to find new opportunities to serve the consumer, right? And so you have things like Crew, there are some other things which are I'll call pre-PMF. So and then there's enough competition in the market. So never a dull moment. I think we were sort of born in the middle of the competition, and we thoroughly enjoy being part of exciting categories, battling competition, showing up the consumer for the consumer daily, right? And I think the team, if I may speak on behalf of the team, is super excited. There's a lot of positive energy and momentum.
Yeah, all right. Thank you so much for that, Rohit and Rahul, for speaking with us. That was an exclusive conversation with Swiggy, who have reported their numbers yesterday. All right, it's earnings season, and this is an opportunity for us to get you the voice of management. And JSW Energy is the next stock in focus on the back of its Q1 earnings. Hiral joining in to set up the conversation we're going to have and just give us a sense of how those numbers looked.
So overall, interesting numbers. It's a beat across estimates if you talk about it. The EBITDA growth that you've seen this time around in terms of JSW Energy, the uptick has mainly been led by this organic renewable capacity addition that they've done overall. The net generations have increased around 71% on a year-on-year basis. And what they've said is that the installed capacity is expected to grow at almost a 20% compounded growth rate till 2030. In terms of where the PPAs that are signed are concerned, they've done around 350 megawatt FDRE, 100 megawatts in terms of solar and 100 megawatts in terms of BESS as well, which is battery storage. In terms of the con call, what they've said is that the EBITDA beat was mainly driven by Mahanadi thermal plant, and they've signed new PPAs in the first quarter, plus another 450 megawatts that have been signed post the quarter as well. The trial runs for the 3,800 TPA, which is the green hydrogen project, is ongoing. So a strong set of numbers that have been reported as well. And to discuss more in terms of the earnings, joining us on the show right now, we have Mr. Sharad Mahendra, Joint MD and CEO at JSW Energy. Mr. Mahendra, good morning and welcome to the show, and always a pleasure to speak to you at NDTV Profit. This is Hiral on this side. Firstly, congratulations on the strong set of numbers. Clearly have beat estimates. We've seen an uptick in terms of EBITDA that has been led by organic renewable capacity addition. So how has the contribution been from Mahanadi as well as O2 Power? And are you expecting this kind of performance to continue in the coming quarters?
Yes, definitely the quarter one performance has been a significant performance by the company, resulting in almost 93% increase year on year on EBITDA. And as you asked that with how it is sustainable, first we have to understand the key drivers for this growth. The drivers have been last year, as we have informed, that our organic wind capacity addition, which was almost 1/3 of the country's wind capacity addition, what we did last year, majority of that came in the second half of the year when the peak wind season has already passed. That has contributed significantly in quarter one because that entire new capacity is seeing the wind season, which normally starts in April end or May beginning and up to maybe September or part of October. So that has benefited. In addition to that, our existing units, that JSW Utkal plant, the second thermal unit of 350 megawatt, which get commissioned in March, has contributed significantly in this quarter one. In addition to that, the two large acquisitions, one in the month of March, the KSK Mahanadi, that has resulted in a significant increase in generation as well as the EBITDA margins. And in the month of April, the O2 acquisition. So we have to understand that, as you've asked, whether this is sustainable. Everything is these things we are going to see the benefit in the full year. And the wind assets which we have commissioned and the quarter one capacity addition, further commissioning which we have done, is going to see the benefit in quarter two and balance 6 months in the second half of the year. Mahanadi, 1800 megawatt, the way we have performed right after taking certain steps which we informed immediately after the acquisition, that we have identified significant areas of efficiency improvements, which we have started implementing immediately in the month of March after acquisition. And majority have been implemented in this quarter, and some are left, which will happen during the year. So these things also have helped us in the performance what we have got, and this is likely to sustain. In Bharat Utkal also, the second unit is going to be available for balance 9 months also. So these O2 power is also going to be available. So all these factors we feel that are going to remain, barring the wind pattern season, which is comparatively lesser in second half of the year. The rest all will continue to remain the same. And hydro, one thing I wanted to highlight, that has performed extremely well again, continuously for the second year. And our Greenfield Kutehr steel hydro plant is the first unit of 80 megawatt has got synchronized today, and maybe it will get the COD maybe in 1 day or 2 days, and balance 2 units also of 80 megawatt each are going to be operational, and COD will be there maybe in next 4 to 5 days. So we are certain that this 240 megawatt of hydro greenfield project available during the peak monsoon season is going to contribute also in terms of the EBITDA and margins in Q2, which this plant was not present in Q1. So we feel that the performance which has been delivered, we feel that we will be in a position to sustain the levels.
Right, so sustenance is going to be key from here on. Mr. Mahindra, what are the timelines that you're looking at with regards to commissioning of the new projects, particularly solar, the battery storage project in Karnataka, and the FDRE project with regards to SECI, because that is what everyone's eyeing in terms of the additions as well that will aid the numbers?
Yeah, these are part of our 10 gigawatt of PPA projects which are there in hand. The work on ground under construction projects. These have a timelines of 18 months, and we will be executing within the timelines of these 18 months in which we have to execute. We are absolutely confident because this 100 megawatt of solar plus battery energy storage of 100 megawatt hour in Karnataka, which we have signed. The land is provided by the state, the connectivity is provided by the state. So we don't see at all any challenge, and we are confident that within the timeline, we will be commissioning this project also.
Okay. The other aspect we need to consider is with regards to the PLFs. So how have they panned out for thermal, hydro and the renewable assets in the first quarter of FY26? And do you have any plans with regards to optimizing them further?
See, our PLF, actual PLF, if we talk of, stood at 76% in Q1. But we have to remember that the Mahanadi plant, wherein out of 1800 megawatt, close to about 1700 megawatt is tied up under long term. This plant, the availability of the plant is essential to recover the full fixed cost, and the plant availability has been significantly higher at 98%. So we are getting full, even if there is a back down because of the seasonal or demand impact from the buyer side, especially in the state of Uttar Pradesh, there is a back down. So that resulted in lower PLF, but there is no impact to us in terms of our realization and returns because our plant was available. This is as a part of the PPA conditions, it is there. And in terms of wind, of course, the generation has been significantly higher as compared to last year. Our wind generation PLFs are significantly higher. Two reasons. One is, of course, as we all know, that this year the wind speed is comparatively better what it was in last year Q1. And this year, as I said a few minutes earlier, that second half, we have added lot of capacity, fresh capacity with latest technology and best of the machines. Last year, our portfolio of Maitra assets, which are old assets, smaller machines which generate less CUF, the percentage of that portfolio was higher. But now this year, our percentage of the more efficient machines has increased and will continue to increase, which has also resulted in giving us the benefit of higher generation because of the higher CUF, PLF.
So PLFs have been lower, but not impacting business from here on. So if you have to look at the first quarter, Mr. Mahindra, do you think it's pretty much on track with regards to meeting your FY26 guidance? Or do you think you'll be able to outpace that number as well, taking into consideration the kind of growth that you've already seen?
See, as I told that very difficult to give exactly that as on the basis of Q1. But if we see quarter-on-quarter performance of our portfolio, last year, if you see, normally Q2 is the best quarter for us because of the hydro portfolio, and with new plant also getting commissioned in next 4 or 5 days, COD happening. So that is where Q2. So we maintain that there will be a similar kind of trend in terms of EBITDA and margins will continue. And based on our quarter one performance, it can be seen that how the outlook is going to be in the coming quarters based on the previous trends, and also giving the due weightage to the KSK Mahanadi, which is 100% tied up, 90% tied up, and also the Utkal plant. So these are the things. Forward guidance normally we don't give, but yes, as I said earlier, we are quite confident that what we have demonstrated in quarter one in terms of our earnings, we don't see any reason that will not continue to demonstrate the same in a similar way going forward also in the current year.
Right. And very lastly, Mr. Mahindra, we have the Supreme Court, which has actually ruled in favor of Himachal in the power dispute with JSW Hydro Energy. Any update on that you would want to give us?
See, the thing is that, again, when we made the representation in the High Court, we have to remember that we have acquired this asset in 2015, which when it was a running plant, operational plant, and there was an implementation agreement which was signed by the erstwhile promoter with the state government of giving incremental power from 13th year to the state. Which when we saw the CERC, which ultimately that principle says that it is to be capped at 12%. When we approached the court, the High Court ruled in our favor that it is to be capped at 12%, and then the state went to Supreme Court. So again, the order has come that it is to be 18%. Implementation agreement prevails over the PP and the CERC ruling. So we have started supplying the additional 6% from the day the order came from next day onwards. So that is the only impact. This is a minor impact because whatever the power which we had to give 6%, that will continue like that. We'll have to give.
Got it. So I think that additional power is what you're giving, but it's a minimalistic impact that you're seeing. Thank you, Mr. Mahindra, so much for joining us on the show and sharing your views as well. So that's the management of JSW Energy. The stock not really doing much. In fact, it's cooled off from where it opened up right now, seeing cuts of around 0.2%. And this is in spite of a strong set of numbers that have been reported and the guidance also being absolutely strong.
Yeah, maybe the valuation's playing poof here. But yeah, Hiral, thanks for taking us through that conversation. That's JSW Energy and Hiral Dadia in conversation with the management. We need to slip it to a break, but as we do that, just take a note of the new kid on the block, Shanti Gold. The 360 crore IPO was subscribed over 80 times, and these days, that's what it takes to have about a 15 to 20% premium on listings. So keep an eye out for Shanti Gold during the course of the day. But we have to go into a break. Come back with more.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
Welcome back. PNB Housing in focus. Its Managing Director and CEO Girish Kousgi has announced his resignation effective October 28, 2025. Now, the reason that stock is 15% down is because it was not really expected. Harsh is joining in with all the details.
Well, yes, Girish Kousgi has been driving, in fact, all of the guidance as well as everything with regard to operational performance of PNB Housing. And it's impressed, frankly, from a numbers standpoint. It's looking like a much more stable franchise under Girish Kousgi. He has resigned, of course, yesterday. It's going to be effective 28th October. The board themselves have clarified that they're going to find someone on the basis of merit. But of course, more awaited in terms of a name. But this is, of course, a big blow because this was expected to be someone, or Mr. Kousgi is expected to be someone who's going to be driving the long-term strategy for PNB Housing. He's given guidance for the next 1 year, 2 years ahead, the last time when we spoke as well. So, of course, the street not exactly getting comfort from the fact that there's going to be a replacement coming in. Of course, names awaited, but that reaction on the street is evident and clear in terms of what this means.
Okay. All right. Thank you for that. PNB Housing actually put in a note as well saying that he has left to pursue career aspirations outside the organization, but will work with the board and the senior management to ensure a smooth transition during this period. I mean, especially in BFSI companies, the street doesn't like a change of the leader at the helm, and that's probably what's playing out with PNB Housing. Well, Zomato is zoomed, aided by a dominant quick commerce arm Blinkit. However, Swiggy has shown strength in food delivery growth, but is held back by wider losses and a smaller cash pile. But who leads the big cook-off? Mahima here with a deep dive.
Right, so I'll start with first how Q1 earnings panned out for both of these companies, because overall we saw the stock of Eternal Zoom post its earnings, and this was because revenue did beat the estimates. It was better than what the street was expecting, and losses narrowed sequentially in the quick commerce business, and that is something the street cheered. But in terms of Swiggy, revenue was better than what the street was expecting, but losses in quick commerce are still at very high numbers, and they widened both QOQ, that is sequentially, as well as year-on-year basis. In terms of how food delivery and quick commerce have stacked up for both of these, let's take a look at first food delivery metrics. In terms of the gross order value, Zomato stands at a better number at 10,769 crore. That is better than where Swiggy stands at around 8,000 odd crores. But in terms of overall gross order value growth, if we see basis year-on-year percentage, Swiggy has seen a better growth of around 19 odd % versus that of 16% for Zomato. Take rates are also higher for Swiggy, overall 25.7% there, and around 24.7% for Zomato. In terms of monthly transacting users, of course Zomato has a higher base, but the monthly transacting users for Zomato has been declining, but for Swiggy it's been increasing. So overall, in terms of food delivery business revenue metrics also, Swiggy has seen a better growth as compared to where Zomato stands. In terms of quick commerce business, Eternal is a clear winner here. Blinkit has done better than Instamart. This is despite of the fact that Instamart has introduced Max Saver this particular quarter. The gross order value for Blinkit is way higher, more than double when it comes to Instamart. It's at 11,821 odd crores and 5,600 odd crores for Swiggy. The gross order value growth for Blinkit has also been better than Instamart, because that's at 25% and 21% for Instamart. Take rates are also better when it comes to Blinkit at 20% versus 15% in Swiggy Instamart. And of course, in terms of monthly transacting users though, because Swiggy is an integrated app, they have around 11 million odd monthly transacting users versus that of 7.6 million when it comes to Blinkit. Next, in terms of how cash balance stacks up for both of these, well, Zomato clearly wins this game because 18,800 odd crores is the cash pile at which they are sitting on right now versus that of 5,300 odd crores for Swiggy. But in the con call, management has gone out and said that now they will cautiously, add dark stores to their overall portfolio. So that should help aid the overall cash balance as well. In terms of dark store guidance, Blinkit has 2,000 odd dark store guidance that they've given. By the end of 2025, they'll be completing that, and they've said that they are on track to complete this guidance that they've given. For Swiggy Instamart, dark stores have now peaked, is what the management has said. But beyond that, Zomato has said that they see visibility of 3,000 dark stores once they complete this target of 2,000 odd dark stores. And Swiggy Instamart will add dark stores now only on demand and need basis, considering that they've already said that the overall addition has peaked out. Lastly, in terms of what brokerages are saying, Macquarie is the only brokerage, in fact, that is not bullish on these internet counters. Both Swiggy as well as Zomato, they have underperformed rating, and for Zomato they have a target price of 150 and 260 is the target price for Swiggy, whereas Jefferies and Citi have buy ratings for both of these counters. Jefferies have in fact upgraded the target price for Swiggy to around 500, and Jefferies has a target price of 400 when it comes to Zomato. Lastly, in terms of how overall analyst recommendations stack up for them in terms of where Bloomberg estimates stand, 28 buy calls for Zomato and 4 sell calls, 19 buy calls, 3 hold calls and 3 sell calls for Swiggy, but return potential for Zomato is higher than where Swiggy stands, around at 31.5% versus that of 11.1%. This is despite of the kind of rally that we've seen in Eternal in the past few odd days. So this is the overall view and how these two have stacked up against each other in Q1 FY26.
Mahima, stay on with us because it's a busy day in your sector, and HUL is trading strong for a second day, posting a strong quarter. More details coming in on the conference call, which has boosted it, and a lot of brokerage notes as well.
Right, so I think overall the kind of commentary that is being given by the management is very bullish when it comes to HUL, and that is one of the reasons as to why brokerages have also turned bullish on the counter, and we're seeing that kind of uptick in the counter, 3% as we speak. In terms of what brokerages are penciling in, UBS has gone out and hiked the target price for HUL and maintained buy to around 3,000. They've said that growth turnaround is in the making for the counter, and better than expected volume growth trends are posing for a better outlook. Risk reward is turning favorable for HUL is what they're saying. Macquarie again has maintained outperform with a target price of 2,750. They've liked broad-based recovery in volume, strong growth expected in Oziva and Minimalist is what they're penciling in the beauty and wellness space. They like constructive macro commentary also given by the management, but they're concerned about decline in nutrition's drink portfolio as well as the hygiene soap segment. Lastly, JP Morgan again maintains overweight with a target price of 2,800. They're saying that reassuring narrative and improving revenue growth has been seen this quarter. Volume growth should be gathering a better pace going forward and in the coming quarters, and gross margins should look up ideally going forward. Lastly, market share trends also seem to be right on track and expect further outperformance supported by improving revenue growth trajectory. So this is the overall view as to how con call has fared for HUL and why brokerages are constructive when it comes to this counter.
Okay. Thanks a lot for that, Mahima. So that's consumption, and consumption and autos have been at the forefront. Well, not exactly the intersection of both, but intersection of quick commerce and consumption, and lots more has been the newsmaker this week. All right, now we turn our focus to our exclusive conversation with Dinesh Thakkar, Chairman and Managing Director of Angel One. Now, well, my colleague who went and spoke to him, and incidentally, by the way, also drove a Tesla.
I'll tell you the concept of the conversation. So, Tesla coming into India at that moment, Neeraj, if you recall the way we covered it as well, was not because there was one more car coming in. It was a moment that talked about India even opening up. It's been 10 years since people have been waiting for a Tesla to come. Remember the guys who paid $1,000 to book it, exactly in 2014. So that was one. Are we in that consumption phase as an economy to absorb a Tesla with 110% duty on it? What's happening with the consumption space? What's happening with markets? What's happening in the economy? And then I'm speaking to someone who loves cars in a Tesla. So that's the idea. Take a look at a bit of that conversation. Tesla's India's entry has been 10 years in the making, and I'm sure by now you would have seen a lot of reviews on the car, its performance, etc. In this very special show, we're talking about the Tesla, we're talking about the economics of India that allows for a Tesla right now, the demand it could be seen, and why so much excitement about the EV space. But I'm not going to do this by myself. To help me really take you through Teslanomics, I have invited along on this shoot Mr. Dinesh Thakkar. All of you know him, of course, as the force behind Angel One, a veteran market voice. But I don't know how many of you know that he's a complete auto enthusiast and has a garage, which I think is everyone's envy. Thank you so much, Mr. Thakkar, for joining us.
Thank you very much. Thank you very much for this opportunity. As I also am a car enthusiast, so definitely I would really be very excited to drive this car with you and plus engage in markets and plus some talks on my car garage.
Yeah. So by the way, I don't know if you guys know, but he has McLarens, Porsches, and believes in performance over luxury. I think that is one thing that you're going to be looking for. Is this about style and how much of it is about performance?
See, for Tesla, I would say I would look at kind of like innovation, what they have brought in. Apart from being EV, I think this company innovates a lot. And we also being into a field where we believe innovation is going to create deep penetration. So that is a common element what I am looking at Tesla. Tesla is nothing but a computer on wheels. So that way I would say it's more than a car.
You know, the biggest test, at least for any car company and even for a Tesla, is grappling with Mumbai roads. So let's see how that goes. All right, we're starting off our drive, and as has been explained to us, first of all, are you excited?
Yeah, definitely. Very excited.
I promise to drive as well as I can. Thank you. Thank you
I fully trust you.
So the way this works is pretty interesting. So I have to, everything is on this screen. There's pretty much nothing here in the center of the car. It's very different from what you see. Nothing around the steering wheel. Everything is from the screen. Now, that can be, I think, excellent if once you get used to it. Perhaps right in the beginning, it'll take some getting used to, because that's not how other cars usually work. So here we go. All right. And we're off. So you know what's exciting about this, Dinesh? I feel that the way they've made this so intuitive. I'm going to start the conversation talking a bit about Tesla, and the whole concept of this conversation, of course, with Dinesh Thakkar, has been to talk about Teslanomics. Has Tesla's time come in India? We've been waiting for this for at least a decade now. By the time it has come, there are other competitors, but Tesla still has that brand value. So some of your thoughts on that. First, Mr. Thakkar, considering that you are truly a car lover and you believe in performance over luxury.
See, Tamana, what I see is that Tesla is a company who really innovated and built all their cars from grassroots level as an EV. So technology what they are using is purely thought based on how EV should function, how EV should look like. So you look at all the functions like over here, everything is on the dashboard, which unlike EVs that we see, which are converts from internal combustion engine to this, they are more luxurious car where all the software is fitted. This I am feeling as if it is a computer on wheels. So everything is like so well kind of like designed and so user friendly, and that is really, this is first time I'm sitting as close to steering wheel as I can sit, so I can see all these functions, and that excites me.
Are you pointing out to the fact that I've pulled my seat really up front so that my legs can reach? So you know, when we're talking about Teslanomics, and we spoke a fair bit about the car, I want to link it to and get your view on this consumption boom in India. This is something which I think even market has been betting on since budget this year, because these tax cuts came in. The premiumization theme has been there in Indian markets, in the economy for quite some time. How do you see this product and this launch in that bigger picture? Just as an example, there's a real estate developer who's come into Mumbai, for the second time, a Delhi-based developer who's starting apartments at 6.5 crores. So those are the same guys who are going to come out and buy cars like this, isn't it?
Yeah. I think India, in terms of being aspirational and being a big consumption story, still, I think the story has just begun. If you look at current, our per capita income would be average around US 2,800 something, and we have seen big kind of a consumption story play out when per capita income goes to 5,000 and 10,000, which is just maybe 5 to 10 years away. So I feel that brands like this who are thinking about being in India and capture this big consumption story, they have to look at next 25 years. They have to look at Viksit Bharat year 2047. And if you look at this category of HNI, what we call, or emerging HNI, who are earning between 50 lakh to 1 crore, that population is growing at the rate of 14 to 15%. So that is the fastest growth across the globe. And brands like Tesla, who are really trustworthy, who can really bank big on this consumption story, they should take serious view about next 10, 20 years rather than taking kind of a short-term view. So I believe this consumption story and aspirational story of India has played out well, and it is a beginning, I would say.
Yeah. Just
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and Mahima Vajrajani is back in the studio. Yesterday she was at the HUL press conference, as you know, and you watched her live. It was a good conference. The stock is up and about today as well.
Absolutely good commentary, and brokerages have also liked the commentary, liked the performance and high target prices, and hence the stock is up, probably to the top Nifty gainer today.
Top Nifty gainer. Let's pull up the Nifty 50 and see where it's at. More or less flat actually. In fact, completely flat, completely unchanged, recovered from the low point of the day. Take a look at the constituents of the Nifty 50 and see what is moving. In fact, if we can pull up the key contributors, Reliance Industries contributing about 19 points, not too much. It was one of the drags in trade yesterday. Sun Pharmaceuticals on the other end of the spectrum is losing ground, and quite a bit of it, to say the very least. HUL, HDFC Bank, ITC are doing particularly well. Pull up HUL and the intraday chart. I wonder if it's holding out with the gains that it had today. Yesterday, 3+% gains. It's off the high point of the day, but another 2.2%. And investors in HUL are finally seeing the benefits of having quite a bit of patience with this particular counter. Let's talk about the broader markets as well and see where they are at. The broader markets are a little bit on the lower end, but they're off the low point of the day, 0.1% or 0.2% for the mid-cap index, about that same mark for the small cap index as well. And the market breadth, I would hazard a guess to say that it's closed a little bit, and therefore it's even Stevens at this point. Quite a bit of chop and churn as we speak. Now let's very quickly go across to the questions today, but before we do, let me get our experts on board. We've got Gaurav Bisa of Incred Equities and Samir Dalal of Natwar Lal and Sons Stockbrokers. I want to break from the normal. Gentlemen, good morning and happy Friday to both of you. Samir, I want to talk about the primary market action, and you had Shanti Gold listing today. 15% premium is where it listed and 18% up where I saw it last. Did you have a buy call? It was oversubscribed multifold. Would you go out and buy right now? It's up 17%.
Yeah, so it was a very oversubscribed issue, but I mean, we didn't actively cover that one, so I don't want to comment on it. But right now, the IPO market is extremely hot, and that's a dangerous situation to be in.
Gaurav, morning. I'm just wondering how you would trade in this kind of a market with the kind of uncertainty swirling globally. One day there is a tariff of 25%. The next morning you find out that it's a bit of a reprieve, and the 7th of August is when it kicks in. So you've got a 1 week breather for the two teams to negotiate, to hammer it out and maybe come to a lower tariff number. In the midst of all of that, you have a lot of shorts that are building in the system by foreign institutions. They've rolled that over. 9 out of 10 positions by foreign institutions are short. How do you trade in this kind of a market?
Good morning to you and your team, as well as the viewers. It's just a very interesting question and very important question also. And it's just like recognizing the elephant in the room. It is actually very difficult. So to put things in perspective, if you check about yesterday's move, we had a 400, 500 points total move coming in Nifty index. That's an extreme volatility that we are talking about. Trading indices, trading stocks has become difficult because even if Nifty were to fall 3, 4, 5 days, one can initiate a short position either on the index or on the stocks. But the fact is that you have such a tremendous volatility that your stop losses get triggered on the both sides, whether you're long or short. So the way we are doing is any stock that is looking very strong on the larger time frame. We are trying to identify those stocks and trying to get triggers on a shorter time frame, because if the overall trend, a larger trend remains positive, and you have triggers on the shorter time frame, the chances of making money becomes slightly more. So that is the only strategy that we are implying and using at this point in time. But to be honest, it's actually very difficult. The volatility part is what is more concerning rather than the fall or the rise in the index.
Okay, let's jump straight into the first few questions that we have. And by the way, I haven't pointed that out because I guess a lot of you know this already. The number on the top of the screen is where you can message us. The number on the bottom of the screen is where you can call us. And the first question we're taking is from Soumyadeep Chaudhary, who's writing in from Asansol in West Bengal. He's got BHEL. 318 is the buy price. 250 is the number of shares he's holding. He's wondering whether he can hold for the next 1 to 2 years and what are the kind of levels that he might see if he does hold. Samir, on the fundamentals, would you hold on to this one?
So honestly, no, I wouldn't. I find valuations extremely expensive. I understand they've got into a bit of a defense things, and the power sector is also seeing a lot of light of day. But for them to, even after if they scale up their profitability by, I'm saying 100% this year, they'd still be trading at extremely expensive valuations, right? So for me, at this point of time, I would not be looking at BHEL. There are lots of stocks in the power sector which are trading at better valuations, which also have the growth, especially in the renewable side. I think that makes a better opportunity to make better returns. So BHEL is not a stock I would be investing. If he has it, I would say, take your money off the table and buy into something else.
Okay, so that's with regards to where BHEL stands. The next question is from Jigar. He wants to check on PNB Housing. He's holding at the levels of 990 and holding 50 odd shares. Wants to know that whether he can continue to hold from a longer term perspective, because 2 to 3 years was his time horizon. He's saying the CEO new resignation has triggered the fall today, but what should be the course of action for this particular account? Samir, we were addressing this stock earlier also, and the fact that the street has not taken this positively is because the management who has quit has already given guidance for the next 2 odd years, and that's something that the street is not liking. So the change in management might kind of hamper the guidance for the company as well. What would you recommend? Should a person holding this counter continue to hold?
Yeah, so if you're holding on to it, you can continue to hold because we still believe that the entire housing finance space has a lot of opportunity. India has a long way to grow for, in the entire real estate development and housing for all and all of. So how PNB Housing will also be able to keep its market share, I don't think that is a major issue. The problem in PNB is only that if I were to, there's always a basket of stocks that you have to select from. So would PNB be our top pick in the space? Probably not. You can continue to hold because I think they will also do well. But if you really want to invest for, where valuation comforts are there, the growth is good. There are 2 stocks in housing finance we've been harping on your channel also for quite some time. One is LIC Housing Finance trading at 1-time book, and the second is Sammaan Capital trading at 0.5 times book. both of these have valuation re-rating on their side as well as growth. LIC Housing is the largest player in the space. So for me, I would much rather be in these two than PNB, but you can hold PNB. There's no problem with PNB at all as such. And yes, change of management is always a concern because you don't know what the new management is going to do. But let's put it that whoever comes in place of the current person is not going to want to degrow the book or cause problem to the book. He's also interested in growing the book. So maybe a guidance change could come, or the business model slight tweaks could come where he may take a little bit more of risk if he wants to grow a little at a the profitability better by taking some amount of real estate lending rather than only pure housing finance. So we need to see what happens, but it's not necessarily a negative. I mean, we got to see who comes in place and what his strategy is.
All right, so that's the view on PNB Housing, down 16.5%. As you know, this is on account of the exit from the Chief Executive Officer. This was not something that the street was anticipating. Dheeraj is calling us from Hyderabad. Dheeraj, very good morning to you. How can we help you today?
Sir, good morning. My query is regarding ABB, sir.
Okay.
I purchased 30 shares at 5530, sir.
Okay.
So, should I add more shares to this at current level? Or I have Maruti Suzuki shares also, should I add those, sir?
Okay.
I want Samil Daral sir's view, sir.
Got it. And so therefore, I'm assuming that you are looking for the long term, yes?
For the next 2 to 3 months, sir.
Yeah, okay. So then I can't push Samir to give you a view for that short a time frame. Samir, I'm guessing that you will look at least 1 year holding, right? And so from that perspective, ABB or Maruti Suzuki, where do you see the better prospects?
So honestly, neither of them, to be very honest, from a 3-month perspective, right? ABB is not cheap on valuation. I do believe the long term is phenomenal. So if you have a 2-year holding, please hold on to ABB. I think the stock will do extremely well. The kind of development that we are having both in the railway space and the power space and all of that is going to ensure that ABB gets its fair share of orders, growth, electric vehicles, all of that. They cater to small sections of that. So the growth for them is going to be great, but it's not going to happen in 3 months' time. In 3 months with valuations at about over 50 times, it's difficult for them to, to assume that the stock will keep moving up. When it comes to Maruti, again, Maruti, 3 months, technical would be a better bet, but what I can tell you on the fundamentals is that, look, competition is constantly going to increase. I think Maruti has been very late when it comes to the entrance of electric vehicles. Of course, they have the ability to catch up. I'm not denying that fact. But look, electrification or hybrid or anything, whatever the new norm is, I think is going to take steam and Maruti is going to lose out a bit. Plus, what it does is it makes Maruti the competitive advantage go away, because at the end of the day, the battery is something that they have to procure from outside and everyone is going to get the same kind of costing that happens. So, the cost advantage that Maruti had is going to go. They're working on very, very high margins for a company that is selling low-end product cars. So for me, I think Maruti, a lot of the positives are priced in. From a longer-term perspective also, I wouldn't like to invest in a Maruti. I think with competition increasing, it's a difficult thing. But I would request you to take the technical call for a 3 month, but from 3 months, I don't think any of them have you can play the momentum, but it's very difficult to say. But from a longer term, ABB is good.
So that's the view with regards to where ABB stands and of course Maruti Suzuki as well. Samir, Gaurav, we'll have to ask you to wait for a tad bit because we're shifting focus to Shanti Gold International. Stellar listing on the bourses today, up 17% as we speak, and we're joined by Sriram Iyengar, CFO of Shanti Gold International, joining us now. Mr. Iyengar, heartiest congratulations to you on the stellar listing. My first question to you is that you've already given us the kind of use of proceeds that you're going to do via this IPO, but just want to get a sense, because you're the second player in the listed space who's going to do B2B jewelry. Just want to understand how is the competition looking like, considering everything into place, right? There's gold volatility, there's also competition that's coming in from the listed players, which is well established as well. What's the sense there and how are you viewing it?
Good morning. Thank you for having me on this show. We are happy, we are thrilled, and I can only say it's not the capital raised but the confidence earned of the investors. coming to your question or to give the sense of this company and all, madam, we are very nicely positioned ourselves to scale up quickly. So that talks about the competition part. We have integrated manufacturing facility. We can quickly scale up, and if you can see, there is still we are eyeing for that unorganized share, which is still, there is a big vacuum to be filled in, and so we are eyeing for from that perspective. Long term, there is a big growth. I think we are one of the first in this company to get listed in the manufacturing space. That gives us a high leverage to do well in future. So that's been our USP. So we have integrated manufacturing facility, a team of designers, team of experienced entrepreneurs and professionals. So we are banking on all those things to have a sustained growth in the long term.
Mr. Anger, also wanted to understand that you're going to allocate around 46 odd crores to your capex. I wanted to understand what is the kind of capex pipeline that you're seeing right now. What is the capacity utilizations that you're at right now, and then how does that improve going forward?
Yes, ma'am. As far as the capex is concerned, we have invested in Jaipur. That is for setting up a large manufacturing facility, and that is going to scale up the entire level of our operations. The capex is earmarked 46 crore to expand that manufacturing facility. Yes, that is very much in the plan. As far as the capacity utilization is concerned, currently we are at 58%. As the market grows, as the volume grows, we are well positioned ourselves to scale it up. So my USP has been to just to go for a bigger manufacturing capacity. That's why I've been telling that we are just positioned in such a way that we can scale up in quick time. So that's why we are, from the infrastructure point of view, from the manufacturing capacity point of view, we are well positioned, and you will see the results in the years to come.
Shriram, hi. Thanks so much for taking the time. I'm just wondering about the mix right now, because in the jewelry space in India, we're all talking about the advent of studded jewelry, and everybody seems to be moving towards that. When it comes to your own mix and what you cater to, what is the mix like in terms of studded and traditional, and where are the margins better for you?
See, our margins, we are ourselves in the studded segment only. It's a very niche segment. It gives that, it fulfills the aspirations of the people, so that we are very niche segment. And as far as the margins are concerned, we are the leader in bridal jewelry. We get very good margins. In India, it's all about the weddings, festivals and all. So the margins largely comes from the bridal wear, and we are one of the largest manufacturer of the bridal jewelry. So that's been the mix. It's a very niche segment. Yes, it also caters to that aspirational people of the aspirational needs of the people who want that status symbol, who want that wedding ceremony and all. So we are right there for them, for this kind of consumers.
It's an interesting point, isn't it? And a lot of the traditional jewelers are also increasingly deviating from that traditional style of making jewelry. You would know better.
Yeah.
You're in the market, aren't you?
Yeah, absolutely. And it's interesting because gold prices are going up quite significantly. So it's the studded jewelry that's being in focus, and plus lightweight jewelry, because people are not able to afford the jewelry the way they used to afford earlier, right?
I do want to ask Shriram what he thinks about, and Shriram, I'm just trying to understand, for you as a manufacturer, is it right to say that the margins on studded jewelry generally tends to be better than traditional?
I won't say in terms of studded and all. What I was saying is my product mix. I was focusing on that bridal jewelry, for which there is a huge demand for our products. Yes, wherever we are showcased our jewelry, it's been huge demand. So I am talking about that specific bridal segment of the product mix where we are getting margins. But that apart, yes, we in a B2B, we earn a very good margin, very healthy margin. And as I've been always telling, our designs has been our USP. So that commands us, that gives us the ability to pass on the price on to the customer. So that's been the USP, that design plays a very key role.
Mr. Anger, are you also into lab-grown diamonds? And if not, are you planning to foray into that?
No, ma'am, not at all. As of now, we are not getting into lab-grown diamonds. So in future, we can see, but not at this stage.
Okay, all right. Mr. Anger, thank you so much, and all the best for your future. And thank you so much for taking our time and speaking with us at NDTV Profit.
We thank you to the investors.
All right, okay, so that was the management of Shanti Gold. Interesting company, stellar listing for sure that we've seen on the bourses today. Now, shifting focus back to the queries that you have, viewers. The next question is from Richie, who is writing us from Kerala and wants to accumulate REC at the current level. Has got the corpus of 1 lakh rupees right now and wants to know from a shorter term perspective if Richie can go ahead and buy something like an REC. Gaurav, I'll come to you on this one. What are the charts indicating?
So as far as the near term or the short term scenario is concerned, many of the stocks have seen a good correction. So as Samar pointed out in the previous talks that he had, that for long term perspective, many of these stocks might be looking good, but on a very immediate basis or near term basis, structures are not that good. One, if you see weekly charts for major part of 2025, we have seen time correction happening in REC. So you may not see too much of fall happening, but at the end of the day, if your portfolio does not perform, you may have some sense of frustration. Secondly, if you look at the weekly charts, it is trading below its 55 exponential moving average. So that again shows that the trend on a medium term basis is getting weaker. I'm not saying it will see a drastic fall from here, but the setup on the immediate basis does not look that good. So if somebody has a chance not to buy, I would say look for stocks that are seeing an upward reversal or witnessing a breakout, but avoid REC at this point in time.
REC is the view on the charts. Let's talk about MN Kumar's question. He's writing in from Guntur in Andhra Pradesh. He's bought 343 shares of Power Grid Corporation of India at a price of 238 rupees per share. What are the future prospects for the long term? He's in the green. Samir, does he hold on to this one?
I think he can comfortably hold on to this one. Look, like I discussed, the power sector is something that's going to see growth. So Power Grid is one of the largest players, the largest player which has these huge grid capacities, and they're going to keep scaling that up. Yes, they are fixed on a particular ROE, but as they keep expanding, the cash flows will keep improving, the profitability will keep going up, and I think the stock has more room on the upside from a longer term perspective. Decent dividends, decent margins and all of that. So I think one can hold on to this one.
Okay, so that's the view with regards to where Power Grid stands. The next question is from Krishna, who is writing us from Bengaluru. The question that he has on is Ganesh Housing Corporation. It seems to be a small company, but wants to know if he can continue to accumulate the counter or not. Gaurav, I'll come to you on this one for the charts. What are the charts indicating and what's the kind of support and resistance that you're seeing?
So we have seen a very strong and robust upside in the last 3-4 years. It's trading comfortably above its the 2008 highs. So structure remains positive. However, on a short term, there are some divergences that we are seeing at this point in time. If somebody wants to accumulate, he's already bought shares already, and if you want to accumulate more, I think the correct strategy is not the averaging part, but the pyramiding part, implying that once it crosses the critical threshold, you add more levels, because at the end of the day, your buying price would be lower than the current price. So in that perspective, I will say let it go above 960, 970. And you buy that point in time, because right now, again, as I said, it's seeing more of a time correction, and the moment it slips towards 870, 875, the pressure may augment. So right now is not the correct time to buy or accumulate more. He can hold on to his position. His overall setup remains positive, but I would not recommend adding fresh.
All right, let's pause a bit on those questions, because we've got a stock that is losing quite a considerable amount of ground. PNB Housing, we did speak about this. The stock is under pressure because Girish Kauski is set to leave the company after a 3-year stint as Managing Director and Chief Executive Officer. We're joined by Ashok Chandra, who's the Managing Director and Chief Executive Officer of Punjab National Bank, which is the primary shareholder, the primary stakeholder, promoter of the company PNB Housing. Mr. Chandra, thanks so much for taking the time. It seems this has taken the share market, the equity market by surprise, and shareholders seem to be concerned because this was not anticipated. What has precipitated this exit?
Yeah, first of all, let me clarify the position. He has not been sent on leave. That is the first part I will clarify. He has put up his paper yesterday, and because of the family reasons, he wanted to move to Bangalore. That is the only reason for which he has put up his paper. Nothing more than that we should read in that. And he has put up the paper in the NRC yesterday, and the board also they have discussed the PNB Housing, PNB HFL, and they have seized the matter now, and they are engaging the HR firm for finding out the new CEO for the company. More than that, nothing is there to read in this entire episode.
Got it. Mr. Chandra, it's also some concern that the street has is we've had a slew of private equity investors which had come in to the organization. PNB had taken a bit of a back seat as well with regard to running PNB Housing. Does that at all change in terms of status? Sorry, this is Harsh joining in. Does that at all change in terms of status? How should one look at PNB Housing, and how does PNB look at PNB Housing now? Give us that perspective.
No, this is one of the subsidiaries of PNB. We have 28% equity share in this company, and we have firm belief that company is doing well and will continue to do well. We don't have any concern about it, and that is the reason if you see our shareholding, we have not diluted even a single percentage share in this particular company for the last many years. And we are going to continue to hold our share in this particular company. So that should give comfort to other investors also. So
sir, there is no...
More than that, I don't see any challenge that in the particular company.
Got it. Sir, with regard to the concerns of the street, because Mr. Kausgi has been driving both the turnaround at PNB Housing as well as the strategy going forward as well. What changes from that perspective? Because his leadership was instrumental from that angle. What changes from that perspective? Give us your view.
See, the present MD who has put up his paper, he is there in this company for the last 2.5 years only. And yes, the company has done very well. He has contributed a lot to the growth and value creation for this particular company. But this company is there for a long time, and we have seen so many CEOs coming and they are contributing a lot. So already board of PNB HFL and the NRC, they will be looking for some good CEO. And let us wait and see that how the new appointment happens. And I think then we will talk about what is the strategy, what this company is going to do that. See, we as a promoter, and we do not interfere in any functioning day-to-day activity of the company. We always maintain the arm's length with this particular company. So we are one of the promoters, and we just, our board members are there from our side. They participate in all those discussions.
Mr. Chandra, I'm just speaking for your shareholders, or rather the other shareholders of PNB Housing.
Yes.
And the question mark, especially when you're talking about a financial company, is a vacuum that an exit from the corner office leaves because strategy and implementation of strategy on an ongoing basis becomes challenging. So how quickly do you anticipate that gulf is going to be filled? And would you consider internal candidates along with external candidates, or is it primarily external?
See, first of all, from the corporate governance point of view, it is not ideally correct for me to say anything what sort of things are going to happen, because there is a separate board, separate NRC is there, and they have seen the matter, and what I also understand from the my people who are there on the board, that the process has already been initiated. So let us see. And the company, what I understand, that the company has a good succession planning, and I think whatever the time gap is there in coming with the new CEO, I think the leadership team of PNB HFL, they will take care and they will take it forward.
Mr. Chandra, how comfortable are you with the guidances that have already been provided by PNB Housing? Do those at all change? Is there a risk of that, given this large exit and given that Mr. Kausgi was primarily responsible for giving out those guidances? How much can the company stick to that?
See, as of now, I don't see any challenge in whatever the commitment is there, because commitment comes from the company side. It is not only the MD is driving. I think the entire top leadership team of any company that also drives the company. So any strategy or any goal which the company would have set up, I think definitely the company top management team will drive that particular company. And by that time, I think definitely new CEO also will be in place. They are already, I think board and NRC have already started the process.
All right.
I think let us wait and see. I don't see much challenge or further to read more about this resignation.
Got it. Absolutely important having you clarify those things to us, Mr. Chandra. Thanks so much for taking the time. Pleasure having you. All right. I do want to toss it back to Sameer Dalal. Sameer, I know you've spoken about PNB Housing, but now that you've had the opportunity to listen to the promoter, 28% stake is what they have, and the fact that they're stipulating that they don't anticipate that there will be a diminishing of the targets or the strategy. Would you say that this provides an opportunity to double down if you're a current investor, or get in if you aren't?
So, look, if you're looking at PNB in isolation, yes, I think it's something you can take a further investment in, because at the end of the day, housing finance is probably one of the most secure forms of lending. Now, look, in a housing finance company, there are three primary kinds of loans that you can make. One is the retail loan, which is the end customer. Second is loan against property, which is, some business purposes, but you use the property as collateral. And the third is you lend to the developer loans. Now, what the new management that has to come in will decide what percentage of his loans he wants to lap, which have slightly higher yields, what percentage he wants to developer loans, which have the highest yield. That will determine the yield and the spreads that they can make. And based on that, sometimes what happens is there could be NPAs. Now, NPAs in LAP and in developer loans can be higher. So what we need to see per se is what the next strategy is going to be driven from. But like I told you earlier, I don't see anyone coming in and saying that, look, I want to not be able to grow at the rate that has been committed. Even the board that is there, a lot of these guidances are obviously put in front of the board before they're put out in the public. So the board is also going to ensure that the next person that comes in will be able to deliver what the board is also looking to get. So I don't see it as a major problem. In isolation, I would add on to PNB, but like I discussed, because there's a gambit of other stocks, is PNB our top pick in the space? No, it's not. But if you are solely interested in PNB, please go ahead and buy. There's no problems with that.
All right, so that's a comprehensive view on PNB Housing. By the way, a lot of action in the automotive space over the course of yesterday and today. There was a lot of action on the earnings front, but there's also auto sales data that has come through. Mahindra and Mahindra in focus on account of those sales data. And in fact, we have the management, Nalinikanth Golagunta, who is the Chief Executive Officer of the Automotive Division, speaking to my colleague Puneet. Listen in.
Hello and welcome back to NDTV Profit. We're now in conversation with the management of Mahindra and Mahindra on the back of the strong sales numbers for the month of July. We're now being joined by Mr. Nalinikanth Golagunta, the CEO of the Auto Division. Sir, thanks so much for joining in and a very good morning to you. Let me just start off with the number of growth, the 20% growth that you've shown in this particular month of July at a time where the industry has been struggling to grow even in low single digits. Specifically, what has led to this particular growth? Is it a combination of rural versus urban growth that you have, or is it also led by the consumer's preference for a Mahindra product at this point of time?
Yeah, firstly, thank you for having me on NDTV Profit. Glad to be on the show. So we delivered about 49,871 SUVs to our dealers, and that's, like you said, it's a growth of 20%. A lot of it is coming on the back of the strong portfolio that we have. As you know, we made 4 major launches last year. Started with the 3XO, we had the ROX and the 2 EVs, of course, in Q4. So all of these 4 are helping us in driving the momentum in our numbers overall. We've also done a couple of tweaks. We launched the RevX series within 3XO last month, which has given us some bump. And then we have started to deliver the mid-end pack for us in the EVs, which is our pack 2, which is in the SUV EV space as well. So that has helped as well. So overall, the portfolio for sure is driving momentum for us.
And just continuing with 3XO right now, because we've seen a very big competition happening in the compact SUV space, but you've been able to create a product which has been able to be accepted by customers as well as a new variant now. Are a lot of your buyers for the 3XO as well as now with the 3XO RevX is still new? A lot of them are first-time M&M customers, or are they customers that were M&M in the past before the whole change happened and now they're back for you? Is there any kind of color that you can give us on that aspect?
Yeah, absolutely. So Hard to put numbers behind it, but I'll give you just the anecdotal evidence overall. So it's a mix of both. We of course have traditional Mahindra customers coming back, upgrading from the 300 into the 3XO. We have seen that as well happening. But we are also seeing quite a few first-time buyers coming into it. And what is unique is in the past, we have seen most of these are upgraders who come from a hatch or they have a car and they're upgrading to an SUV. We're also starting to see first-time car buyers who come straight into the SUV category. That of course is driven by the fact that we have a very strong value proposition, both our MX range as well as the AX range within 3XO. So that is something which is new to the category, which is somebody who's not necessarily just upgrading from the previous vehicle, but really now going directly to an SUV.
And the aspect that the affordability criteria for a lot of smaller cars has also been difficult with the price increase and the safety features. In terms of that aspect, are you seeing that you're also seeing a lot of used car buyers earlier moving to this space?
Some of that is happening as well, and you brought up a very important point. Safety is no longer an option. I think it's table stakes in the automotive industry. So while there is an affordability as an equation, but a lot of people look at safety as non-negotiable at that level. So if it's a question of getting a vehicle which is in the 10 lakh range, you want to add a little bit more money, but you get a very safe car and a 5-star rated car, that's something people opt for. It's no longer something you compromise on. So that's helping us overall in the portfolio as well.
So the one other thing that we're seeing is that rural has been outperforming the urban segment at this particular point of time, and that largely seems to be led by sluggishness in the urban market in this particular time, rather than any kind of factors that are contributing to rural in a very big way. The growth has been happening. Are you also seeing that currently for Mahindra & Mahindra?
So for us, we've talked about it earlier as well, our contributions is equally strong in both urban and rural, not necessarily one versus the other. But having said that, rural is definitely showing strength on the back of the overall rural economy picking up, but also quite a bit of infrastructure spend going into that space as well from the government and schemes going in there. So that's helping us overall on the rural side. But urban has been strong for us and continues to be something which is giving us continued momentum.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. Viewers, we are sorry that we're having a curtailed session, and this is because earnings season is coming in thick and we have to take those interviews, but we'll be answering your queries now. So viewers who are tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen. We've got, of course, we're also joined by Rajesh Bhosle of Angel One joining us on this side of the show. Rajesh, very good morning to you. I'll take up Satish's question, who's writing us from Bengaluru. He's purchased 50 shares of Bharti Airtel at 1915 and wants to know if he can continue to hold for the next 6 odd months or not. Rajesh, I'll come to you on this one. Bharti Airtel, what are the charts indicating?
Yeah, hi, so good morning. So if we see a chart of Bharti Airtel, we have seen that in last 2 to 3 years, any dip towards 50 EMA or 89 EMA has been bought into, and currently the stock is placed around that level only. So somewhere around 1860, 1870, we see a strong support. So we are expecting a bounce back. On bounce back, previous high around 2040 to 2050 will now act as a first resistance. So in a short term can hold on to it with a stop loss of 1860.
Okay, Pakshal from Bellary in Karnataka is asking about a few options here in the EMS space. So Samir, relatively quick answer. I know that it's tough. Amber, Keynes, Dixon, PG. Would you pick any of these? Valuation comfort is a little difficult to find.
Yes, it is. So, Dixon is the only advantage when it comes to, even though the valuations are ridiculously expensive, is the kind of growth that they have lined up ahead of them, the kind of tie-ups that they have. corrections closer to 12,000 would be buying opportunities. But if you have to pick right now between the four, Dixon probably gives me the best safety kind of, given the growth that they have.
Okay.
Okay, we have the next question from Deepak, who is writing us from Chennai, and his question is on cement sector. He's saying he wants to park 1 lakh in that space and wants to know from the next 6 to 12 odd months which is the best counter to park his money. Rajesh, your view quickly on the charts, which of the cement counters are you liking?
So from a mid-cap space, we are liking Aramco Cement. The stock has given a long-term breakout after 4 years of consolidation. So we have a very strong view on Aramco Cement. We expect the stock to move towards the levels of 1400 levels. The second counter would be Grasim. Grasim is showing strength after a recent dip, and we are expecting Grasim to move towards the levels of 3100. So Grasim from the heavyweight and from mid-cap, we are bullish on Aramco Cement.
Okay. All right. Quick view on the next one. We've got Indegene. 452 is the buy price. Rajesh, quick view on this one. Would you book profits at this point?
So the stock has been volatile. Today we are seeing strong traction. Can hold on to it. Probably the next target would be 600. One can book profit around those levels.
Got it. All right. Let's focus back on earnings. And Rajesh, Samir, apologies, we're going to have to put a pause on the questions again. Maruti Suzuki down about 1.3%, reacting to earnings that came through during market hours yesterday. Puneet is joining us in studio. Puneet, what stood out to you and what are brokerages saying?
Well, largely the results are largely in line, and it was boosted by a very strong other income portion of almost 1,800 crores versus 900 crores last year. So we saw that impact. But majorly the comments of the management that the second half will see 2 new launches in the SUV space. One of them will be EVs, and the export market doing much better than the domestic one. I think those had some positive impact on the stock at the start of the day, and now just seeing some pullback. And we are still awaiting Maruti's July numbers to see if anything has changed. So that's one key aspect, but it's expected that the growth will largely be led by the company around the festive season, and the hopes of any kind of growth aspirations will largely be led by what happens in the second half as well. But that's largely the story of Maruti, is similar to what Hyundai and Tata is happening as well, that the sales is only quite been visible for someone like an M&M, and that's the key aspect. But we're now being joined by Mr. Rahul Bharti, the Executive Director at Maruti and Suzuki. Mr. Bharti, a very good morning to you, and thanks so much for joining in. Let me start off first with what's working, because it's export that has shown a 37% growth in this particular quarter. And while the domestic sales are down 6%, could you start off with reflecting what's actually working for you in the export market even before the electric vehicle has come into the picture?
So the impact of exports did come in our financial quarter, and exports has been a very fantastic story. And I strongly believe that India should increase its exports drastically and take a larger share of the global trade. This is also true because, when we look at Viksit Bharat, the domestic demand may not be sufficient to meet our ambitions for Viksit Bharat. Our exports grew by about 37.4% in the quarter, taking our market share in cars exported out of India to about 47% plus. And we want to, of course, take it further. Our EV exports will help it further. This, of course, helped to cushion the impact in the domestic market and get our volume growth to positive zone.
Well, the other one on exports was that you've given a target of roughly about 4 lakh export in this particular year. You did about 3.3 lakh last year. And you also mentioned that roughly 60 to 70,000 units will be the EV exports itself. So what's actually driven the growth in quarter one? Is it largely seasonal or some positive impact? And do you feel that you will be able to beat this number of 4 lakh comfortably, given that EVs have not even come yet?
Interesting question. So at least as a DNA, Maruti Suzuki always gives guidance or communicates targets which it is confident of achieving. So that seems to be playing out. and we have still our guidance for the whole year remains at 4 lakhs, and we hope that we'll exceed it. And yes, EVs will also help.
I think, Mr. Bharti, with EVs comes the rare earth question as well. Now, we've seen representation of SIAM to the government. We've seen the government also having a conversation with the Chinese Commerce Ministry. My question largely is that do you actually have access to Suzuki's supply chain of rare earth, and does that put you on a path of, if any, problems happen in the future for EV production?
You're broadly right that we need to look at alternate solutions and explore getting supplies of these parts from all over the world. So the solution that we are pursuing is, instead of importing the rare earth magnet, which is a very small part, a sub-assembly or a larger aggregate which will be manufactured or assembled in that country. That could be China, it could be elsewhere, and that will help us secure our supply chain so that our production is not affected. As of now, these efforts seem to be working well. If and when we have any material issue or doubt, we'll come back and share that our production seems to be affected. We'll share in case such a problem arises.
And Mr. Bharti, a very interesting trend that we're seeing is that rural markets have started to outperform the urban markets, and while the lines are starting to blur with semi-urban as well, have you seen that for Maruti Suzuki as well in this particular quarter?
That's true. And we have a huge network presence, so we are able to service the rural markets really well. Our service network has gone up to 5,500. So rural market is growing faster than urban, and the monsoon and the MSPs, we think, will support this further.
And Mr. Bharti, we've seen that within rural market as well, SUVs have actually started to pick up in terms of buyer preferences and premiumization trend. And you've largely been a small car player in the rural market segment. So has that change happened for you already, or do you expect that to happen over the next few quarters?
So given the the incomes and the prosperity that is coming to rural India, thanks to a lot of government schemes and thanks to the rural integration with the cities, thanks to roads built by the government, yes, the aspiration is increasing. With purchasing power increasing, we are seeing a very continuous kind of positive aspirations, and we are providing those products to the rural customer.
And Mr. Bharti, the other point is that margins have started to get impacted over the last couple of quarters. This quarter as well, it's 10.4. It's flat on a YOY basis. But have you seen that largely because of onboarding of some personnel in the Kharkhoda factory, which has just come on stream in February, and with the forecast being very, very poor for just 1 to 2% growth for the industry by CM, do you also see some concerns in protecting the margins for this year?
You're right. Kharkhoda has some initial expenses, which should, over a period of time, get ironed out. There is an element of about 30 basis points depreciation without utilization. So over a period of time, that should also go away as volumes come. And we had this quarter, our overall in Q1, our margins, operational margins, declined by 40 basis points. It was a result of several factors, both positive and negative. So we had adverse commodity and forex of about 40 basis points each. We had lower volumes and therefore lower operating leverage impact of about 60 basis points. On the other side, on positives, we had a favorable mix of 30 basis points, lower advertisement spend of 60 basis points. There was a net 40 basis points fall in sequential terms. And going forward, we'll have to watch commodities, particularly steel. Forex we'll have to watch. And the biggest thing that makes a difference is the volume and operating leverage.
And Mr. Bharti, you also had a very interesting update that the Memorandum of Association has actually been amended in this quarter, and you've added fleet as a segment now in terms of mobility. Could you just give us some more perspective on this amendment and what it means for Maruti Suzuki?
Sure. So we have amended our articles of association subject to shareholder approval in our AGM. The idea is to keep flexibility with us because the definition of mobility is increasing now. And as a market leader, we have to think of the larger horizon of the larger mobility ecosystem, which it's not just about UAVs or drones, it's about fleet or operating ecosystem for EVs. It's about vehicle leasing, it's about powertrains, clean energy like hydrogen or compressed biogas and the value chain of that. It's not a business plan. I want to be very clear about it, but we want to keep flexibility on our side and we want to keep thinking how can we expand our horizons in the future.
Well, Mr. Bharti, thanks so much for joining in, giving us perspective for Maruti Suzuki as well as for the industry. We look forward to our next conversation, but thank you for joining us today. And that's largely Maruti Suzuki, Alex, because we've seen some underperformance compared to Mahindra & Mahindra in this particular quarter, and that seems to be the trend. But I think with EV launches, we could see some more, some more good points coming in for shareholders going forward.
Yeah, some closing of the gap. Thanks so much for joining in on this conversation and for that conversation with Maruti Suzuki. Unfortunately, we've had to curtail today's session, and I appreciate the patience that you've shown viewers. We'll be back on Monday to take more of your questions. On that note, from Mahima and myself and the team that put the show together, thank you so much for watching. Up next is Know Your Company, and this is NDTV Profit.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Varsha Chandani, and of course, no guesses, likely a pharma company, right? But we've had a good set of numbers coming in from Dr. Lal. Would you say that, Varsha?
Yeah.
Yes, and therefore, you'd want to know as to whether after the entire normalization in terms of numbers post-COVID, whether pathology labs are really one way to play pharma and domestic pharma, given that there is exposure coming in from global, which is coming in through tariffs. So, therefore, this conversation becomes relevant. And we'll start off by understanding what I want to know and why Dr. Lal PathLabs. One is volume growth sustainability. Now, Q1 was a good quarter where volume growth is concerned, and want to know whether that can sustain all through FY26 or not. Really, that's going to be the one key question which we'll want answers to. The second one is with regard to margins and growth guidance. The gross margins have improved and improved quite well. And that is reflecting on the EBITDA margin as well, Varsha. The guidance seems to be 27%, but they've done 28% in terms of EBITDA, both in FY25 as well as in Q1. So that's impressive. Whether that can sustain, and therefore what's the guidance like? They've guided for, I think, 11% top line growth for FY26. So whether that changes at all given volumes. So we'll talk about all of that. The third piece is with regard to radiology. Now, is this going to be the new growth lever to kick through when it comes to a Dr. Lal? It's synergistic with its business, and therefore could this be one of those pillars on which it builds on and further creates efficiencies within its business. That's what I'd want to know. Radiology, is that the new lever? And now then there's the other lever of Suburban as well. The acquisition of Suburban has left plenty on the table in terms of room for operational efficiency to play through. Timing of that has been a bit iffy from the management. I'd want to know whether there is something in terms of timing that they can give us. Swasthfit is the other one. Extremely strong set of numbers coming in, driven by Swasthfit. The margins also of Swasthfit have been really, really impressive. Can that kind of a growth clip continue? And then you have pricing. Pricing is the other lever where there's been a bit of a drag where Dr. Reddy's is concerned. Dr. Lal is concerned. And therefore, whether pricing improvement can actually happen, and is that on the anvil, and that will obviously impact top line, is what I'd want to know. Unlikely Varsha on this count, but I mean, it's just something I'd want to know.
On the pricing front, I would say that Dr. Lal, they clearly, in last few quarters, they clearly told that they don't want to go for price hikes. They want to play on volumes.
Correct.
And that's the reason you're seeing that there's been a good volume growth, though.
But Varsha, you look at across the hospital space, you've seen price increases rampant, right? And therefore, on the testing side, if you're not seeing price increases, at some point that has to correct, right? It has to adjust itself for inflation. So I'd want to know as to whether they're actually doing that or not. And obviously competition texture, because that will also play through on pricing a little bit. So all of that, of course. But let me first start off with, or rather, I'm going to shift focus entirely to Varsha now. She's going to drive about the company, and she does this well. So Varsha, over to you.
Let me start with that, that as Harsh was saying, because of this all tariff situation, you have hospitals, you have diagnostic companies, so basically they are on the radar of the investors. Why? Because you don't have that overhang of tariffs, playing out in diagnostics and hospitals, and diagnostic itself is growing into double digit, and that's one of the reasons you're seeing many upcoming IPOs. Recently we had Suraksha Diagnostics, and many diagnostics are in focus when it comes to investors because of again the double digit growth and no overhang when it comes to tariffs. But shifting our focus to Dr. Lal, let's see what that company does. I think our viewers know very well what this company does, but still it operates a diagnostic change with a pan-India presence, and in the last 5 years they have served 131 million patients, and when it comes to pathology and radiology tests, they have almost 5,000 overall 5,000 pathology and radiology tests, comprehensive test menu. They have 298 labs, and they are geographically spread out network. On the operating highlights, when it comes to Dr. Lal, the number of clinical labs have been improved since 22. If you see in FY22, they were operating 277 labs, which has increased to 298 labs when it comes to FY25. On to the revenue by geography, if I were to talk about, their major focus is in Delhi, which contributes almost 31% to the overall revenue. Now this is followed by East India at 15%, then rest of North of 13%. Then you have also South India, which contributes 6%, and others at 2%. So overall, their major focus has been into Delhi, but they are expanding when it comes to West India, West and South markets as well. And let's see how they goes up, because the point here is it's very easy to open a diagnostic lab, but it's very difficult to scale that up. And that's one of the reasons, if you see, the diagnostic industry has been clustered. You don't have any diagnostic company, with a major pan-India presence. Dr. Lal has done a good job when it comes to pan-India presence. But
this is also more of heartland India, right?
Yeah.
You look at the tilt. 50% is Delhi, NCR and UP, virtually, and just the balance 50, and even out of the balance 50% is East and West, essentially. So, I mean, would you want to see South start to dominate? I'm sure, and I'm sure that's the way they look at it as well.
That will actually require some time, Harsh, because scaling up a diagnostic industry is actually difficult, and that's one of the reason. Dr. Lal, being the king of the diagnostic industry, has been facing, I won't say a problem, but yeah, they're very little slow when it comes to expansion, and that's not their fault. It's the industry how that operates, and that's also one of the reason why they are going for acquisitions into those areas where you don't want to open up a lab and then go into all those hustle, just acquire a lab and just move on.
Sure.
So this is how industry operates. But on to the overall, if you see, so there's nothing much. They just operate a diagnostic chain. Just because I'm talking about the company, I just wanted to highlight how their Q1 numbers were. The revenue growth that you're seeing is led by the sample volume. SwasthFit contributed 27% in Q1 FY26, and EBITDA increase that you're seeing is led by sustained volume growth, and lastly, network expansion and favorable mix also aided EBITDA. So overall, Harsh, a very simple business to understand, but a very difficult to scale that up.
Well, yes. Okay. So that's with regard to Dr. Lal. Let's start off and look at the metrics that we'll speak about with regard to where Dr. Lal is concerned. We'll start off with the income statement, the balance sheet, the regular metrics, frankly, cash flow, return ratios, shareholding, street cred, street coverage, and valuations. That's broadly how we always do it, and for all of you viewers, this is not new. So I'm going to go straight across to Varsha, who will start with the income statement.
Yeah, thank you for that. So overall, if you see the income statement, goods on the 3-year basis, starting from FY23, they've done a good business. So if you see, they've consistently delivered strong revenue growth. Mainly, almost they always have a guidance of 11 to 12%, and even in this financial year also they are expecting that, and they've decently done well. Now this revenue growth that you're seeing is primarily driven by increasing patient volumes and strategic network expansion into tier 3 and 4 cities. And of course, if you see the margins, look at the margins. Margins have improved. So in FY23, from 24% to 28%. Now this is on the back of favorable product mix, and of course the cost optimization strategy that the company has been doing, and of course the volume growth that the company has seen. So beautifully they've increased their margins, and even net profit has been increased, of course, because of the revenue growth, the cost efficiencies, and the margin improvement that you're seeing. So overall, Harsh, what they have guided in the last 3 years, on and off, 1 or 2 quarter might see some on and off things, but overall, they've done a good job when it comes to overall income statement.
Yeah, I mean, last 3 years, every single guidance that they've put out, what stood out for me when I was researching this, they've exceeded the guidance every single time. So they have a record of really doing well where guidance is concerned. So that's the one key positive which viewers must know. Okay, let me now talk about the balance sheet, and it's a fairly simple one, so I'm going to just breeze through it. You look at the equity and the reserves, they're at around 2,100 odd crore. It's trading at nearly 12 to 13 times its book value, which is on your screen. The borrowing is minuscule, frankly, and currently at FY25 it's zero when I exclude lease liabilities. So on the liabilities column, all of that 157 crore is lease liabilities. No concerns with regard to the balance sheet. Absolutely clean. When I'm looking at the cash reserves as well, it's sitting on a healthy set of cash of around 840 odd crores. So no concerns on that count either. Varsha, cash flow.
Yeah, so if you see the cash flow from operating business, in FY23 it was 456 crore, which has gone up to 569 crores. On the net cash flow, that the negative number that you're seeing in FY25 is because of the investments or cash flow from investing activity that they've done. They've invested in some investments, and that's the reason you're seeing that negative number. So overall a good healthy cash flow that you're seeing. I'll also take Harsh on the ratio side, because if you see, the ROCE has increased from 24% to 48%. Now one of the reasons why this has increased, because company do not operate in radiology. When it comes to radiology business, that business is a capital intensive business, and that's one of the reason. If you see, for Vijaya Diagnostic, the margins have been higher and ROC has been lower because of the capital intensity that radiology business has with higher margin. So if you compare it with Dr. Lal and Vijaya, you would see the margins of Vijaya higher because radiology has a higher margin and it's a capital intensive business, and that's one of the reason the ROC of Vijaya Diagnostics is lower, but the ROC of Dr. Lab is higher because they do not have much contribution from radiology business. So overall, good set of numbers when it comes to ratios. Yeah.
And fascinating nugget, you'll always get these small nuggets from Varsha when we bring her on KYC. So that's the other big positive. Let's look at shareholding now. And within that promoter shareholding, fairly steady. Again, I'm not going to waste too much time here. It's been 50+% for maybe the last 10 years odd. So no concerns with regard to shareholding. There's decent participation from FIIs as well. FII participation currently stands just above the 20% mark. The highest in the last 10 years was 26%. So some scope for it to go up. And DIs also have a fairly solid shareholding at this point at its peak of 17.6%. So that's on shareholding. Street cred also, let me take up actually. Let's quickly look at street cred. We've given this a neutral largely because you look at the 5-year returns. It's been, that's the way it's been. But the 1 month, the 6 month, the 12-month performance has been okay. The last 1 year, not any solid returns, and therefore we've given this a neutral. Let's go across to Varsha. Varsha, you want to take valuations and analyst recommendations?
Yeah, so on the valuation side, Harsh, if you see the PE, the TTM, trailing 12-month PE for Dr. Lal stand at around 51, and if you compare it with, Metropolis, Vijaya Diagnostics and Thyrocare, it's available at kind of discount to all these players. When it comes to FY27 PE, again, Dr. Lal is at 45, and Metropolis is at 42, ranging at the same level, while Vijaya Diagnostics has a higher PE. Now, one of the reasons, again, the radiology business, which, Vijaya has a good contribution from radiology, and that's and higher margins, and that's the reason the premium valuation that you're seeing in Vijaya Diagnostics. So overall, on a valuation side, yes, Dr. Lal normally has a premium valuation considering the management pedigree and the a decent business that the company has been, and of course the guidance that they meet the guidance. So overall, I would say a neutral set of rating when we would give to valuations.
Sure, let's look at analyst recommendations as well. Just a 6% upside is what average analysts on the street expect. 17 buy calls, 4 holds, 7 sells. So clearly not too many in the hold and the sell camp versus the buy. We've given this a neutral as well, just given the upside being just about 6%. But let's quickly stack up all of the rating parameters, and what we'll get is a very, very healthy 6.5 on 8 for a Dr. Lal PathLabs. And in fact, let's also go across to the conversation. Let's pull up, there you go, 6.5 on 8. And let's go across to the conversation Varsha and I had with Shankha Banerjee, the Chief Executive Officer at Dr. Lal PathLabs earlier today, and understand what the outlook is, not just for FY26, but what is in store for FY27 also. Listening. Let me first start off, sir, with the Q1 numbers, especially on the volume front. It's been a decent quarter for you. Question is sustainability and any one-offs at all. Is this at all weather linked, given the early onset of monsoon? Has the testing in the system gone up in terms of, are you seeing better volumes because of that, or is this largely just better trends playing out?
Good morning. Thanks for having me on the show.
Good morning.
I think that's a very interesting question, and thanks again for the compliments. Yeah, so the numbers this quarter are obviously quite good in terms of our sample volume, which is now seen a 10.7% growth in our overall revenue growth of 11.3%. Now, our quick analysis shows that this is really not driven by seasonal swing or anything getting preponed. It is primarily like for like versus same quarter last year. So yeah, I mean, this should be sustainable, and all the efforts that we've been making in the last 4 to 5 quarters are kind of bearing fruit in some way.
Right. Hi, Mr. Banerjee. Welcome to
Hello.
the show and pleasure to have you. Mr. Banerjee, if I remember, you had guided for 100 basis points margin compression in FY26 due to the reinvestment that Dr. Lal has been doing. Was Q1 strong margin an anomaly? And if yes, should we expect this compression to be delayed?
So, our margin profile usually is better in the first half compared to the second half. And Q1 margins are not really indicative of the full year. However, the margins that we have seen in Q1 are kind of also making us recalibrate the whole margin situation for the whole year. I think we'll be in a better place to maybe look at the guidance again after H1 is over. But as of now, it appears that we should do slightly better on the margins compared to, I think, what we had guided at the beginning of the year.
Okay, so basically, you're not expecting the compression in the margin going forward, at least for the H1. Okay. Also, please go
No,
ahead.
sorry, I'll just correct that a bit. I'm saying that we have H1 is definitely a better margin profile than H2 for us. And we had guided a compression in the margin for the full year compared to last year full year. So we will recalibrate by end of H1, and then we'll see. But it looks like we should be able to do slightly better than whatever we had guided earlier.
Okay, understood. Got that point. Also, Mr. Banerjee, so there's been good growth when it comes to pickup points as well. Now, when do you expect to see a significant step up in revenue beyond 15%? I mean, I agree that Dr. Lal has been growing above industry, but can you see, because of the uptick in the pickup points, can you see your revenue growth beyond 15%?
So right now, I think our revenue growth that we have guided is between 11 to 12% for this financial year, and Q1 is kind of in line with that. We will prefer to take this step by step. One would obviously like higher revenue growth. The infrastructure addition that we are doing, whether it's in terms of the new labs that we are adding, the collection network, including pickup points, have a trajectory or a maturity trajectory which is slightly longer, and it usually will not have a direct correlation to growth in the immediate future. So I think that infrastructure work or addition will continue, but our guidance for revenue for this year remains between 11 to 12%, and we are hoping to achieve that primarily driven by volume growth and whatever mix improvement that we can get. We haven't yet factored in any price increases.
So what's happening on the suburban front? Give us that perspective. You've guided that you're being cautious with regard to making large-scale changes within this model. How quickly do those changes come in? What should be the year in which everything should be effective, and what should the impact of that be on your numbers?
So, what we have done is last quarter of previous year, we have now completed the full integration with all the whole range of IT integration also completed. That has given us a bit of a market, disturbance, which has caused in a bit of a slowdown for a period of time. We are recovering on that growth. Also, now with the whole suburban diagnostics as an entity getting merged, we are more looking at West as a region to see how is that going to grow, because now there is, fungibility between suburban and Lal PathLabs in certain areas. So that's what we are going to track. And our West region growth, we are looking forward to kind of start coming back to the numbers that we want maybe in another quarter or so.
Got that. Also, Mr. Banerjee, now coming to your, Swasthfit portfolio. Now you've seen almost 20 to 22% growth when it comes to, that portfolio. is this growth sustainable, or you're expecting a higher growth also in in the coming quarters?
So our first fit growth, as you rightly said, has been 22% for this quarter, and the contribution has inched up further. It's now 27% of our revenue numbers, and we still see some bit of headroom available for this growth to continue, specifically driven by the fact that not only urban markets, but we are seeing the acceptability of the first fit bundle packages in some of our tier 2, tier 3 towns and below as well. So that is kind of helping us besides whatever we are driving in our core markets in terms of first fit portfolio.
Okay, also on the radiology, so how do you view radiology as your future growth driver? Because there are competitors offering services like ECG at home. How will Dr. Lal PathLabs approach these basic and advanced radiology services going forward?
Yeah, so radiology, like you said, can be broken into basic and advanced. So in some of our metro markets, we offer the basic radiology services like X-rays, ultrasound, ECG, treadmill tests, etc. But high-end radiology, which is CT, MRI, and all, that's not something that we are kind of into too much. But even in the basic radiology that we do, currently that contribution is pretty low. So that is something that we are continuing to evaluate as to how can that business model help us grow in the future. As of now, our focus remains on pathology and scaling pathology. But that radiology option is also always available to us, and we are continuously evaluating, that part of the, testing portfolio as well.
Mr. Banerjee, any kind of any number or any target that you have when it comes to radiology? Maybe in next 2 to 3 years, you want to take X percentage of revenue contribution from that segment.
Right now, like I said, we are just evaluating because the business model around the high-end radiology works quite differently from the way the pathology business works. So we haven't yet, we don't have a business plan which is targeting a certain growth coming through radiology. But yeah, we will continue to evaluate that, and maybe when the opportunity is right and our plans, maybe then create plans to see how we can add that to our portfolio.
All right, that's in fact all the time we have on this edition of KYC. From Varsha, myself, everyone who puts the show together, thanks so much for watching, and we hope you found this helpful.
Has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report.
Hello and welcome. You're watching NDTV Profit and I'm Harsh Saita. You're watching Earnings Edge, and Chola Finance is the first management we're focusing on. Before we speak to the management about the first quarter performance, an important update from the earnings con call that has come through. The lender has cut FY26 disbursement guidance to 10% from the earlier 15 to 20%. It's also seeing an uptick in credit costs, and that has been a concern with regard to Q1. We spoke with Mr. Arun Selvan, who is the President and CFO of Chola Investment and Finance, on all of these. My first question to you, sir, is about the spike in loan losses. What has caused them and what are your concerns where FY26 is concerned? Give us that perspective.
Loan losses in vehicle finance had been little high because typically in Q1 this happens to be little high, but this time it had been, I would say normally it had been slightly higher than the normal pace in which it would have shifted in Q1. This is primarily because of the early onset of monsoon that has made the vehicle utilization levels drop, and that is where the earning potential of the current borrowers have been hampered. We expect that the monsoon should get over by September, in which case again because of the early festival season starting in September itself, there should be traction with these borrowers, which could help them bounce back quickly in Q2 itself, or at least the fag end of Q2 and in Q3 certainly. The monsoon would be the critical factor for their bouncing back. That's on the vehicle finance. LAP and HL had been, from a loan loss perspective, had been fairly okay. Normally, there will always be a small spike in Q1, which is what they've gone through. The other segment is the CSEL, where as we have already iterated, the exit of the fintech partnership still has some pains, and that is what we are going through on the CSEL side of it. The fintech losses, because there's no incremental disbursements coming in, it seems to be little aggravated. That should run down over the next 2-3 quarters, and after that, this pain will not be there for us to expose on this side of it. SME has been fairly okay. What we have done is we have consciously exited certain low ROTA products because it is not adding ROTA to the overall company level ROTA expectations, and they've been fairly low, which is like supply chain finance and loan against shares. That is what is showing up on the disbursement being negative in SME segment. Actually, if you see, AUM has still grown because both the supply chain and loan against share segments are very short tenor, and they result in more churn and more OPEX, and thereby there is very little profitability at the end of the day. So we have consciously exited this product. At least I would say slow down on this product.
Got it. So on the SME side, are you penciling in more pain? Is that what is visible? Or because majorly what I gather from what you're saying, majorly everything is seasonal and should taper down starting Q2. Is that the correct sense I'm getting?
Absolutely, because if you look at it, actually we tried to present it, if you see, we slightly shifted the investor presentation to bring in the SME ecosystem itself and where we are playing in this ecosystem. So if you look at it, LAP continues to do well, which is also a large part of the SME. And I wouldn't say it is a pain on account of the credit, it is more a conscious decision to exit certain products where it is not meeting up to the expected ROTA levels. That is the only issue rather than credit issue in this segment.
Do you see a pickup with regard to growth across the board, because, and excluding SME maybe, because that's the commentary you're giving, but excluding SME, are you seeing growth especially in HCV? Give us that perspective. And then in other vehicle finance as well, are you starting to see meaningful growth likely in Q2, Q3?
In Q2, it will still be muted. As you know, Q2 is also impacted by monsoons, a large part of the Q2. And the inauspicious months across the country, keeps the activity levels low. So in vehicle finance, you will see little muted growth as well as, traction even from a credit angle in Q2. But it should improve at the fag end of Q2 when the monsoon is expected to end. The only prayers would be to ensure that the monsoons don't get extended like last year, where it went all the way, to the mid of Q3. If such thing happens, yes, it could be a little bit negative more on the vehicle finance. But for the rest of the portfolio, I think the traction should start picking up in Q2 and Q3 onwards.
Okay. So let's get an outlook for you for the full year FY26. Your credit costs currently sit at around 1.8% where Q1 is concerned. That should taper down from what you're saying. And therefore, where should you land up at where full year FY26 is concerned on that number?
On the credit ratio, we should be between 1.5 to 1.6% is what I expect right now. On a very conservative note, it should be better than that. But as I said, the large part of it hinges on the monsoon because we still have a very large vehicle finance portfolio, which will get impacted if the monsoon gets extended. But if the monsoon gets over and then there is a fair bit of the festival season picking up, we should not have any impact. It should come down, at least in the vehicle finance, it should come down to around 1.5, 1.6, which would be more reflective of the full company as a whole number also for the full year.
And growth, you believe underlying growth tailwind remains, given that there is going to be some seasonality effect in H1, but likely H2 should pick up?
Yeah, H2 should pick up. There are multiple factors we are also banking on. One is the change in the norms, which would trigger certain pre-buying in Q4, especially in the HCV segment. Where sorry, I forgot to answer that in the earlier question. So that would pick up the volumes in Q4, and we see the festival season also bringing in more traction on two-wheelers and the passenger cars, etc.
Would a 25% growth likely sustain? Is that kind of a number doable for FY26?
I keep it at the same level what we mentioned, 22 to 23% right now. So can you hold me at that?
Sure. No, absolutely. I understand. So give us the margin picture. You've improved 20 bips or so over the last year. We've started to see rate cuts. What's the margin upside looking like?
See, actually, a large part of the cost of fund benefit is not reflected in Q1. You will see it coming more in Q2 and Q3 when the banks start transmitting them. The T-bill related benefit or the EBLR related benefit would show up certainly in Q2. And the MCLR related benefit, which is almost 50% of our bank borrowings, will come more in Q3, Q4 because banks will delay or will tend to progressively give in smaller lots the MCLR changes. So you will see these benefits coming up. Of the total book on the LAP and HL floating rate books, we may have to pass on these benefits, at least part of it, as and when it starts accruing to us. But we stand to benefit on the vehicle finance book, which is a fixed rate book. So we expect overall for the year around 20 bips improvement on cost of funds.
20 bips, and that should translate straight to the margin number. So your margin should go up to 8.
I would say that, as I said, the LAP part we will have to pass it on. So we should land up anywhere between 15% level, 15 bips level, sorry.
Got it. Understood. So just below 8% maybe on the net interest margin front, right? Okay, got it. And sir, therefore, what does this do to ROTA? You've said, or rather ROA for viewer perspective. PBT ROA is what you had guided for the last time we spoke. 3.5% was the target. Can you do that in FY26 is what I'd want to understand, because we've come off quite sharply from that number.
I know we are behind that number quite heavily in the Q1, but I think the benefit on the NIM side as well as a little bit on the OPEX and reduction on the NCL should take us, somewhere between 3.3 to 3.4%. Again, I'm being conservative at this stage. I don't want to come in. Let Q2 cross. Let us cross the Q2 and then we will be more confident about these numbers, because monsoon is something which is completely, unpredictable. So if that gets completed and you have a fairly assured Kharif coming up, then we should be much more confident.
But sir, you're seeing, sorry sir for interrupting, but you're seeing a decent monsoon as of now, right? Or is that at all a concern for you?
Yes, my job is to also say that more on the negative side. So, or keep the expectations low.
No,
absolutely. So that, because I have to tell what could go wrong rather than, because if that is addressed, which is certainly not in our hands and it is a little, it's a wild card. So that is why I have to be careful about it. because you should not ignore this part of the conversation and hold me to it.
Well, this was management of Chola Mandalam, speaking about the outlook going ahead. But, let's see how markets are doing. Let's figure out how Nifty is doing. If I were to talk about Nifty 50 benchmark index, it's down almost 0.41%. Let's see what are the contributors, pulling down the Nifty 50. Majorly, if you see, pharma names are also there. You have Sun Pharma is down. Now, this is on the back of Trump saying that he wants to reduce the prescription drugs, and he has sent letters to 17 MNC companies. We'll speak about that also. Even Infosys is down. You have ICICI Bank and M&M who are on the loser side. While on the gainer side, if you see, you have RIL, you have ITC, you have HUL. HUL is gaining on the back of positive brokerage that the company had. Even Kotak Mahindra Bank is up, and so overall, if you see, Nifty 50 is down. Let's pull up the sectorial heat map and let's see which sectors are buzzing. I think barring FMCG, media, everything is in red. If you see, Nifty Auto is down almost 0.85%. Nifty Bank is down 0.2%. Nifty IT is down 1.2%, while Nifty Pharma is down 2.9% with the same reason as I said. Nifty Realty is down 0.5%, while Nifty FMCG, if you see, is up 0.9%. I think HUL is the only stock which is pulling up Nifty FMCG. Nifty Media, if you see, is up almost 1.07%. But let's see what broader markets are doing. Nifty Mid Cap 150 and Nifty Small Cap 250, they are mirroring benchmark indices. And also let's see the BSE 500, which are the stocks buzzing and losing, because if you see, Nifty Mid Cap 150 is down almost 0.5%. Nifty Small Cap is down 0.54%. There you go. You have PNB Housing, you have IIFL, Oro Pharma, New India, Sanofi. Sanofi is on the back of Q1 numbers though. Even KPR and Sonata Software and Dr. Reddy's are on the losing trend when it comes to BSE 500. You have Network 18, you have Suzlon, you have RHI Magnesita, Supreme Petro, Radico Khaitan, Hitachi Energy and MMTC, which are on the gaining side when it comes to a BSE 500. But let's move on and let's see what is actually happening when it comes to pharma stocks. Now, Indian pharma companies, so if you see, they are taking a hit as Trump demands 17 pharma giants to lower US drug prices. Now, if you see, President Trump has issued a bold challenge to some of the world's largest pharmaceutical companies. He is demanding that they immediately lower prescription drug prices in the United States to match the lowest prices paid by other developed nations. And now letters have been sent to 17 major drug makers like Eli Lilly, Pfizer and Novo Nordisk, and he has also presented a unique proposal wherein the US government would help companies raise drug prices abroad to match American levels, but any extra profits earned overseas would then need to be brought back to the US to offset domestic drug cost. So overall, if you see, the pharmaceutical companies have been given a strict 60-day deadline to comply voluntarily. And now, if I were to talk about the impact on Indian pharma companies, Sun Pharma has the largest exposure to US branded specialty drug sales. Their key drug Illumia, it will largely be affected, and that's the reason why Sun Pharma is down in trade today, if you see, because over 50% of this drug is supported by Medicare, and this drug generated almost 5,750 crore in FY25, accounting 56% of Sun Pharma's specialty drug revenue. In fact, if you see, we spoke to the CFO of the company on the Q1 numbers as well, and of course on this Trump prescription drug issues also. Let's see what the management has to say. Just on the Q1 numbers, if I were to talk about, your EBITDA margins outperformed, but net profit declined. Now this was on the back of exceptional item, that impacted net profit. If you could, give us details on those exceptional items.
Morning, Varsha. I'm glad to be part of today's interview. The company, as you rightly mentioned, has performed well, and we have seen a good EBITDA growth. We had two exceptional items or one-timers for this quarter. One is relating to SCD 044. The trials were done and the product has been discontinued. The other one relates to GXMDL, which is a case that has been going on for many years in the past, and the company has reached on settlement, which was about $200 million. Net of the provisions that had been earlier considered in the books, we had to take a one-time accounting for both these exceptional items. Apart from this, during the quarter, we have also seen an uptick in our ETR, and the company had guided about it over the past few quarters. Our effective tax rate has moved from around 16% to 23.4% on a year-on-year basis. This is mainly due to the fact that some of the exemptions that were available to the company is going through the sunset clause, and therefore for the remaining part of the year as well, we believe that the ETR would be about 25%. Considering these two factors, one, the exceptional item, second, the ETR getting normalized, we have seen a dip in the net profit. However, the business performance has continued to be strong.
Got that point, Jayashree. Also, do you expect your US formulation run rate to improve from here, in the coming quarters? Just want to have outlook on the US formulation business as well.
No, the US formulation business, if you mean the generics, has been going through the price pressures, whereas the specialty business has been growing pretty well.
So on the specialty, I was actually wanted to ask you, what was the growth and what is the contribution to the overall portfolio when it comes to specialty business? Because I believe that's the next leg of growth, when it comes to Sun Pharma.
Yeah, the global specialty business accounts to nearly 20% of the total consolidated sales for Sun Pharma. And the growth has also been in line with the past trends, and for the coming quarters and months, we do expect that the growth will be far higher than the overall sales guidance that we have given for the company.
Understood. Also, Jayashree, now, yesterday, President Trump announced he wants to slash the drug prices when it comes to prescription drugs. Wanted to understand from you how this is going to impact Sun Pharma, because I believe Illumia is one such product which might get impacted when it comes to your specialty portfolio. Just wanted to have your view on that.
Yeah, last night we understand that President Trump and his administration have issued letters to 17 big pharma companies. As of now, Sun has not received any such letter. Secondly, this letter is seeking for voluntary action from the companies to whom the letters have been sent. Thirdly, this is also covering the Medicaid, which is relatively a smaller segment as far as Sun is concerned, and therefore one has to wait and watch in terms of the letter if we were to receive, and then assess the implications.
Understood. On Lexilvi, now that you have launched the product, how should one look at what would be the key milestones in terms of traction of the product, and how long it will take for insurance companies to add Lexilvi into their approved list?
Yeah, I think the initial response for the product has been quite encouraging. The commercial prescriptions have also started, though it's only about a couple of weeks since the product has been launched. The company has been in discussions with the insurance companies, and some of the payers have been pretty positive about it. So like in the case of any new product, I think over the next few months we should see more of adoption from the insurance companies, and this should track well for the product.
And since we are, speaking about the products, wanted to have your view on the Unloxy launch, because it is imminent that, this quarter, are you expecting this to be launched in this quarter? And what are the milestones that have been set? What is the kind of, top line that you are expecting when it comes to this product?
No, Unlocks it, we have guided that the launch would be in the second half of this financial year. There are certain long-term data that has been filed with the FDA, and we expect those to be included in the label. This data is pretty encouraging, and it is also available in public. So once we get the label updated, the company will be going in for the launch of Unlocks it.
Understood. Now on the halal facility, which is important for pickup when it comes to US generics, but now the clearance doesn't look like at least for quite some months. How should one look at the generics business? Particularly in this year, are you expecting growth in the business from the launch of this generics products from other facilities? How are you viewing this? Because and also the update on the halal observations also.
Yeah. For halal, the FDA inspection had happened and the observations were shared with us. The company has filed a detailed response to these observations, and we are awaiting feedback from the regulatory authorities. All steps are being undertaken to remain compliant with the FDA regulations. Having said that, there are other facilities from which we feed the US market, and there are also opportunities within the existing portfolio which we could try and maximize in terms of the US generic sales.
Understood. Also,
and we do believe that more than the generics, our focus will continue to be on our specialty portfolio, which has been doing well. And with the introduction of these two new products during the year, we expect that the growth in the specialties will continue to be encouraging.
Understood. And also, on the GLP, update, or on the GLP point further, if I were to talk about, could you just give us some sense on the participation when it comes to, first wave of commercialization of GLP products in India? What are the timelines, and what is the on-ground reality? If you could, talk us about that.
Yeah. Sun would be participating in the first wave, and in fact, the team is preparing for launching the product on day one as it comes out of the patent. So this is as far as the India business is concerned. We are also looking at other emerging markets where this product would be relevant, and as and when those plans are fructified, we can come back to you.
Right. My last question, Jayashree, before I let you go. What's the outlook when it comes to consolidated revenue for FY26 and FY27 as well? How are you looking at the top line when it comes to Sun Pharma with also EBITDA margins that you're expecting?
See, the top line guidance has been shared in the last quarter, which is going to be in the mid to the high single digit growth, and we believe that is still holding good. That's for financial year FY26. As far as the margins are concerned, we normally do not provide guidance, while the endeavor for the company is to see how we sustain our margins.
Well, thank you, Jayashree, for answering all the questions. It was a pleasure to have you. But viewers, this is all the time that we have on this edition of Earnings Edge. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hero Tatia. With me is Puneet Javeri, and we have Mahima joining in for a couple of conversations that we will be having with the managements as well. But let's quickly take a look at what markets are doing at this hour. If you see in terms of Nifty 50 as well, let's quickly pull up that one on the screens. It's been an interesting move from the day's highest levels, though we've been in the negative. But again, there is some downtick that's coming in there with cuts of around 0.3% on Nifty 50. We're below the 24,700 mark. Let's quickly pull up Bank Nifty and then we'll look at the sectoral indices in trade today. And overall, in terms of Bank Nifty as well, the trend is absolutely in line with what's happening in terms of Nifty 50 in trade. If we can have the sectoral heat map to understand which are the sectors which are gaining. So it's media, FMCG and consumption, which is trading in the positive. But what's losing out is Pharma, which has been trading under pressure, IT, defense, oil and gas, metals. All the sectors are in the red except media and the consumption pack. Let's look at the heat map in terms of Nifty 50 as well and see what's happening on that front. Because yesterday's session, you had a lot of mirroring that was happening between broader markets and the benchmark indices. Today, you have Trent, which is one of the top gainers today, followed by Asian Paints. Aisha Motors reacting to numbers as well. HUL, ITC will be reporting numbers in today's session. Sun Pharma under pressure, Dr. Reddy, Cipla, all of these reacting to commentary that we've been hearing from Trump in terms of tariffs and reduction in terms of prices of prescription drugs as well. So that's what's happening in the large cap space. Puneet, how is the broader markets looking like? Because the kind of divide that we've seen, it's more of stock specific action that we've been witnessing.
A lot of it, Hiral, and we've seen a lot of reactions on earnings as well. Let's quickly pull up the mid cap as well as the small cap index and see how it's performing. We're seeing mid-cap 150 largely starting in the green and then going into red, almost 100 points downtick. We've seen a very, very tinge of recovery from the lows, but the small cap 250 is at the low point of its day. Let's also look at the BSE 500 very quickly. Seeing a lot of reactions on earnings. PNB Housing is definitely one of the stock of the day. The resignation coming in from the managing director and the street's not liking it one bit. The other one, Sonata Software, came out with results a couple of days ago. Again, a weak set of numbers for the company and continuing its downward momentum. Something like Sanofi, Aurobindo Pharma is impacted, and Granules. And for Oro, it could be because of what's happening with US tariffs. And again, a key update today, we'll get Varsha in to cover that as well. On the positive side, seeing some positive momentum on Suzlon. Hitachi Energy is up 5.2%. Radico, after earnings, has been reacting very positively as well. Something like Chalet Hotels is, and we're going to be joining in by the management as well during the conversation. And the top gainer on the BSE 500 is KIOCL as well, up almost 12% in trade today as well. But before we move on to the management conversation, let's first hear in from Tuin Kantapande, who's the SEBI chairman, and address some public doubts about undetected frauds at IndusInd Bank, stressing that while complete prevention is tough, SEBI is pushing for advanced detection tools. Let's listen what he had to say.
नहीं, ये कहना कि हमेशा हम जान लेंगे किसी भी चीज़ को, ये संभव नहीं है. लेकिन हमें उस ओर बढ़ना है जिसमें हम प्रिवेंटिवली, क्योंकि फाइनेंशियल स्टेटमेंट्स तो आती हैं और बहुत सी मीटिंग्स होती हैं, बहुत सा एजेंडा आता है, तो किस लेवल पे वो डेटा से आपका कुछ थ्रो हो रहा है. लेकिन फिर भी जो फ्रॉड्स हैं उनको पूरी तरह से तो प्रिवेंट नहीं किया जा सकता, लेकिन टूल्स ज़रूर विकसित किए जा सकते हैं कि हम उसको पहले से ही डिटेक्ट कर पाएँ कि नहीं, और वही एक चेष्टा रहेगी.
Right, so that's with regards to where IndusInd Bank goes. Let's pull up the stock on the screen. It's not doing much, though some recovery that has come in on the IndusInd Bank from the day's lowest levels. But moving on, Chalet Hotels, that's an interesting one to watch out for. Strong moves in terms of opening. Though the stock has cooled off right now, seeing gains of nearly 4.5% as we speak. The profits have doubled. Margins have been pretty good this time around. And this is in spite of those geopolitical headwinds that we were talking about with regards to the hotel industry as a whole. To discuss more on this, let me get in Sanjay Sethi, MD and CEO of Chalet Hotels. Sanjay, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, overall, what have been the key drivers behind the significant growth that we've seen in terms of top line, operational efficiencies, as well as profitability? Because some portion, in fact, a substantial portion of the quarter's growth has come in from the residential project in Bangalore. So if you could provide a breakdown of the core hospitality business performance, specifically with regards to ARR, occupancy, and RevPAR.
Sure, Hiral, pleasure being back. Thank you so much. You're right. It was a quarter that was troubled by geopolitical tensions across the border. We also had compression on air seat capacities and disruption of flight routes. Despite that, I think the companies reported strong numbers. We believe that the strength in the numbers will continue for the foreseeable future. And when I say foreseeable future, I'm looking at least 3 to 4 years. I don't have visibility beyond that. To your question regarding a breakup on how we've done across various business segments, well, hospitality on its own grew by about 18% year on year for the quarter on the revenue side and 20% on the EBITDA side. The annuity income, which is the office rental business, roughly doubled what we'd done last year, same time. And on the EBITDA side, we had 130% growth. The residential business, which was, it was inevitable for it to pop up in our P&L because this is a project that we rekindled about 1.5 to 2 years back. And we've always said that this will sort of, it's a one-time thing. We're going to make money on this one. Let's complete and get, hand over the flats and get out. It's been a great project. We've now sold close to 300 of residential units. We have only 14 units left to sell from our kitty. And within those 300 units that we sent, the average ticket price or average rate per square foot for the new sales has been north of 20,000 rupees per square foot very comfortably. We had expected this to be at about 13,500 2 years back. Yeah, so residential, so here's the thing, if you take residential out, which is a one-time impact over a few quarters, without residential, our revenue has grown by 27%. This is between hotel business and office business. Both of them are strategic initiatives at our end, will be continuing businesses. And our EBITDA has actually grown by 37% on those two businesses. Overall, very happy with the performance, and I see this only getting stronger from here onwards.
Mr. Sethi, hi, Mahima also joining in. Just want to understand, occupancy has come down a tad bit year-on-year basis. It was at 70% in Q1 FY25, but has come down to 66%. So the kind of revenue growth that overall you've seen in terms of hospitality business, from what my understanding is coming from the kind of average room rate, because that has seen a significant uptick of around 17%. Is that reading correct? And considering that occupancy was lower this particular quarter, and this is because of geopolitical reasons, what is the number in place, internal targets that you're seeing in terms of where occupancy will stand by the end of FY26?
Mahima, thank you. Look, this occupancy was dragged down for two reasons in this quarter. One, of course, the external issues which were out of our control. The other reason is that we added about 165 rooms in this quarter to our portfolio. And those rooms take time to fill up and drag the average occupancy down. If you were to normalize for that, the occupancy drop is only a couple of 100 basis points. It's not a big worrying number. And this despite the geopolitical situation that we are faced with. Going forward, whilst we don't share numbers, as I said earlier, I'm extremely confident that double-digit RevPAR growth is pretty much on the cards for the next few years.
Mr. Sethi, with regards to your pipeline updates, you've already given us that, but just want to get a sense because these updates we've had this in the past quarters as well. Want to understand if there's more to add to that pipeline, anything that you're looking forward to adding to that pipeline?
So today we have 3,300 odd rooms. We've got 1,200 rooms under various stages of planning approval or development on the site. That'll take us roughly to about 4,500 rooms. And I think I shared this earlier that my wish is to get to a 5,000 room inventory by the end of this financial year between pipeline and operating hotels. What we have visibility on, definitely in terms of opening, is 30 additional rooms at the Duke's Retreat, which will take our count there to 147 rooms. By the way, that resort's come out lovely. You people should visit it. The feedback's fabulous. The rain's doing wonders for that resort, and we've got 5 waterfalls visible from the resort. Beyond that, we've got a big hotel in a development in Delhi, which is about 380 odd rooms. We've got 3 land parcels that we're working on, 2 in Goa, 1 in Airoli, Navi Mumbai, which at some point of time will start work and with shovels in the ground in the next 2 or 3 quarters. Overall, I'm very confident that by the last quarter of this year, we will have a pipeline plus operations of 5,000 plus rooms.
Okay. Sanjay, okay, so with all of the expansion plans that you have in place right now, what is the capital allocation strategy expected to look like going forward? Meaning in terms of balancing funding for new acquisitions, ongoing projects, and deleveraging. If you have to look at all aspects, what will that look like?
Sure. Over the last few quarters, our debt position, as you would have seen, the net debt position is fairly flat. A little bit of movement over there, which means all the capex that we're doing right now is funded through internal accruals. As the office business and residential brings in cash flows, it will only get stronger. The hospitality division is already funding all the new hotel assets. What's being funded besides the hotel assets is the office business, which is literally also included in self-funding. We do expect debt to peak a little bit for the existing pipeline at around maybe 2,400-2,500, not beyond that. And that is also a high number as I see it. But within that, we'll be able to deliver everything that we've spoken about. And then the debt will fall very rapidly. Our debt cost of debt has also come down significantly. We've dropped 40 bips on the return of interest on a net debt basis. So we're very comfortable. We're an aggressive company on the growth side. We are an asset-based company. We believe there's value to be created out of this asset-based strategy. And I think our dual engine strategy of hotel assets complemented by office assets has worked very well and will continue to do extremely well.
Mr. Sethi, one trend that we've seen this particular year is that a lot of real estate companies that are owning hotels are separating their hotel business because there are different synergies available in both of these aspects. For you right now, though real estate business is very small, but just wanted to get a sense, is that something that you would look forward to doing, maybe separating your hotel business and real estate business if that grows at a larger scale?
So today our real estate business is only about 20-22% of the total business. And I think it will continue to drop in its percentage because hotels are being built. There's no reason right now. The real estate business is giving very strong return on investments to us. The IRRs are north of 20%. But at some point of time, if we need the currency for a massive leap in acquiring a portfolio of hotels, this is a currency that we sit on. Right now, no visibility on such a transaction.
Okay, so no visibility on that front. Mr. Sanjay, let's talk about the leadership transition. You're not seeking an extension of your term. We have Shwetank Singh who will be taking over as well. How is the transition plan stacking up to ensure smooth handover and continuity from the way Sanjay Sethi managed it to the way Shwetank Singh will manage it?
Great question, Hirul. Look, I'd actually sort of indicated that I'd like to step down from the executive role a little over 2 years back now. And we worked, between the board and I, we worked hard to identify the right person and also give him enough time to work alongside me, to sort of pick up the nuances of the strengths and opportunities for the business. At the same time, make sure that when he comes in with a fresh perspective and fresh energy levels. However, the basics of the business is not going to change dramatically. Shwetank comes with a very rich background on the hospitality asset management side and growth side. He did a lot of business development in the past too. But having spent 2 years with him, I think we are already settled very well. If I was to have given up this role today, we've got a leadership team besides Shwetank, not just Shwetank, to step in almost immediately.
Mr. Sethi, one last question from my side. This quarter has shown resilience because, we mentioned earlier also geopolitical reasons, despite of, them being under pressure, you've managed to grow both in terms of top line as well as bottom line. FY25, you ended with roughly 1700 odd crores of top line. Considering the rate at which you're growing, do you think doubling of your revenues is possible by the end of FY26?
We don't give any forward-looking numbers, Mahima. I'm sorry about that. But look, I think the first quarter itself, even if you take residential out, 27% revenue growth, I think it's going to be in line with that. So I don't see the revenue doubling on from 2025, but it will be a very healthy growth.
All right. So strong moves there and strong leaderships coming in as well. But thank you, Sanjay, so much for joining us on the show. Always a pleasure to speak to you at NDTV and looking forward for more interactions in the future. The stock has seen good returns as well in the last 6 months. But let's quickly understand what's happening with the Eicher Motors now. That has been one of the counters that has been buzzing in trade, was one of the top gainers as well. As soon as markets open today, it has cooled off as well, seeing gains of 1.5%. Puneet, interesting moves in terms of Eichers. I mean, yesterday was a busy day in terms of previews. Today, it's all about the numbers that have been reported for the quarter, and you have the auto sales data that is trickling in. What really worked for an Eicher Motors, and was it always expected that it will be this strong?
I think there was expectations of a strong volume-led growth for Eicher. I think the only aspect was to look at margins. Margins have come in at 24% versus 26% in the same time last year. But the street seems to be rewarding volume growth trajectory versus absolute EBITDA margins, and despite margins being lower by almost 260 basis points, this could be the new normal. But we are seeing this as a base rate, and I think the street is rewarding that aspect. Apart from that as well, in terms of Eicher Motors, we have seen a strong performance in terms of sales growth. For Royal Enfield, it's up 17%. For VECV, it's up 9.7%. And the company, from essentially a niche space of specific motorcycles like the Himalayan amongst others, have now moved to adapting more mass products, such as the Hunter is one of them at 350cc, priced lower, and the audience and the average age has moved to 24 to 26 years of ownership. So essentially it's expanding its total addressable market, and that seems to be working for Eicher Motors. The other bit is the July auto sales. They've already in 88,000 units is what the company has sold, in line with what the estimate was of about 86 to 87,000. So it seems to be continuing its momentum. This is almost the 8th straight month of sales units over, somewhere around the 8th straight month of 80,000 units. And brokerages like Jefferies have maintained the buy. Target price is 6,500. Margins concerns have been alleviated according to Jefferies. They've improved 40 basis points on a quarter-on-quarter basis. And as I mentioned, it could be where it could stabilize. And that's something that the brokerages are also positive on. And that's one of the key reasons for the positive momentum on Eichers.
It's going to be interesting to see, because the environment was slightly subdued in terms of the industry, and I think two-wheelers is what is looking strong. Adani Power has just reported numbers. Let's quickly pull up that one on the screens. The revenue number is coming at around 14,100 odd crores. EBITDA has seen an uptick of around 18% this time around at 5,685 crores. Margins have expanded substantially. That number is coming at 40.3% versus 33.8%, and this is on a sequential basis, so a good expansion in terms of their margin score. And the profit number has also seen a good sequential growth to the tune of almost around 27% this time around. What they've indicated is that they've been receiving regular payments from Bangladesh, and over $500 million is what has already come in from Bangladesh over the last 2 months. In fact, the board has also approved a stock split in terms of where Adani Power goes. Their operation capacity has grown to almost 18,150 megawatt in July 2025. The stock split is 1:5 shares is what has been approved. So that's with regards to where Adani Power goes. But with that, Puneet, we have the July auto sales data that is trickling in for TVS Motors as well. Overall, a 29% uptick is what you're seeing in terms of two-wheelers versus an expectation of 3.9 lakh units. The number is coming at 4.4 lakh units. So that's a strong number as per what the street was estimating. Let's just quickly pull up the chart. You are seeing that marginal spike that's coming in terms of intraday.
stellar numbers, 29% growth in a slow time for TVS, and it also shows the stark difference between someone like TVS and Bajaj Auto. The product profile for TVS includes scooters as well, and that's one of the key ones. We'll just wait for the domestic number to pop up on your screens as well, because that would have led the growth for TVS in this particular time frame, including the exports. So it's a double engine firing for TVS, both on domestic and exports, as well as double engine on motorcycles as well as the scooter space. So they do operate the Jupiter, the iQube in the EV scooter space, and that positive momentum has led to that sharp beat of 4.4 lakh units. Generally, June and July, we see some kind of tad slowness before the festive season, so the inventory ramp up is slower, but this kind of number does show that the demand for products for TVS is very key, and hence we are seeing that number in terms of the company's two-wheeler sales as well. So we'll keep bringing those numbers together as well, because exports are also 46% up as mentioned as well, and that's on TVS as well. EV sales largely been doing very well as well. But let's also look at another counter. HUL is another one that I want to talk about, because it started off the day and possibly surprised everyone, Mahima, with almost a 7 to 8% jump. What led to this sharp jump?
Right, so I think it's the positive commentary coming in from the management, plus Brokerage is also hiking the target price. That's worked for the counter, but trading at its day's low point right now, up 1.3% as we speak. But I think it's been a good quarter for sure when it comes to HUL. Overall, growth turnaround has been the case for the counter. I mean, we've seen a 3-year sales CAGR of 6%, but this quarter itself, they've seen a growth of around 5%. So that's a turnaround story for sure when it comes to FMCG. Plus, volumes were far better than what was expected. A bounce back in volumes, almost 4%. A volume growth is what was seen, which was something that surprised the streets overall. Plus, there's macro commentary which is constructive, and that's a reassuring narrative that the management has given overall, which is probably giving enthusiasm to the street. Gross margins will go up going forward, and they've used the word saying that sharp increase in the gross volumes is something that they're expecting, and that will provide headroom for reinvestment for growth as well. In terms of the market share trends, that also seems to be right on track, is what the management has said. So that is something that's a positive commentary that's coming in from the management, and that's something that the street is liking. In terms of what brokerages have said, UBS has hiked the target price, maintained buy with a target price of 3,000, highest amongst the brokerages so far, followed by Macquarie with a 2,750 target price, JP Morgan with a 2,800 target price, Investec and HSBC is a hold with target prices of 2,612 for Investec and 2,374 for HSBC, and CLSA is the bearish one here because that's an underperform with a target price of 1966.
It's very interesting to see, because yesterday's move was also pretty strong. Today as well, I think, when the stock actually opened up, when markets opened up, and when we saw that 6 to 7% initial moves, we had to actually get Mahima, get up from that breakfast table as well to come and see as to what's happened on a HUL, but a strong one, and probably this potential could continue. But moving on, you have Birla Corp. That's another one which has reported numbers. The profits have jumped nearly fourfold this time around. EBITDA has surged, and despite of a weak EBITDA per ton, the cement volumes have risen amid early monsoons, and the pricing has been subdued in the central markets. 2.5% downtick coming in terms of Birla Corp. Sandeep Ghosh, MD and CEO at Birla Corp, joins in. Sandeep, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, a significant increase we've seen in terms of the profits, EBITDA, that has been driven by high cement volumes. The fuel costs have been low, and a strong turnaround that has come in the jute division. Taking all of this into consideration, what are the specific factors that allowed you such a strong performance, particularly the favorable fuel costs and operational efficiencies?
See, we have been consistently, we have a slightly different, shall we say, configuration compared to both our peer group as well as the large, players. The peer group are usually concentrated in particular regions, whereas obviously the large players have a pan-India presence, so the dynamics for them is very different. Now, in our case, although we are a mid-sized player, we are fairly evenly balanced within the northern geography. That means I call it the north of India's. So between in that region, we are fairly well balanced. Now, so therefore, to some extent, our performance becomes region neutral or agnostic. Not entirely that so, but we are fairly balanced between the north, the center, and now the west also, and bit in the east. So that's how we progress. So when you compare with last year, Q1, obviously we have done very much better, because last year Q1, you would recall, was a very depressed quarter for the cement industry, particularly post the elections. And before that, long drawn elections and the severe summer which the country had witnessed. So there is generally, you will find improvement across cement companies. But in our case, here it is much more significant, because a lot of those markets which we operate in last year, because of the factors I just mentioned to you, were somewhat depressed. But to be frank, if you compare with our previous quarter, that means sequentially, I would be honest enough to say we are not particularly happy. We could have done much better. There were some unforeseen factors which came in. We had a clinker shortage, due to which we had to buy a lot of clinker from other players, and that depressed our EBITDA in this quarter, as you see it, compared to what we had done sequentially in the previous quarter. But with that behind us, I think now we are well poised to get back on track as planned and move forward within our the parameters which we have set for ourselves. Our capacity utilization is one of the highest. Our new plant, Mukutban, has been ramping up very well. So all these things, last quarter, Mukutban suffered a little bit because of heavy monsoons. So did our plants in Central India. All that set aside, I think we should be on track.
Right. Mr. Ghosh, a very good afternoon to you, and thanks so much for joining in. I hope I'm pronouncing your surname correctly, right?
That's right. Perfect.
Sir, just a couple of points I wanted to come back to, which you mentioned. One was, of course, the maintenance shutdown at a couple of your plants for clinker. Do you expect that you will need some more clinker capacity purchases from the market in this year?
We don't anticipate any more purchase requirements. And as we said, maintenance shutdowns, what happened is, it was planned in both cases, but it got extended due to other factors, especially monsoons in the Mukutban area. So that is behind us, and we had a bumper previous quarter. So, we didn't carry forward a very heavy stock of clinker. So we were caught a bit off guard in this quarter, but that's behind us. And we don't see any problems for the rest of the year.
So does that mean that your these two capacities will be available for your clinker capacity, or is it that you purchased enough in quarter one that should last you for the year?
No. We are self-sufficient on clinker.
Got it.
We perform very high level of capacity utilization, and today our grinding capacity and our clinker capacity is very well balanced. So we don't need to purchase anything in normal times.
And just one follow-up question, because you had your power and fuel costs fallen by 18% this quarter, and that could largely mean because your clinker capacity was also shut. So this should increase going forward. Where do you see the EBITDA per ton stabilizing in this year? Could we expect that roughly about 800 to 900 rupees EBITDA per ton is achievable in a couple of quarters for you?
See, we are reluctant. We don't normally quote a specific EBITDA per ton. We had indicated at the beginning of the year what is the kind of range we are playing with. And so far, we are quite confident of delivering that. So no change in guidance over there. Because while we had a few setbacks in this quarter, but a lot of tailwinds are going to come in from next quarter onwards. We are going to have some capacity debottlenecking. We'll have our third Kundanganj line coming forward by the third quarter. And as I said, our Mukutban plant has been ramping up well, and the Western markets are looking up. So all taken together, I think we are very comfortable in staying with the earlier guidance.
Okay. Sandeep, with regards to the share of blended cement, that has increased to almost 89% of your total sales. So is this a conscious strategy? And what will be the target share for blended cement in the future? And will there be any impact that could come in on the margins and sustainability goals from here on?
See, first of all, we are an avowed blended cement company. We sell non-blended cement or OPC only under particular circumstances when the cement demand. We are essentially a blended cement and a retail company. So our focus is on the individual home builder segment, the retail segment. We are not big players in the non-trade or infrastructure segment, and that's how we want to remain. Because given our, as I said, we are a mid-sized player. Our capacity utilization is right now very high. It has traditionally been high, so we don't have the pressure or need to sell OPC or to the non-trade in a big way, which lowers our realization. So we are very focused not only on the retail segment, but we are constantly trying to increase our value share through premiumization. In this quarter itself, you'll see our premiumization factor has gone up substantially and in all our key markets, and that's the way we want to go forward. So in the past as well, we have done blended and blended cement and our trade sales close to 90% or upwards of 90%, and that remains our ambition.
About the jute division, which has turned profitable, it's still smaller in terms of the overall. What is the long-term strategy going to be for this one?
See, we have a very strong emotional connect with jute, which is not realized. This company, Birla Corporation, was the mother company of the entire Birla Group, set up by Mr. G.D. Birla more than 100 years ago in 1910. And it is the only jute company which has remained with the original owners for this length of time. All other companies, a lot of the foreign companies changed hands and, therefore changed management and its strategy. But we have remained steadfast. And we, as I said, we have a very strong, not only emotional connect, but a sentimental connect here. Now, we would like to be, to lead the change. I think jute has a great future. And we consider that it is also to some extent incumbent upon us to lead the change in the industry. And that's why we are providing far greater focus to jute than what it has got earlier. And we are happy with the initial results because these are kind of low-hanging fruits which have come by streamlining operations, getting more efficiencies in. But going forward, you'll see us focusing much more on technological innovations and value-added products to turn around the business, give it a totally future-forward character.
Mr. Ghosh, just a couple of follow-ups, and due to paucity of time, just a couple of questions on volume. Firstly, in this particular year, do you expect that you will be able to do industry average? It's expected to be somewhere around late single digit. Is that something that, while you couldn't give a guidance, is that the expectation?
We would do that. As I said, we are in certain parts sold out on capacity, but we are doing debottlenecking. Our third line in Kundanganj, which is in UP, is coming up, which will give us an extra volume. And we have headroom in Mukutban to take it up further. So given all these factors, and we don't see the market, any great headwinds in the market going forward, while you will not have a runaway demand, but I think the market demand should stay healthy, and we would deliver at par or higher than industry in terms of volumes, and in terms of probably value share growth, we would be higher than industry.
Thank you so much, Sandeep, for joining us on the show. In fact, the stated goal of reaching nearly 25 MTPA capacity by FY26 is what the company is looking at, the stock at the day's lowest levels. Let's quickly slip into a short break. On the other side, we'll get to the management of Wonderla Holidays and lots more lined up as well. Please stay tuned.
That's huge. That is a biggie. It's out of
गोल्ड ग्लास क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Welcome back. You're watching Profit Buzzers here at NDTV Profit. Now, the one stock that we're talking about today is Wonderla Holidays. Now, the stock came out with its earnings yesterday. Let's try to pull up the chart. It's down by about 0.8%. Not doing much in trade today, but it's been a weak set of quarters for sure. But to discuss as to how the quarter has gone by and how FY26 is shaping up, we're joined by Arun K. Chitlapalli, Executive Chairman and Managing Director at Wonderla Holidays, joining us now. Arun, hi. Always a pleasure speaking with you. From what I understand is that, unseasonal monsoons have also played its part when it comes to, this quarter. Plus, the entire Indo-Pak war has also played its part. And that's why we've seen a slight downtick in terms of the top line as well as bottom line. Just want to get a sense as to how the quarter is shaped up and what are the cues that you're picking up from this quarter for entire FY26.
Thank you for having me on the show. A pleasure as always. Like you said, I think this year we started the quarter quite strong. We had quite double-digit growth in April, but I think around the first week of May, we saw numbers kind of dip initially due to the India-Pak tensions, and I think because the weather turned quite substantially. So I think especially Bangalore and Hyderabad showed some decline. We are also a weather-dependent kind of business, so I think that is the main reason. But the upside is that we saw better numbers from our resort, and also Bhubaneswar saw the first quarter where we are profitable. So we got almost 1 lakh of footfalls in Bhubaneswar, and this is the first time we are experiencing a Q1 in Bhubaneswar. So those are the highlights for the quarter. Going forward in the year, we expect a mild recovery in footfalls in Q2 and going forward. I think Q2 last year was a lower base, so I think we should be able to do better. And Q3 and Q4 also will be good because we will be opening our fifth park in Chennai in Q3 in December. So we are looking forward to that as well. That will be another trigger. So I think, and also we have launched a new extension to our resort in Bangalore. It's called the Isle by Wonderla. It's a premium offering, and that also has shown good numbers. So I think it's going to be an exciting year for us.
Right. Arun, in terms of margins, FY25 overall, margins ended at 32%, which has been the lowest in terms of the past 3 odd years. Just want to get your sense on margins, because this quarter also margins have shrunk. What is the, because, and I understand because you're doing high capex as well. What is the margin picture and margin trajectory that you're looking at?
See, like you rightly said, we have high capex coming in the last year and this year as well. So we are investing almost 600 crores in our largest ever park in Chennai. So that will definitely have some impact on margins, because we are also recruiting close to about 700 to 1,000 staff in Chennai as we speak. So I think we are gearing up to launch the park. So obviously those costs will, and also marketing costs also will be higher. Whenever we launch a new park, of course, the marketing costs are going to be higher. So those numbers will definitely weigh in on our profitability. But I think once these parks, especially Bhubaneswar and Chennai, stabilize, I think our margins will come back strongly. So that there might be a temporary suppression for this year, and then maybe a little bit of next financial year. But after that, I think it should come back.
Okay. And what about the geographical expansion, on the cards? This year, I know you've laid out the plan, but going forward, any particular areas that you're looking into to foray, and clubbing that question with the kind of capex plans that you have this year?
So for the remainder of the year, the major capex will be from Chennai. So we have already invested roughly about 280 crores there, and I think we have another 250 odd crores to invest for by December. So that's going to be the big capex. We also are renovating our resort in Bangalore, so we are expecting a small capex there as well. For that, we already have raised monies from the markets last year, so we'll be using those. Also, some internal accruals will be used. Going forward, we are also looking at expanding to other states, especially Madhya Pradesh. We're looking at Maharashtra. We're looking at NCR. So there are a few, and Gujarat as well. So we are looking at a few geographies to expand into, and we are actively talking to the state governments to see if we can set up a park. Some of the talks are in advanced stages, and we will definitely be intimating you once the project is finalized.
Okay, Arun, thank you so much for giving us those insights, and all the best for FY26.
Thank you.
All right, now let's turn to our exclusive conversation with Dinesh Thakkar, Chairman and Managing Director of Angel One. We spoke with him inside a Tesla for first of its kind interview discussing Tesla economics and Tesla's influence on India's markets and future catch market talk with Dinesh Thakkar tonight at 6 p.m. The entire conversation, of course, will be live at 6 p.m. today, but listen in to what the conversation is looking like.
Tesla's India's entry has been 10 years in the making, and I'm sure by now you would have seen a lot of reviews on the car, its performance. In this very special show, we're talking about the Tesla, we're talking about the economics of India that allows for a Tesla right now, the demand it could be seen, and why so much excitement about the EV space. But I'm not going to do this by myself. To help me really take you through Teslanomics, I have invited along on this shoot Mr. Dinesh Thakkar. All of you know him, of course, as the force behind Angel One, a veteran market voice. But I don't know how many of you know that he's a complete auto enthusiast and has a garage, which I think is everyone's envy. Thank you so much, Mr. Thakkar, for joining us.
Thank you very much. Thank you very much for this opportunity. As I also am a car enthusiast, so definitely I would really be very excited to drive this car with you and plus engage in markets and plus some talks on my car garage.
Yeah, so by the way, I don't know if you guys know, but he has McLarens, Porsches, and believes in performance over luxury. I think that is one thing that you're going to be looking for. Is this about style and how much of it is about performance?
See, for Tesla, I would say I would look at kind of like innovation, what they have brought in. Apart from being EV, I think this company innovates a lot. And we also being into a field where we believe innovation is going to create deep penetration. So that is a common element what I am looking at Tesla. Tesla is nothing but a computer on wheels. So that way I would say it's more than a car.
You know, the biggest test, at least for any car company and even for a Tesla, is grappling with Mumbai roads. So let's see how that goes. All right, we're starting off our drive, and as has been explained to us, first of all, are you excited?
Yeah, definitely. Very excited.
I promise to drive as well as I can. Thank you. Thank you.
I fully trust you.
So the way this works is pretty interesting. So I have to, everything is on this screen. There's pretty much nothing here in the center of the car. It's very different from what you see. Nothing around the steering wheel. Everything is from the screen. Now, that can be, I think, excellent if once you get used to it. Perhaps right in the beginning, it'll take some getting used to, because that's not how other cars usually work. So here we go. And we're off. So you know what's exciting about this, Dinesh? I feel that the way they've made this so intuitive. I'm going to start the conversation talking a bit about Tesla, and the whole concept of this conversation, of course, with Dinesh Thakkar has been to talk about Teslanomics. Has Tesla's time come in India? We've been waiting for this for at least a decade now. By the time it has come, there are other competitors, but Tesla still has that brand value. So some of your thoughts on that. First, Mr. Thakkar, considering that you are truly a car lover and you believe in performance over luxury.
See, Tamanna, what I see is that Tesla is a company who really innovated and built all their cars from grassroots level as an EV. So technology what they are using is purely thought based on how EV should function, how EV should look like. So you look at all the functions like over here, everything is on the dashboard, which unlike EVs that we see, which are converts from internal combustion engine to this, they are more luxurious car where all the software is fitted. This I am feeling as if it is a computer on wheels. So everything is like so well kind of like designed and so user friendly, and that is really, this is first time I'm sitting as close to steering wheel as I can sit. So I can see all these functions, and that excites me.
Are you pointing out to the fact that I've pulled my seat really up front so that my legs can reach? So you know, when we're talking about Teslanomics, and we spoke a fair bit about the car, I want to link it to and get your view on this consumption boom in India. This is something which I think even market has been betting on since budget this year, because these tax cuts came in. The premiumization theme has been there in Indian markets, in the economy for quite some time. How do you see this product and this launch in that bigger picture? Just as an example, there's a real estate developer who's come into Mumbai for the second time, a Delhi-based developer who's starting apartments at 6.5 crores. So those are the same guys who are going to come out and buy cars like this, isn't it?
Yeah, I think India, in terms of being aspirational and being a big consumption story, still, I think the story has just begun. If you look at current, our per capita income would be average around US 2,800 something, and we have seen big kind of consumption story play out when per capita income goes to 5,000 and 10,000, which is just maybe 5 to 10 years away. So I feel that brands like this who are thinking about being in India and capture this big consumption story, they have to look at next 25 years. They have to look at Viksit Bharat year 2047. And if you look at this category of HNI, what we call, or emerging HNI, who are earning between 50 lakh to 1 crore, that population is growing at the rate of 14 to 15%. So that is the fastest growth across the globe. And brands like Tesla, who are really trustworthy, who can really bank big on this consumption story, they should take serious view about next 10-20 years rather than taking kind of a short-term view. So I believe this consumption story and aspiration story of India has played out well, and it is a beginning, I would say.
Yeah. Just coming back to the point of appetite right now, with what we're seeing in the markets, and I'm just switching gears over there a little bit. That's car.
There are no gears over here, so we have to switch.
So we have to switch gears and drive the conversation in a different direction. Oh, I can do this all day. Okay, I just want to talk about the fact that FIIs just seem to be very, very cautious on India, and which is why you look at corporate results, a mixed bag, not that great in parts, but definitely not the kind of disappointment you should see with the FII selling. What do you think is the cause of concern right now?
I think these last 2 quarters we have seen a perfect storm for our market, where we saw US tariff being uncertain. Definitely it creates uncertainty, and people would like to wait and watch. And we saw even in terms of global inflation, everything was too high. So there is a concern in terms of how US dollar will behave, and geopolitical issues and all that. Things are sorting out. I feel by quarter 3, 4, you will see again corporate earning picking up. As I said, that tariff matter also will get resolved. Good, bad, whatever. What investor wants, certainty. So I'm very kind of hopeful. See, what has kept this market up is retail money. So I'm seeing retail inflows have continued to flow in our market. And today, as we speak, retail is holding around 18% of market cap. So in that sense, even retail is under-owning this asset class. If you look at the way they are investing, the way this asset has appreciated, I was just looking at data. Retail's AUM in the market, direct and indirect, was around 16.5 lakh crore, which as we speak is around 70 lakh crore. So they have seen appreciation of around CAGR of 15% on that wealth. So what I see is that they will continue to remain in this market, which keeps our market steady. Now imagine FIs coming in and putting in around 2 lakh crore per year, what they used to put in. We are going to see a good steady market in terms of liquidity. Now if you look at current account deficit, our fiscal deficit is very disciplined. Oil prices are favorable. So I am seeing lots of reason to be optimist for
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, when you look at the benchmark, after a sharp recovery that we saw yesterday in trade, the Nifty is down close to around 90 odd points around the crucial level of 24,650. The Nifty Bank Index is down around 0.1% in trade. But let's go across to Anushi to get in more details on what's been buzzing when it comes to the small cap space.
Well, thanks for that, Sumit. So, as you talked about the benchmark indices which are under pressure, it's the same that we can say for the small cap and the mid cap indices as well. Pressure persisting over there as well. But there are a couple of counters which are still buzzing in trade, and a lot of them reacting on the back of first quarter results that we are looking at. Firstly, I'll start off with Hester Biosciences. Now, this stock is up over 16%. And what a strong reaction that we are looking just 1 hour after its result. It's seeing these strong kind of gains. Nelcast and Nelco are other counters. Now Nelcast again in focus on the back of its first quarter numbers. Stock up over 12% in trade today. In fact, we will do a deeper dive on these two counters as well. But moving on to some other stocks in focus. Now let's talk about SML Isuzu as well. Now this is one counter that we've highlighted in the past odd month or so. Stock up over 5% in trade today. In fact, in the last 1 month, it has clocked in about 55% of gains as well. So strong gains continue for this counter. Timex Group was another stock which has remained in focus on the back of its first quarter results. Again, locked in a 5% of a circuit is what we are seeing. Now, interesting moves from Seagull that we are looking at. The stock, if you see the last 1 year or so, it has been under pressure, but relatively stronger moves that we are looking at in trade today. Now, coming to some other interesting names that we are seeing is something like a Indo Solar Energy, which is again up over 5%. Now, of course, this stock just making its mark in the exchanges again from June onwards. So this is the kind of return that we are looking at. This is again after it has been in focus after Wari sold stake in this counter as well. An interesting one is also something like a Blue Spring. This is post the demerged company of Questcott that we are looking at, up over 4% in trade today. Of course, focus remaining on the back of the first quarter results as well. So, Soumit, this is the overall picture that we are seeing. Interesting one being Blue Spring as well, since we are going to communicate with the management as well.
Yes, Anushi, we have the CEO of Blue Spring Enterprises, Kamal Hoda, joining us. So, sir, firstly to start off with, yes, first quarter after the demerger that we are seeing, the revenues have increased by around 10%, but there has been some high expenses because of which there has been a loss of around 7 crore. Could you take us through what were the reasons basically why the company reported such a high loss in the first quarter of FY26 post demerger?
Sure. Thanks, Sumit, for having me on your show. So you're right, revenue year on year grew around 13%. We clocked a revenue of 777 crores. EBITDA, was flattish at operating EBITDA at 34 crores and after corporate cost at 24 crores was a flat EBITDA. Quarter one is a seasonally weak quarter for us, Sumit. Two of our high margin businesses, which is food and telecom, have a slow quarter one. Food typically, because 37% of our food business is coming on back of working with education institutions which have those summer vacations. And telecom, basis our past history with this industry, we've seen quarter ones, the rollouts are generally slower. So that is one of the reasons that, the quarter one EBITDA is where it is, but it is as per the plan. We've started this year strongly with a very healthy ACVs and close to around 93 crores of contracts that we won across our businesses. And we started with a 3.1% EBITDA margin, poised to touch close to around 4% as we move through the year by the end of quarter four.
Right, as you were mentioning that the food and telecom segment is seasonally weak in the first quarter, but despite that you have managed to grow both these segments around 13 to 20%. So in a seasonally strong quarter, what is the kind of growth one should expect from these two segments specifically?
See, on an overall basis, what we have put forward for us is a long-term vision of growing 3x of GDP. For this year, this is the first year out of demerger. We want to position ourselves as a company which can grow in excess of 14-15% this year on an overall basis from a revenue standpoint. But from an EBITDA standpoint, we want to really transform the business. And the bottom line, which like I said, we started with 3%, we want to move towards 4% throughout this year.
Hi Kamal, this is Anushi joining in as well. I just want to take your last point in consideration. You said that you want to move in the range of 4%. Now currently in the last few quarters or so, we are seeing a 3% of a mark. Just want to understand the levers that would lead to this expansion that you're looking at for in margins, and is this the range that you maintain for the next 2-3 years, or you see a further uptick as well?
Yeah, thanks Anushi for that question. So yeah, for this year we are targeting to reach to 4%. But yeah, the long-term vision for Blue Spring is to go up to 6% by 2030. The levers for the short term are multiple. One of them obviously is the business mix change. So some of the high margins business will start contributing from Q2 onwards, which is food and telecom, which we operate at significantly better margins at vis-a-vis the other business. The telecom business actually operates in a double-digit margin of 11 to 12%. The food business also clocks around 8 to 8.5% EBITDA margin, which eventually pulls the whole business up. So that's one of the reasons. Even for the other businesses like security, we right now hover around 2.5% margin, and we are pivoting from a man guarding business to more tech-enabled and digital securities, which also is a high margin business. So through which we believe we will be able to pull our security business also from a 2.5% margin to a 3% margins. So these will be the levers for us to move from a 3% to 4%. And we're also working on our cost of operations, and gives us the momentum starting in this quarter itself for us to put out our neck and say that we'll be able to do a 4% by end of this year.
Okay, so that's fair to understand. Just want to get more perspective on this. You said that telecom and security services mix is expected to increase. Just want to get a breakup in terms of how the mix will change compared to facility management, which contributes the highest currently. Along with that, even if you look at Founded, which is in which you're invested in, want to understand what is the kind of profitability that we should be expecting from here, because currently you're incurring losses. So just wanted to understand the path for that as well.
Sure. So from a mix perspective, there won't be very significant change on a full year basis. Quarter on quarter, obviously the mix will undergo change because of seasonality in two businesses. 60% is what we make from our FM and food business on our revenue. So that will continue to be at 60%. Telecom and industrials share will go up, and security, which contributes right now around 19% on an overall basis, on a full year basis, should drop from 19% to close to around 17%. So this 2% further increase will come from telecom and industrials. As far as Founded is concerned, we've been constantly bringing down our losses. This year, the operating EBITDA loss for Founded is close to around 16 crores. We've rehashed the whole product, the UI UX of the product, the latency of the solution, and we believe on the back of it, from a present quarter where we've reported a 20 crores revenue, by the end of Q3 we are hopeful that we should be in the range of 30 to 35 crores of revenue, and obviously the cost base also from a quarterly basis will reach to that level, which gives us confidence that by Q3 we should have a break even for Founded business.
Right, sir. When it comes to the telecom segment, yes, Q1 was seasonally weak for you, but I was listening to the Industar call yesterday, and if you look at the capex trend of telecom companies as well, it's been on a decreasing trend. So why are you so confident that the growth will be solid when it comes to the telecom business as well going forward?
So yes, obviously if you look at from last couple of years where this industry has grown in excess of 30%, this year probably would not be a 30% year. For telecom specifically, we are expecting that we should grow 15% year on year. There have been large rollouts that have been done for two of the large telecom players in the previous years, but this year the other two players in the market are actually doing significant expansion. So both we are working with the other two players, one a government player and the third large player, which gives us confidence that we should be able to do 15-16% growth in our telecom business this year.
Also, you are looking to focus more on the high margin surveillance system business, and you have also launched the smart home solutions. If you could share some more details on what is the kind of revenue trajectory that you're eyeing from these new launches and the high margin surveillance system here?
Yeah, sure. So see, security, these businesses are relatively very small. We recently invested in a very large command center, and digital security is what our focus is. So on a quarterly basis, out of the 150 crores of revenue that the security business clocks, right now the digital security is only a couple of crores. We want to, through the launch of these products, we want to focus on these businesses and also try and give end-to-end digital security solutions along with obviously the man guards. So we've got 22,000 plus security guards. So we want to combine a man guarding and a tech guarding solution. We are doing some large pilots with a couple of large banks. So we're trying to do the whole e-surveillance of their branches and ATMs to the security solutions. So this business right now contributes a very insignificant amount of a couple of crores in the 150 crores top line of security. But we want this couple of crores to grow by the end of this year to at least 10 crores on a quarterly basis.
Okay, and Kamal, my last question to you is about the capex plans that you currently have, especially considering that you already have more investments lined up for Founded as well. Just want to understand that.
So Anushi, we are an asset-light company. We do not have any significant capexes planned for ourselves for this year.
Okay, well, that was fair to understand. Thank you so much for joining in. So that was the management of Blue Spring Enterprises that we are looking at. But let me take this across to Vaibhav Vidwani, who's the fund of research analyst joining us from Bonanza Portfolio today to discuss the various stocks in the small caps space that we are covering. Vaibhav, coming to you firstly on Blue Spring Enterprises, just want to understand your outlook on this.
As companies is into the sectors which are growing very aggressively, so company can deliver the guided numbers in upcoming years. But if we see their revenue expectations are of near about 10% growth, and they are expecting margin to reach to 4%. So my view is that currently company is trading at a PE of 62. So if in future we are getting more higher targets and company, as we know, that is taking a lot of good initiatives, then surely we can invest. But in near terms, I'm little cautious.
Right. With that, let's also welcome in our next management for the show today, Vishwanath Mahindra, ED and CFO of Niva Bupa Health Insurance. Firstly, to start off with, in the first quarter, we have seen a significant spike when it comes to claim. In fact, the claim number was at its highest at least in the last 5 quarters. Could you explain what led to this jump in the claim ratio?
Yeah, good afternoon, and thanks for having me here in the show. So let me explain this increase in claim ratio by giving some perspective of the accounting change which happened last financial year, mid of last financial year. So the numbers which are there on reported basis, statutory financials, these are not on like-to-like basis. There was a change in how the multi-year policies need to be accounted for. So they have to be accounted for on 1/n basis under Indian GAAP. And as a result, the GWP has changed, and as a result of change in GWP, other metrics like NWP, which is net return premium and net earned premium, all that has changed. So loss ratio is basically a ratio of claims to net earned premium. Because net earned premium has changed, that's why you see the loss ratio elevated in this account. But since we are part of Bupa, and Bupa is on international financial reporting standard, we do publish our results on IFRS basis also, and we have been doing that for last 2-3 years. And on IFRS basis, there is no that much spike in loss ratio. It has only gone up by 2.9%. So IFRS loss ratio last year first quarter was 63.9, which is 66.8%. And we have disclosed our IFRS results also. And that has been more than offset by decrease in expense ratio to the tune of 3.6%. So our combined ratio on IFRS basis, in fact, has gone down by 70 basis points.
Right, sir. And how should one look at this number for the second quarter and for the full financial year?
Yeah. So again, this noise will be there in Indian GAAP because of this change in accounting for this financial year and some part of for next financial year also. So our guidance to people, analysts who are looking at our accounts is to look at IFRS accounts because that is consistent. There the premium and expenses like acquisition costs, they are amortized over life of the policy, and that will be consistent. So there will be some volatility in numbers which are there reported on IGAAP basis, Indian GAAP basis. And I would like to mention here that INDAS standard has been notified in India, and IRDA has communicated that this will become statutory reporting standard from 1st April 2027. So in that perspective also, it's important to look at numbers in that basis.
Okay, fair to understand that. Mr. Mahindra, just want to get your sense on other metrics as well, like net premium earned also. What's the kind of trajectory that we look forward for FY26 for this number?
Yeah, so if you see on like-to-like basis, our gross return premium has increased by 28%, although that is not the one which is being reflected in statutory account is only 11%. And because of this accounting change, that 28% growth rate, what we have experienced in quarter one, this is in line with our past historical number. our guidance is that we would like to continue growing higher than market in retail health, 5 to 10 percentage point higher than market to gain market share. That's something which we have been doing in the last few years, and that's the guidance I can give you, Anushin.
Sir, now you had mentioned that you will end FY25 with a combined ratio of 98, but you ended up with 101 there. Now the combined ratio has spiked to around 116% in the first quarter. What happened here? What do you expect the number to end in FY26 here?
Yeah, so Amit, so actually this is again combined ratio is a function of it's an addition of loss ratio and expense ratio, because loss ratio has gone up because of change in accounting. So it's more optical that this combined ratio is looking on higher side in this Indian GAAP accounting standard. But if you see our combined ratio, and we have
Okay, and considering the expenses of management, I think there is some issue happening with the management, but till then, Samit, if you look at the other numbers also, now as he just was speaking about the combined ratio that rose to the likes of 117% as compared to 106%. Now, even if you look at the other side, if you look at the expenses of management ratio, that was more controlled at the levels of 35.9% versus 40%. In fact, I just want to address that with you, Mr. Mahendra. Just want to get a sense in terms of the expenses of management ratio that we are looking at. Would this number be more sustainable to look at going forward?
Yeah, so our expense of management on the basis of GWP, it is 35.9% for this quarter. This is to be seen in the context of how much is allowed. So for Sahis, it's 35% plus some allowances for InsurTech and awareness of insurance. So that comes to 35.8%. So we are just 10 basis point above the threshold. So we are very confident of coming within regulatory allowed, which is 35% plus some allowances for the whole financial year.
Okay, and Mr. Mahendra, now I just want to address price hikes also. In fact, if you see the last quarter or so, you've taken about 7%. Just want to understand, are there further price hikes also on table? What's the kind of route that you want to follow on that path?
Yeah, so different products have different cycle of, coming for price change. And so that's been our practice, that we increase premium for all those mature products by high single digits. Let's say our medical inflation is 6%, and there is a couple of percent point for change in mix, higher incidence rate, etc., due to change in mix. So that's been our practice. We would like to continue to increase premium on single digit for all mature products.
Right, sir. So last question from my side. Now, you had earlier mentioned that Bupa Singapore may look to increase its shareholding in the company as and when the FDI regulations are tweaked. Now that the FDI regulations have been tweaked, and so is Niva Bupa Singapore looking to increase stake? Any conversations on that front?
Sumit, to my understanding, I think this bill is not yet passed, but whenever it is passed and whenever they allow beyond 74%, they may look at it. Of course, it depends on situation. If there is requirement of higher free float, they will be supportive, but they would not mind increasing or keeping it same. Depends on what is right for the company.
Right, sir. Well, thank you, sir. Thank you for joining us and explaining explaining the quarter gone by.
Thanks.
Right. Vaibhav, coming to you on this counter, how are you looking at Niva Bupa currently? Would you advise investors to go ahead and buy the 6% fall that we are seeing currently in the share prices?
Yes, I am quite optimistic about this stock because of the change in accounting. They have reported stress numbers. Otherwise, their numbers are quite robust. And earlier also, they have delivered better than industry growth. So I am quite optimistic about this stock. We can still expect a near about 15% upside as per the guidance given by the company, if you will consider all those factors.
So that was the outlook that we are seeing for Niva Bupa Wealth. But let's also address something like a Credo Brands. Now, this is in focus on the back of its first quarter results. What we are looking at is a revenue downtick of about 3%, margins also at 25.8%. Vaibhav, just want to understand your outlook on the stock.
If we see this quarter, their operating expenses are increased because they are trying to increase their market in digital sales. So and they have shown good numbers in that area. But that stock is currently trading at a lower PE than industry because they have not delivered such type of growth as other companies are delivering. So still my view is quite pessimistic about this stock. We should wait for the results of upcoming quarter that how they are performing, and as per that we should take our decision.
In fact, the stock is locked in a lower circuit as we are looking at the screen. 20% of a downside is what we are seeing. But Mahima, talk to us about these first quarter results. What's the outlook here that's building on?
Right, so basically, before I go on to the first quarter earnings, Credo is basically is into business of selling casual fashion clothes and commonly known as the Mufti brand. In terms of the overall quarter, weak set of numbers for sure, and that's reflected in the kind of stock movement today as well. But they are focusing on premiumization going forward is what they've said, and they've given a good store guidance as well. In terms of numbers, revenue down 3.2%, EBITDA down 7%, margins at 25.8 versus that of 26.9%, and overall net profit down by 35%. In terms of the overall sales mix, the EBO stands around 63%, multi-brand outlet stands around 17%. Overall online sales contributes around 11%, and others is around 5%. In terms of the product mix, shirts is around 41%, t-shirts around 12%, bottom wear around 43%, and overall for others is around 4%. But in terms of the strategy update, and this was the highlight of the entire investor presentation that I went through, is transitioning into premiumization is something that the management has guided. They are reinventing the stores, redefining the brand experience as well, and increasing focus on digital channels. Lastly, in terms of store guidance, they're set to add 20 odd stores in terms of premium stores in FY26 is what they've said. So this is the overall view of how the quarter has gone by, and of course what is ahead for the company.
Right, Mahima, thank you for giving us all those details. Nelco is another stock that has been buzzing in trade. The stock is up around 7% in trade today. Well, if you look at the 3-year revenue CAGR for this company, just 5.5%. Margin trajectory has been on a downward trend from 20% that we had seen in FY23. It has come down to 14%. Net profit has also halved from 20 crore in FY23 to 10 crore in FY25. Now, what does Nelco do? It provides satellite communication services to group networks. It provides VSAT services, maritime communication, and it's a subsidiary of Tata Power actually. Tata Power owns close to 50% stake in the company. Now, recently, if you look at on June 17th, the company had received some approval from the government where they were for a grant of unified license for VSAT, which is a virtual network operator, and this license was for authorization for services in national level. Well, this could enable the company to extend the satellite communication services to resellers, and that's what the recent announcement was. And nothing much has come in this counter so far, and neither the financials look that great. Vaibhav, have you looked at this counter, this 6.5%, anything that you're hearing when it comes to Nelco?
Yeah, so if we see in Nelco, currently stock is trading at a very higher P of about more than 200, and they are into domestic satellite services. And there's news in market that there are chances that they can have a deal with Starlink for the satellite internet services. So we should wait for that what is the truth, and what will happen in upcoming quarters. Are they going to get that order? And as per that, what will be their revenue growth? So after considering all those factors, we should look for this stock. But at this point of time, my view is quite pessimistic.
Okay, so a pessimistic view is what we are seeing for Nelco. But thank you, Weber, for joining and sharing perspective on various of these counters that we have discussed. But that's all that we had on this edition of Small Cap Buzzers. Do stay tuned to NDTV Profit. India Market Close coming up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the
watching India Market Close here at NDTV Profit. I am Mahima Vachrajani. With me is Neeraj Shah and Harsh Saita. Let's take a quick look as to how the markets are doing. Markets near its day's lows. The Nifty 50 trading about 0.5% lower. The Bank Nifty also under pressure, down by about 0.3%. Let's try to pull up the Nifty 50 chart if we can and see how the chart is fared throughout the day. But before that, let's take a look at Nifty heat map as well. Trend stealing the show, up 5% almost. Aisha Motor on the back of earnings, up 2%. Nestle, ITC, Asian Paints, a lot of consumption names buzzing in trade today, and that's the reason as to why Nifty FMCG could also be one of the top gainers on the sectoral heat map as well. There's also Kotak Mahindra Bank, Bajaj Auto, Reliance seeing some gains, but clearly Sun Pharma under pressure on the back of earnings, down 5%. Dr. Reddy's, Cipla, a lot of pharma names under pressure. Dr. Reddy's down by about 4%, Cipla down 3%. Tata Steel also under pressure. Second day of pressure for Tata Steel as well. Infosys, Tata Motors, Maruti, Wipro all seeing a downtick of about 2%. Let's try to pull up the advanced decline ratio because that will tell us as to how the broader markets have fared. There you go. But that paints a better picture than the benchmark indices because the gap has widened since the middle of the day, and there are 764 odd advances versus that of 1500 odd decline. So there's of course sellers market today, and the ratio is roughly 2:1. Let's also take a look at the sectoral heat map before I go on with the broader markets. The Nifty FMCG topping the chart, up 0.8%, although paired of gains a tad bit, but still trading higher. Nifty Media, Nifty Consumption doing well, but Nifty Pharma under pressure, down by about 3%. Nifty IT also is under some serious pressure, down by about 1.5%. Nifty Metal also seeing downtick of about 1.3%, and Nifty Defense continues to see profit booking. But how are the broader markets doing?
Well, suffice to say, you mentioned the advanced decline ratio, right? We should pull that one up. I mean, the mid caps are down about 0.5% and close to the low point of the day. I would reckon the small caps would be doing a similar thing as well. So let's pull up the advanced decline ratio of the market breadth, because we know that the indices broadly are at the lowest point of the day, and the market breadth is at the worst point of the day, if you will. So that's the first point to keep in mind. Now, the key takeaways from a market mood perspective: IT is corrected another 1.5%, and now it's down over 10% in the last 1 month alone. So that's the first thing you got to bear in mind from an index perspective. And retail stocks are buzzing on alternate days, finding favor. One day it's Avenue Supermarts, one day it's Trent, one day it's something else. Today it's Trent's turn with the 4.5% uptick that we've seen on this one as well. Individual pockets, the casualty of the day today, 17.5. You could also call it the stock of the day, and we're going to talk about it a bit later on. Weak quarter one, or weak commentary from IIFL Finance, but quarter one weakness for Symphony as well, and that stock saw a 2% downtick. Positive news flow is coming for Inox Wind and Suzlon. And Suzlon has gotten an order as well, which is why the stock was up 7%. At 52-week highs, stocks like GVTND, Hitachi Energy, and Radico Khaitan, and some price volume buzzers, if we can get them up on the screen. Look at the kind of volume activity in all of these stocks which are moving up. Netweb, Indegene, TBO Tech, some pretty splendid moves. Anything else, Harsh, that you're spotting?
Well, PNB Housing is down 17.5%, so that one's in focus. I'll stick with the NBFC pack. You also have an IIFL Finance, which is down over 7%. Again, numbers, commentary, not exactly appealing, and that one also reeling under some bit of pressure. But it's not all negative, frankly. A couple of positive buzzers as well, just pulling those out. But yes, so broadly, you're seeing results reaction dominate at this point. Suzlon is up nearly 8%, and RHI Magnesita is up over 5.5%. So those are some buzzers on the positive side. Let's take it across to Ruchit, get a perspective from him with regard to how he's viewing the index. Ruchit, what next on the index? We're seeing pressure, of course, and this week hasn't been the best week for markets either. What next?
Yeah, hi, very good afternoon, Harsh. Very good afternoon to everyone. Well, what we have seen in last 1 month, the entire July series has been a corrective phase for the markets, where Nifty has corrected by about 1,000 points from the high that it made. Now, regarding this tariff news flows which are there's some more uncertainty, it seems, going ahead for the market. And frankly, markets does not like uncertainty. Even if the deal, whenever the deal will be done, whatever the tariff rates are, I think markets will discount in very soon and then start the next leg of momentum. But till then, till there is uncertainty, we don't expect the markets to show any kind of trended phase coming in the near term. So even if you look at the FI's long short ratio, then the long short ratio is just around 10%, means they're starting the series with 90% long short, 90% positions on the short side. Although historically we have seen that these are short heavy positions which generally gets squared off or shorts get covered. But when you start the series with 90% itself, that does not necessarily mean that short covering would be done immediately, at the start of the series itself. We have seen times where the short heavy positions remain at similar levels for a few days or maybe for a couple of weeks, and markets try to show some consolidation or trade with some negative bias just because of lack of buying interest, even though no fresh short formations are there. So considering all these factors, we are of the opinion that the price wise downside may be limited from here on, because we have already seen a correction in last 1 month. But there are high chances of some time wise correction getting continued in the overall market. On the low side, 24,600 is the immediate support for the Nifty. If 24,600 breaks, then 24,450, 500 would be the next support zone, where previous swing lows are there of last 4 to 5 months. So on the downside, we are watching these levels, but considering all the data points, we are of the opinion that until there is clarity on the tariff front, markets would go through a time-wise corrective phase where it would trade within a broad range. On pullback moves, it would face resistance towards 24,800, 25,000, whereas on the low side, 24,600, 24,450 would act as a support. So the momentum would clearly be missing, and some sideways price action is what we are anticipating.
Ruchit, hi, good afternoon. Any trade in Bank Nifty?
Yeah, hi, very good afternoon, Mahima. So overall, I think there's just a lack of leadership from many of the banking names, except one or two, which is ICICI Bank or HDFC Bank. But apart from, if you see, then the banking names are also not showing any such kinds of buying interest coming in. And the major support for the Bank Nifty index would come around 55,100 zone, which is still about 600 points low from current levels. So I think one should wait for such kind of correction. If we get index towards that 55,000, 55,100 range, then the stop losses would be smaller and the risk reward ratio would become favorable to take some contra trades there. So it just seems to be a corrective phase within an uptrend, but around 55,000, the risk reward ratio would become favorable to take contra buys there.
Ruchit, your picks for this afternoon, Ruchit?
So a couple of recommendations, one on the buy side and one on the sell side. On the buy side, we are recommending to go long on Asian Paints. So probably just looking for opportunities in such stocks where the stocks has not moved much in last few months, so that the risk reward ratio become favorable. And even if there is unwinding of positions, the chances of unwinding in such stocks are very low. So Asian Paints is one stock which technically is looking bullish. A rising channel has been seen, and the prices are trading near the lower end of the channel. So the downside seems to be limited from here on. Can be bought around current levels with stop loss below 2,400 for potential up move towards 2,480 to 2,500. And BPCL is one stock where we are recommending to go long, to go short in the future segment. Primarily, the stock has breached its 100 MA supported in today's trading session with the formation of low top, low bottom structure. So this is one stock where we expect some more selling pressure to come in. With stop loss about 329, traders can go short in the future segment of BPCL for potential near-term targets around 304.
Ruchit, what about Suzlon, up 8% on the back of that order win? Just want to get a sense, if a trader wants to enter into a counter like Suzlon right now, is this the right time or should he wait?
So there's a good buying interest in such markets because of this news flows that we have seen. If you look at today's volume, then the volumes are much better than what we usually see on a daily basis. So this clearly indicates that irrespective of market moves, some relative outperformance could be continued in Suzlon. But yes, if you ask me for fresh buying entry after 8% up move and 2 and 3% up move, which was yesterday. So almost the stock is up 11 to 12% in just a couple of trading sessions. So I think one should look to enter in a staggered manner where maybe some quantity bought can be bought even at current levels, but keep some room to buy more only if we get dips, so that the risk reward ratio become favorable. On the lower side, 62 to 63 would be the good support, so that in case if we get any dip towards that range in the near future, then those would be good levels to go long on Suzlon.
Okay. Ruchit, what about trend? Up almost 5% as we speak, and I believe this is the consumption trend that's probably bucking up the stock. But any trade there? The earnings are yet to come, of course. But if you want to look at the technicals, what is the support and resistance that you're seeing?
So far the stock has been an underperformer in last few months. The recent pullback move also got sold into around 6,200, after which we have seen a sharp correction. So today, yes, definitely there has been an up move irrespective of markets correction, but it's more or less, I think, just because the momentum readings were oversold. So this can be taken just as a pullback move, no signs of trend reversal or any kind of no significant uptrend coming in. So pullback move only, it seems. Resistance would be seen around 5,450 to 5,500. So maybe some more up move about 150, 200 rupees could be seen in the short term. But really no signs of no any kind of trended phase coming in and going ahead.
Ruchit, thanks for that. Giving us your quick thoughts. We'll let you go on that note. As we're joined in by management of City Union Bank at this hour. Management conversation. Mr. N. Kamakodi, who's the CEO at City Union Bank, joining us. So very strong performance, frankly. So let me give you credit with regard to Q1 FY26. 16% growth clip, YOY, 2% sequential. It's one of the stronger performances from some of the smaller banks. You believe that that's sustainable through FY26, this 16, 17, possibly even inching up to 18% kind of growth possible?
See, when we declared our results for the fourth quarter, we, like I said, we expect we will be having about maybe about 3% or so over and above the growth rate of the industry. So with that, we moved and we are able to have about 16% growth for the current level, and we are trying to push for that, sustain that level as we get into the year. But at the same time, like like say the focus is to ensure that we grow at least 3% over and above the growth rate of the industry, and but our endeavor will be to maintain the current level of 16%, whatever we have maintained currently.
So this 3% above industry, I would believe that's just a metric, because the underlying growth will come from the fact that whether growth opportunities for you are available or not. So, and whether in the right pockets or not. Where exactly are you looking to grow?
We have, like say, almost more than 80% of our portfolio mainly coming from the MSME, commercial trading activities, and agricultural loans, including the gold loan. They together constitute about 80 to 90% of our overall loan book. And our growth is broad-based, and we are able to see growth across segments. And in fact, rural credit using the JOL loan is particularly, like say, helping us to sustain our growth. The issue is, like as you started, there are multiple, like say, uncertainties. Like say, for example, in MSME, textile is a major sector for us. There, the tariff and all which are coming and all, even though they don't have anything at this point of time, there are, like say, for that 1 or 2% fluctuations, there are multiple, like say, the environment has to support us, but we are putting our best efforts to maximize our growth, and 15-16% looks to be reasonable, but we always need to have that, like say, cushion, particularly when we present to you, or probably the set the expectations probably for you all.
Point taken, sir, and always good. Under promise, over deliver. Sir, with regard to your credit costs, they've been in a quarter where some pockets have faced plenty of pressure. You're not seeing any of that. In fact, they've tapered off on a sequential basis. What's the trajectory and outlook like for FY26? Any concerns that you see in any specific pockets?
See, last financial year, we had about, let's say, close to 800 crores of overall slippages, and we hope the figures, whatever we see currently, they definitely we should have much, like say, lower than that figure is what we are expecting at this point of time. And in fact, even in yesterday con call, we clearly explained like say, even though we hear from some of the other financial institutions that there are some amount of like say stress building up, we don't see that. And at this point of time, all the matrices, be it SMA numbers and other related factors, whatever we see are pretty comfortable. And almost for more than 4-5 quarters, we could continuously see a situation where our recoveries from the NPAs are like say over and above the incremental slippages. So we feel like say based on the information whatever we have at this point of time, we should be able to have like say the better slippages and a better recovery for the current year compared to previous quarter is what previous financial year is what we expect at this point of time.
Mr. Kamakodi, Neeraj here, just one macro question. There's fair degree of chatter around whether this earnings season is an indication of the kind of growth that India Inc. can show, and thereby GDP growth can come in as well. And naturally, growth rates for banks will be, in some sense, a lever of what the GDP grows as well. How constructive are you for the rest of the year? Because frankly, if I look at the India Inc. numbers for Q1, they were maybe a tad bit lower than estimate and not a very exciting print on a consolidated basis. So just trying to understand, how do you think about it when you think of how much you can grow for the next 6 to 9 months? Because it will be, as I said, a lever of what the overall GDP growth is.
See, we are bankers for MSME, commercial trading and agriculture and rural credit, having our significant presence in Tamil Nadu and a reasonable presence in the 4 southern states. Maybe like say extrapolating for the entire economy may not be like say probably okay, but at least what we feel, I just want to share with you. Say we had a period, particularly post-COVID, particularly in the sectors including MSME, which we are catering to. The discipline in using the bank credit has substantially increased, and people have like say very judicious in utilizing the credit, much better than what it used to be say 5 years back or 10 years back and things like that. And we faced post-COVID about 4 or 5 years where people were not going for incremental credit at all. But after many years, particularly, we could start seeing both inquiries and also some amount of investments. For example, particularly, we could clearly see a lot of MSMEs are going for solar so that they can take care of their power expenses and all. It is something similar to how this sector, particularly textile, invested in the like say wind-based like say renewable energy sources about 15 years back, and we had a good amount of period which improves the efficiency for the units, like say factories which are functioning on that. We are able to see some amount of incremental investments which are happening, which have started happening, and so there is the hope that like say the credit growth should improve is there. And one more thing, the investment cycle particularly starts picking up as any economist will say, when the capacity utilization of the economy crosses say 85% or so. Still we are like say around 80 only, still some more like say distance to be crossed. So but we hope this decreased interest rate scenario will activate the like say the businesses and particularly the manufacturing sector to go for incremental investments, and we should be seeing like say good progress as we move forward. And taking the learning from like say the after the atomic bomb, like say the late 90s.
Right.
So I think the virulence in the particularly the manufacturing sector should improve as we move forward, and things are pretty stable and looks are promising.
Okay. Okay. We'll leave it at that, sir. Thank you so much for taking the time out and being with us. Appreciate your time.
Yeah. Thank you.
Well, that's one word, in fact, and one more corporate word. In fact, as we hit that break, hear out this word, a short slice of our exclusive conversation with Dinesh Thakkar, Chairman and Managing Director of Angel One. We spoke to him inside a Tesla for the first of its kind interview discussing Teslanomics and Tesla's influence on Indian markets and the future. Of course, the whole show plays out at 6 p.m. today, but here's a sneak peek.
Tesla's India's entry has been 10 years in the making, and I'm sure by now you would have seen a lot of reviews on the car, its performance, etc. In this very special show, we're talking about the Tesla, we're talking about the economics of India that allows for a Tesla right now, the demand it could be seen, and why so much excitement about the EV space. But I'm not going to do this by myself. To help me really take you through Teslanomics, I have invited along on this shoot Mr. Dinesh Thakkar. All of you know him, of course, as the force behind Angel One, a veteran market voice. But I don't know how many of you know that he's a complete auto enthusiast and has a garage, which I think is everyone's envy. Thank you so much, Mr. Thakkar, for joining us.
Thank you very much. Thank you very much for this opportunity. As I also am a car enthusiast, so definitely I would really be very excited to drive this car with you and plus engage in markets and plus some talks on my car garage.
Yeah, so by the way, I don't know if you guys know, but he has McLarens, Porsches, and believes in performance over luxury. I think that is one thing that you're going to be looking for. Is this about style and how much of it is about performance?
See, for Tesla, I would say I would look at kind of like innovation, what they have brought in. Apart from being EV, I think this company innovates a lot. And we also being into a field where we believe innovation is going to create deep penetration. So that is a common element what I am looking at Tesla. Tesla is nothing but a computer on wheels. So that way I would say it's more than a car.
You know, the biggest test, at least for any car company and even for a Tesla, is grappling with Mumbai roads. So let's see how that goes. All right, we're starting off our drive, and as has been explained to us, first of all, are you excited?
Yeah, definitely. Very excited.
I promise to drive as well as I can. Thank you. Thank you
I fully trust you.
with this. So the way this works is pretty interesting. So I have to, everything is on this screen. There's pretty much nothing here in the center of the car. It's very different from what you see. Nothing around the steering wheel. Everything is from the screen. Now, that can be, I think, excellent if once you get used to it. Perhaps right in the beginning, it'll take some getting used to, because that's not how other cars usually work. So here we go. All right. And we're off. So you know what's exciting about this, Dinesh? I feel that the way they've made this so intuitive. I'm going to start the conversation talking a bit about Tesla, and the whole concept of this conversation, of course, with Dinesh Thakkar, has been to talk about Teslanomics. Has Tesla's time come in India? We've been waiting for this for at least a decade now. By the time it has come, there are other competitors, but Tesla still has that brand value. So some of your thoughts on that. First, Mr. Thakkar, considering that you are truly a car lover and you believe in performance over luxury.
See, Tamana, what I see is that Tesla is a company who really innovated and built all their cars from grassroots level as an EV. So technology what they are using is purely thought based on how EV should function, how EV should look like. So you look at all the functions like over here, everything is on the dashboard, which unlike EVs that we see, which are converts from internal combustion engine to this, they are more luxurious car where all the software is fitted. This I am feeling as if it is a computer on wheels. So everything is like so well kind of like designed and so user friendly, and that is really, this is first time I'm sitting as close to steering wheel as I can sit. So I can see all these functions, and that excites me.
Are you pointing out to the fact that I've pulled my seat really up front so that my legs can reach? So you know, when we're talking about Teslanomics, and we spoke a fair bit about the car, I want to link it to and get your view on this consumption boom in India. This is something which I think even market has been betting on since budget this year, because these tax cuts came in. The premiumization theme has been there in Indian markets, in the economy for quite some time. How do you see this product and this launch in that bigger picture? Just as an example, there's a real estate developer who's come into Mumbai for the second time, a Delhi-based developer who's starting apartments at 6.5 crores. So those are the same guys who are going to come out and buy cars like this, isn't it?
Yeah, I think India, in terms of being aspirational and being a big consumption story, still, I think the story has just begun. If you look at current, our per capita income would be average around US 2,800 something, and we have seen big kind of consumption story play out when per capita income goes to 5,000 and 10,000, which is just maybe 5 to 10 years away. So I feel that brands like this, who are thinking about being in India and capture this big consumption story, they have to look at next 25 years. They have to look at Viksit Bharat year 2047. And if you look at this category of HNI, what we call, or emerging HNI, who are earning between 50 lakh to 1 crore, that population is growing at the rate of 14 to 15%. So that is the fastest growth across the globe. And brands like Tesla, who are really trustworthy, who can really bank big on this consumption story, they should take serious view about next 10-20 years rather than taking kind of a short-term view. So I believe this consumption story and aspiration story of India has played out well, and it is a beginning, I would say.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint.
India market closed right here on NDTV Profit, and but the markets have come off in the broader end of the spectrum, particularly so. Just want to mark the UPL numbers. Very good set of numbers. Graphite India pieces are out as well, and unlike HEG, there is some things disappointed the street on graphite, and that stock is down 7%. Some expansion plans, 600 crores for graphite electrodes capacity addition. But anybody who looks at this industry very closely will tell you it's a process of bottoming out. So I don't know if this weakness will get bought into or no, but keep an eye out for Graphite India. But UPL, the numbers looked rock solid. Revenues were up 1.6%, which is fine. But I think the operational performance probably a lot better. And we'll get in Varsha in moments from now to talk about this. But while we wait for Varsha to come in, as you can see, the net loss has narrowed too. While we wait for Varsha to come in, let's get in my colleague Sumit Sarkar to talk about what is it that the dealing rooms are talking about today. Sumit, thanks for joining. I don't know if the dealing room spoke about PNB Housing at all or no, but independent of that, what is it that you're learning?
Well, PNB Housing, there was no chatter on the street.
No chatter.
And no chatter at all. And what some analysts are telling is that he might be going back to Carlyle and not joining any other firm.
Girish Kausgi.
Yeah.
Okay.
So we still do not know this. This is also not confirmed as such. This is what the indication is. So yeah, that's what we have on his exit. But other stocks that remain in focus, firstly it's Jubilant Pharma. One, dealers indicate that smart investors have started to accumulate this counter. The stock is down today in trade owing to the additional Trump tariffs on Canada. But they understand, but some dealers are indicating that Jubilant Pharma products are exempted under the existing United States, Mexico and Canada agreement trade treaty. So there won't be any impact on Jubilant Pharma is what their understanding is. For Federal Bank and ABB, dealers are indicating that there are sell flows on large HNI desk ahead of the Q1 numbers. Now for ABB specifically, do remember that on Monday morning the parent company will also report the numbers. For City Union Bank, sell flows are seen at higher levels on the DI desk on valuation concerns. If you look off late, the stock has outperformed the Nifty Bank Index quite sharply. For Paytm, there's a buzz of a potential block deal that could happen soon. The timing and the seller is not known yet, but this is what the dealing room is understanding. But this could well be a cleanup trade is what dealers are indicating. For SBI, dealers are expecting some passive flows that could come in going forward post the QIP that the bank has done. And for KP Energy, there are buy flows on large HNI desk in trade today. So keep an eye out for KP Energy as well.
Interesting. Okay. The stock is of course down in the session today, but some interesting names out there. Sumit, suffice to say that with the market activity the way it is, the excitement around hints for ideas and the movement that happens in stocks has come off a little bit in the last 2-3 days?
Well, yes, it has come off a little bit because given the fact that volatility has increased much, making money is not that easy right now in the market is what people are saying. Hence, not much ideas are coming into the market as of now.
Yeah, most certainly, because I hear from a lot of people that somehow a lot of smart money also at times is trapped. I don't think too many people anticipated the swiftness of the corrective move. I don't think too many people anticipated that there will not be a resolution around the trade deal before the August 1st deadline as well. I mean, we might still have a resolution because there is, I think, August 7th, due to procedural reasons, it's been the 25% tariff has been extended to August 7th. But let's wait and watch how this shapes up. Let's pose those questions, by the way, to Kunal Shah of Mirae Asset Sharekhan Johnson to talk about the charts and the derivatives. Avinash Goroshekar on the fundamentals. Gentlemen, both of you, thank you so much for taking the time out. Kunal, let's start off with you. How weak is it looking, particularly for the broader end of the spectrum currently?
Good afternoon, Neeraj. I think definitely if you look at this, the last week when we had met, our view was still the same, that the index Nifty specifically is trading in a downtrend where lower top, lower bottoms were there. Until the time we don't surpass the 20 DMA, the trend doesn't change. So I think bounces is utilized as an opportunity to initiate sell. Yes, yesterday was the case where there was a monthly expiry, and that is where we saw some momentum from the lower levels. But overall, the structure still remains on the weaker side. So our lower end target for the Nifty has been 24,450 is what we are targeting for the Nifty indices on the downside. So that is where we expect further correction coming in. Any intraday bounce should be a selling opportunity. For the Bank Nifty indices, here it is trading in a broader range where 56,500 is the resistance and 55,500 is the support. But within this range, again, for the bias continues to be on the negative side, even for the Bank Nifty indices. And once we break 55,500, we will see some aggressive selling pressure towards 55,000 or 54,800 levels on the downside. So Bank Nifty also bounces. What you get should be an exit opportunity. On the higher end, the resistance for the Bank Nifty is placed at 56,500. So till the time that is not taken out, the view remains negative. Utilize bounces to again sell the indices.
Kunal, what about your picks for the day?
So I think in this volatile markets where we are seeing the broader market specifically getting corrected a lot. So there are a couple of stocks. One is on the buy side, one is on the sell side. The sell side is on the IT space. So I think IT still has correction left. And your persistence is the stock which is there on my radar. A consolidation breakdown is what we are expecting. 5,200 should be a stop loss on the downside. I am expecting targets of 5,000 to 4,900 on the downside. So that will be the first stock which will be there on the sell side. Second is on the buy side, and that is JK Cement. I think the structure is looking good on the chart. There is a upward consolidation breakout in the stock. There has been decent volumes in today's trading session, and we expect this move to continue on the higher end. So one can buy JK Cement with a stop loss of 6,600 and looking for a targets of 6,900 to 7,000 on the upside.
Okay, Avinash, hi, good afternoon. If you've had the chance to look at UPL, prima facie the numbers seems to be good. Losses have narrowed significantly. EBITDA has seen a good uptick. Any reading there? How are you picking that up?
Yeah, I think my guess is numbers have been operationally quite good. In fact, I think just like all agro companies, the operating EBITDA has improved quite significantly. And I think the second quarter also should be equally stronger or much better because, typically most of the agro companies, the first half is supposed to be a very remunerative period for them. So my sense is that the second quarter could be much better. And in fact, they're not going to be that badly impacted even by the US tariffs. So largely a domestic driven theme kind of stock. And with agrochemical sector now again getting back into proper balance because we have seen all the remaining larger companies like Rallis, Sharda, Cropchem putting up very strong numbers. I'm quite sure that this number will be much better. And I think you will probably get to know better from the management commentary, once the Q1 numbers are, announced and the con call commentary is heard. But overall, I think numbers are much better. I think my sense is second quarter, we'll have to wait for the numbers to be more stronger. But this quarter has been a good improvement compared to the previous quarter last year.
Okay, so that's with regards to where UPL stands, but clearly the stock of the day today is PNB Housing and shares. I mean, let's try to pull that chart up, down by about 17% in trade today, and this is because of management exit. Harsh joins us with more details on what's happening with the company.
Well, yeah, it's a big name exit, and that is evident from the stock price action as well. Over the last 3 years, PNB Housing has gone through considerable amount of pain and now has seemingly done much better under the stewardship of Girish Kousgi. So just to kind of highlight the numbers, look at the GNPA number. This is the GNPA number before him, which is FY22 and currently. So Yes, there was already a large part of the pain which was behind when Mr. Kausgi took over, but the recovery is what is really worthy of underlining. So that's the one of the 3 to 4 metrics which we'll highlight. That's the NNPA ratio coming down from 5% to sub 0.7%. The ROA metrics improved dramatically from 1.2 odd percent to over 2.5%, and that has remained quite steady as well, which is what is aiding a large part of the recovery even in the stock price. And the margins, which were at around 2.8%, rose to 3.7% as there was a large loan mix shift towards higher yielding affordable housing finance, which Girish Kausgi made. Now, talking about some of the strategy and commentary which has been the case maybe over the last couple of years and which has been quite steady in terms of commentary, no major changes. They are tilting towards the better yielding affordable housing finance book, and they're growing that rapidly. They're focusing more on asset quality and bettering that, so the NPA ratios have come off as is evident. Recoveries are likely to aid the numbers even for FY26. Credit cost thereafter is expected to stabilize around the 0.25 to 0.3% mark, and FY27 onwards margins will actually kick in to ensure that the negative credit cost that's getting built in over FY25 and 26 gets leveled off with an increased margin. So all of those factors likely to play out. Now, why is the street worried? Unexpected exit, of course, it's a big exit and it's very, very unexpected. He's been driving the strategy at the housing finance company. Who replaces Mr. Kausgi is going to be the next big question. Can commentary and performance parameters hold in his absence as well? Does that really stand? And there are a couple of private equity funds as well which have been consistent sellers, something like a Carlyle, a General Atlantic. Those have been consistent sellers. So the real question is the best behind? The company though, and this is Morgan Stanley's view, has returned to growth mode with a sustainable and profitable strategy under his leadership, is what Morgan Stanley says. Also, they say that Kausgi has reshaped the strategy of the company towards a more diversified retail company. And last off, they also say there are 13 buys, 1 hold and no sells, with a target price of 1219 with a 50% upside as of right now. That's what the average Bloomberg analyst poll seems to indicate. Let's go across. We spoke to the management of PNB, which owns 28% in PNB Housing Finance. Here's what they had to say about the exit.
Put up his paper yesterday, and because of the family reasons, he wanted to move to Bangalore. That is the only reason for which he has put up his paper. Nothing more than that we should read in that. And he has put up the paper in the NRC yesterday, and the board also, they have discussed the PNB Housing, PNB HFL. And they have seized the matter now, and they are engaging the HR firm for finding out the new CEO for the company. More than that, nothing is there to read in this entire episode. This is one of the subsidiaries of PNB. We have 28% equity share in this company. And we have firm belief that company is doing well and will continue to do well. We don't have any concern about it. And that is the reason, if you see our shareholding, we have not diluted even a single percentage share in this particular company for the last many years.
Well, certainly under pressure today, and you have to admit, I mean, Girish Kausgi also carried with him that reputation, and I think which is why this 18% downtick. The question only is that, is it overdone or can there be more? Now, actually, you know, PNB Housing is one, but there are a clutch of NBFCs under some bit of action today and the last 2-3 days. Kunal, if I can come to you, because we asked Avinash about PNB, so I'm going to come to you. PNB Housing is one, yes, but IIFL Finance, because of that credit guidance, has taken a bit of a step back today. There is also there was also some fairly positive commentary, by the way, on stocks like Piramal Enterprises a couple of days ago. How do some of these look on the charts?
I think the entire NBFC as a space is looking extremely weak on the chart. The Nifty Financial Service Index, that is one thing which looks weak, and we expect further correction on the downside. Firstly, I'll talk about the index, which is currently trading at 28,400 mark, and there has been strong resistance at 28,800. So we expect this correction to go further on the downside, and from the current levels, there is still 1,000 points downside left for the index. So if you look at the index, still the 1,000 points downside left, the stock will correct even further. So here my negative view firstly is on Chola Finance. I think Chola Finance, if you look on the larger term chart, there has been a clear-cut negative divergence on technicals, and the confirmation has already been received where the stock has breached the 200 DMA. So clearly a change in trend for the stock. 1500 is a strong resistance on the upside. The risk to reward ratio is extremely favorable to go on the short side. Any bounce would be an opportunity to exit, and you can expect further lower levels towards the mark of 1250, 1200 in the very short term. So currently trading at 1425. 1500, that's the 75 point on the upside is a stop loss, and on the downside you can expect at least minimum 1200 to 1150 on the downside in the August series only.
Okay, Avinash, I'll come to you on these retailers. In the start of the show, we were talking about how different retailers are buzzing on different days, and Trent is one of the top gainers on the Nifty today. Your view on how you are anticipating the results to be, and I mean, if you were to pick amongst the pack of these retailers, which one would that be?
So I think this quarter number, from the retailing companies could be a little softer quarter, but I think within that, I think Trent looks more decent and more well positioned. We are not very comfortable on the valuations of DMart because we feel that earnings growth has yet got to kick in a big way. Typically, I would say that you need to look at maybe the second half of this financial year. Probably that would be a period to actually look at how consumption has actually taken off, what has been the kind of buying across categories. But I think Trend can definitely surprise markets if they do record a decent growth. I think the previous quarter was a very challenging quarter for them. So my sense is that this quarter also should be a mixed quarter, not a very great quarter, but at the same time slightly better than the March quarter. So I think we'll like to keep Trent as our top pick here because we are structurally positive, and any decline would be an opportunity. We have been telling our clients to buy this stock on decline. Typically, I think one bad quarter doesn't mean that the business is out and the earnings growth story is gone. But typically, I think the second half of this financial year will be much better. So I think second quarter and the first quarter may not be all that great. So we are keeping our positions tight, and we'll look at the management commentary and the data metrics which come out.
Okay, UPL is the other one that is in focus right now, and UPL's numbers are out. In fact, let me go across to Varsha, who's joining in for more details. On the face of it, net loss has actually reduced from 384 crores to 88 crores. EBITDA has gone up 14%. Margins have also gone up. So at least an improvement in margins, even though revenues stay pretty much flat, Varsha.
Yes, absolutely. Even I would say the revenue is in line, while when it comes to net profit, rather net loss, I would say. So expectations were around 250 to 280 crores of net loss, but the net loss came at around 88 crores. So I would say in that kind of thing they've beaten, and that's the reason we have seen little recovery when it comes to stock price. But let me talk about the key takeaways when it comes to Q1 earnings. The revenue growth has been driven by improved pricing, supported by favorable product mix and double-digit growth in their subsidiaries, which is Adventa, which was again led by volume and pricing. The margin that you're seeing, the expansion in margin is led by improved product mix, higher capacity utilization and lower input costs, which drove overall EBITDA margin. Also, if you see the net profit, rather net loss, which has came down, this is on the back of higher other income, number one, lower cost of material, and of course the foreign exchange gain that the company has seen. Onto the guidance, so they have their guidance remain unchanged at 4 to 8% when it comes to revenue growth, with EBITDA guidance remain unchanged at 10 to 14%. So overall, so revenues were in line, but overall the numbers have beaten estimates, and the net profit, rather the net loss decrease that you're seeing is on the back of foreign exchange gain and of course the other income that the company has seen.
Okay, Okay, so UPL seemed like a decent set of numbers with some pressure coming in there. Avinash Gorakshakar, very good evening. Good afternoon, I feels like an evening, almost Friday there. So that mood coming in. But are you seeing anything positive there in the UPL numbers?
No, I think earlier, Tamanna, I commented that numbers have been much better than the street expectations. And I think the entire agrochemical sector is getting re-rated. So I think despite the fact that net loss number has come in, it's a significant reduction. The operating EBITDA has also improved significantly. And I think, the second quarter is also going to be a very strong quarter because typically most of the agro companies, have the first 6 months as one of their most remunerative periods. So I think the July to September quarter also would be a quarter to watch out for. And hopefully in this quarter, the company could bounce back to the black. So we are structurally positive here. I think any dip today which we have seen in the stock should be used as an opportunity to accumulate. Because our sense is that this year agrochemical companies could outperform significantly as compared to last year. And UPL has a large market share, does not get very badly impacted by the US tariff issue. So to that extent, I think, earnings growth this year should be much better. So we are structurally positive. I think even at these levels, a small accumulation at the current levels definitely could be advisable.
Accumulation at the current levels could be advisable. Let's get a technical view on that as well. Do you agree with this?
I think, yeah, definitely. Overall, if you look at the larger term trend for UPL, that has been positive. And now the important critical support levels for the stock on the downside will be placed at the 100-day moving average, which is at 655. So I think 655, 660 could be a very good zone where one can add again on the long side. And you can expect again further higher levels of 720 to 760 coming forward in the next 1 to 2 months. So I think wait for that dip. 6 on the downside towards the 100 DMA, 655, 650 could be a good level to enter on the long side.
Okay, stay on. Let's talk about a very interesting comparison today. So Swiggy posted numbers yesterday, and you already have so much of focus on an eternal. So of course, Zomato's zoom has been aided by its dominant quick commerce arm, but we also saw Swiggy move ahead in quick commerce in terms of volumes. Of course, there were losses that were coming in. Mahima is joining us for a comparison. Mahima, you're calling it the big cook-off.
Well, yeah, so I think it's because they've given this header because Swiggy has managed to do well in terms of where the food delivery aspect stands. Let's try to pull that up. But before I go on to that, earnings per se, how it panned out for the two competitors. For Zomato, revenue growth was better than expectations and losses narrowed overall sequentially in its quick commerce business. And that was kind of the reason why investors were happy with the counter, and we saw an uptick in the stock for 2 days straight. Swiggy on the other side, revenue was better than estimates, but PAT and EBITDA losses both widened sequentially as well as year on year, and that is something that the street is not appreciated, and that's why we're seeing the kind of pressure the stock is seeing today. In terms of the overall metrics in the food delivery business, gross order value. Of course, in the food delivery business, Swiggy has managed to outperform Zomato in terms of the overall revenue growth. But in terms of operational metrics, gross order value for Zomato is higher than that of Swiggy at 10,700 crores versus that of 8,000 crores for Swiggy. The GOV growth has been better for Swiggy, 19% this quarter on YOY basis and 16% for Zomato. Take rates have also been better for Swiggy at 25.7% versus that of 24.7%. So percent difference there. The monthly transacting users, of course, is higher in Zomato at 20.3 million versus that of 16.3 million. So Zomato has managed to have more monthly transacting users in this case. But in terms of the quick commerce space, that is your Instamart versus Blinkit, gross order value, of course, in the quick commerce game, Zomato still is ahead of Swiggy, and probably 2 or 3 odd quarters analysts suggest is ahead of Swiggy right now. The gross order value at 11,800 crores for Blinkit versus that of 5,600 crores for Instamart, so less than half when it comes to the gross order value. GOV growth, that is your gross order value growth at 21% for Swiggy, but much higher at 25% in something like a Blinkit. Take rates have been again far better in Zomato at 20.3%, that is your Blinkit, and versus 15% in Swiggy Instamart. And monthly transacting users, however, are better for Swiggy, and this is because they have an integrated app, but around 7.6 million for Blinkit. In terms of the overall cash balance, now Zomato has been sitting on a huge cash pile of around 18,800 crores, and Swiggy is sitting on a cash pile of around 5,300 crores. But Swiggy has gone ahead and said that they'll now be cautious in terms of dark store additions, and that will aid their cash balance overall. Dark store guidance, Blinkit has gone ahead and said that they'll do 2,000 dark stores by the end of 2025, so that guidance remains unchanged. But Swiggy has said that dark stores have now peaked out for them. Going ahead, Blinkit says there's visibility of 3,000 dark stores once the 2,000 dark stores it achieves by the end of 2025, and it will add for Instamart, that is Swiggy Instamart, they've said that now going forward they will add dark stores only as per where the demand is, plus they need to be 100% operational and need basis. Lastly, in terms of what brokerages are penciling in, Macquarie is the bearish one here in both of the counters, where it's given underperform for both of these counters. 150 is the target price for Zomato and 260 is the target price for Swiggy, but Jefferies and Citi both maintain buy on both of these counters. Jefferies has a 400 target price for Zomato. Lastly, in terms of what analyst recommendations are as per Bloomberg, there are 28 buy calls and 4 sell calls for Swiggy with a return potential of 31%, much higher than that of Swiggy, which is at 11% return potential, and there are 19 buys, 3 hold and 3 sell calls when it comes to Swiggy. In fact, we spoke to the management of Swiggy to understand as to what are their internal expectations of turning EBITDA positive. Listen to what he had to say.
Yeah, so specifically on the EBITDA for the corporate side, while on the food delivery business, we have given the guidance that, over the medium term, you should expect a 5% positive, on the gross order value. On the quick commerce side, we want to make certain calibrated investments. So the guidance currently is only on the contribution margin line. We do not want to right now box ourselves on the EBITDA side, considering that the category itself is seeing pretty heightened levels of growth, as well as new players coming in and marketing investments that need to be supported to make up and to support the 100% plus growth that we are seeing. So we want to make keep ourselves the flexibility to be able to continue to invest for growth in this segment.
Okay. I just want to get a quick view here on the Eternal versus Swiggy debate that we've been having. Avinash, you want to come in on this first?
Yeah, Tamanna, I think clearly Swiggy is catching up, but I think, if you look at the performance of Zomato, that is Eternal, I think they are a tad better than Swiggy, and I think, the markets are also more comfortable and convinced on the business model with Eternal. Clearly, Swiggy still continues to record EBITDA losses, and most importantly, I think at least for the next 2 to 3 quarters, the segment in which they operate is going to see a lot of heightened competition. So, I think volumes may go up, but at the cost of margins. So we have been telling our clients that Eternal would be a better choice if one were to take a bet on this segment. And I think in any case, these are bets which investors need to take for the next at least 18 to 24 months, because before that, it's very unlikely to see very big kind of improvements on a quarter to quarter kind of level basis. So I would say that at the current levels, Eternal looks pretty attractive from a long-term horizon. Swiggy will have to wait for at least maybe a couple of quarters before we see some improvements on the EBITDA and the cash flow.
What about you, Kunal?
Yeah, I think for Swiggy, I think here the stock on the technical charts have already given us a rising trend line breakdown. So the chart is weak. You can expect further downside. I think any bounce could be a good opportunity to exit. You can expect further lower levels on the downside towards 380. Which is the next support zone, and once that is taken out, you can expect even 340, 330 coming in.
Okay. All right. We'll ask Kunal a little more about his BTST ideas, but that's after a very short break. Stay tuned.
has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Welcome back. You're watching India Market Close. Amar Dev Singh joining in. He's Senior Vice President Research at Angel One. Amar, very good afternoon to you. I want your BTST ideas first, but will we start? Let's start actually with how you're seeing the Nifty right now. It's taken a bit of a dive in the last hour or so, not holding up at all.
Yeah, I would say that if you look at the markets, I've been seeing that for quite some time that overall the trend from a short-term perspective remains negative, and some of the technical indicators are extremely negative, and that's what we are seeing today also. Nifty is inching towards a crucial zone of support, that's 24,400, but that also is likely to be tested. If it holds that level, then we could say that we could witness a pullback. But yes, a short-term top definitely has been formed in the markets, which I had spoken earlier also, 25,000, 25,200. Now, the important level to watch out for is 24,400, 500 zone. If that is taken out, then we are headed towards 24,000, 24,200 levels, because the short-term technical indicators are extremely weak. The only, I would say, positive aspect is that the intermediate-term trend remains positive, and since we are approaching crucial support zone, so we could witness a pullback from the current levels.
Okay. Aman, hi. Very good afternoon to you. What about your picks for the day? What would you go ahead and buy, or are you selling something?
No, I would say that if I look at the markets, there are a couple of stocks which are definitely worth paying attention, and one is from the paint space, and that is Kansai Nerolac. So if I look at this stock, the stock has corrected from almost, I would say it has witnessed significant correction from almost 270 levels, and it seems to have formed a very strong base on the weekly charts. The monthly charts, it's showing some signs of momentum, and on the daily charts also, we are seeing some positive momentum there. So this is one stock one can look at from a short-term perspective. And the levels to enter is the current level with a stop loss of 237 and a target of 269 on the upside. And the second stock to look at is Imami Limited. This is one stock which has been in for consolidation for quite some time. We are seeing some positive momentum the last few days. The stock is up by more than 10%. And it seems to have reached a crucial zone of resistance, somewhere around 600, 610 levels. So this is one stock one can look at, buying at the current levels for an upside target of 653 and a stop loss of 597.
Okay, now it's time for our bull and bear segment, and the stock in focus today is Sun Pharma. The stock is down almost 4% as we speak. There you go, 4.5%, and this is on the back of its earnings. We have Varsha joining us with what's worked and what's not worked this quarter.
Yeah, thank you so much for that. One main reason why the stock is down is because of President Trump threat on lowering the prescription drug prices, and Sun Pharma specialty portfolio will actually get impacted due to this. But let me start with the Q1 earnings and the bull case for Sun Pharma. If you see, its Q1 FY26 revenues were broadly in line with the estimates, while EBITDA growth was superb for the company, and this was driven by strong double-digit growth in its core India business and rest of the world business. But President Trump's aggressive demand for pharmaceutical companies to lower US drug prices to match the global prices poses a significant threat to the Sun Pharma specialty portfolio, because one of its drug, which is Ilumya, which is a key drug for treating cirrhosis, generates almost 10% of overall revenue, and in fact in the US prices reportedly 4x higher than other developed countries, making it higher vulnerable to overall portfolio. And this is one of the reasons why Sun Pharma is down 5% in trade today. But on the flip side, despite the pricing pressure in US generics, if you see, Sun Pharma's successful expansion in gross margin has actually led to positive things about the company. Now this was achieved through effective raw material through raw material cost reduction, and of course the product mix change that the company has seen, and that's the reason why EBITDA was a company did beat its EBITDA estimates. But if Trump demands for price parity are enforced, the lowering of Ilumya's US prices will hugely impact Sun Pharma's earnings, and because this Ilumya contributes almost 50% to the specialty portfolio of Sun Pharma, and this is a very big threat when it comes to overall specialty portfolio, because specialty portfolio is the next leg of growth when it comes to Sun Pharma. But on the advantage side, Sun Pharma has launched two products which are the positive one for the company and which will drive future growth for the company. One is Lexelvi and the other one is Unlock hydroxide, which is on track for second half of this year. And this new specialty products are expected to ramp up commercially and will significantly aid net profits for the company. But near-term headwinds and EPS cuts are the one of the disadvantages that the company has, because company acknowledges near-term headwinds, including higher R&D expenses and rising effective tax rate is also one of the reasons why the net profit was down 20% for Sun Pharma. And these factors have already led to minor EPS cut when it comes to analyst projections. But a company do have strong long-term growth drivers and the strategic focus when it comes to their US portfolio, their specialty business, and overall portfolio that the company has on the back of the two specialty products that the company has launched, and of course the inorganic expansion that the company is doing. And lastly, the tariff, the uncertainty in tariff is the bear case that the company has because of the 25 to 30% of portfolio of Sun Pharma, which is concentrated on the US business. But on to that, if in fact we spoke to CFO of the company, Jayashree Sadgopan, about the company's outlook when it comes to FY26 and 27. Do listen in.
The company, as you rightly mentioned, has performed well, and we have seen a good EBITDA growth. We had two exceptional items or one-timers for this quarter. One is relating to SCD-044. The trials were done and the product has been discontinued. The other one relates to GXMDL, which is a case that has been going on for many years in the past, and the company has reached on settlement, which was about $200 million. Net of the provisions that had been earlier considered in the books, we had to take a one-time accounting for both these exceptional items.
So a one-time hit is what they're talking about, but clearly the street has reacted negatively. My question is the worst over? Already a 5% drop today through the day. Amar Dev Singh, is a rebound in place for Sun Pharma? And actually, before you talk about Sun Pharma, just let me pull up the Nifty. And in the last 20 minutes, the deepening of the red on the Nifty is something that we should address. Down about 1% now, 230 points. Something is going on here and it's not looking very good. Let me pull up the advanced decline ratio while we're at it. The small cap and the mid cap. Is it deepening in the broader markets? The advanced decline ratio is also widened towards the declines, getting more negative there. The broader markets also hurting, 1.5% nearly down on the Nifty mid cap 150. The small cap 250, more than 1.5% down at this point.
There is also, I think global markets are not looking pleasant. So Europe, the stock market sell-off, as they call it, is intensified. Stocks Europe 600 is down 1.3%. DAX, in fact, is down 1.7%. And so that is the German market is down about 1.7%. But FTSE 2, which is the UK market, down 0.5%. CAC, which is the French market, down about 1.8%. So it's not looking good there. And the US futures too have slipped ahead of the big jobs report. So this whole thing, right? I mean, while there is to and fro, the 39% tariffs on Switzerland and what's happening there, I think it is certainly making traders a bit nervous. I wonder, Amar, if you have a call, I mean, if there is a shorting opportunity on the Nifty, it's very close to that support zone, right? Would you go out and short it here for a Monday trade?
I would say if we see, it would be, I wouldn't say at the current levels is a good level to short because I've been saying that 24,400, 500, that's a very important zone of support. So we could witness a pullback, but again, it's more of a sell on rallies in the market. That's what I've been saying for quite some time because some of the technical indicators from a short-term perspective, they are extremely negative. That's the reason we are seeing this selling pressure, and it continues to remain so in the lack of, I would say, in the absence of any positive, significant positive major triggers. I would say be on the sell side. If someone is short, one can hold on to it. Breaching 24,400, then we could witness some sharp correction towards 24,000 levels as well.
Here's what I think is possibly happening. The decision and the sudden release on 10 to 40% tariffs was a little before midnight in the United States. Basically, they've released this and I think Trump went to bed. The world has now woken up Europe, you would have seen that reaction. That's why afternoon-wise, if you pull up the intraday chart, once Europe has woken up, you're seeing that shock deepen. And you're probably seeing some global market selling or foreign investor selling coming in now towards the end, because what he's done is actually very confusing. When you say 40% on transshipments, what do you mean by transshipments? The world trades in that way. It's not as if everything goes from point A to point B. There is value add along the way. So what comes in the purview of transshipments now becomes panicky.
Yeah, I think what would have rattled Donald Trump is that despite all the pressures and the tariffs that were there, Chinese exports for the month of June, when there was a pause but at higher tariffs, were up about 4%. Right? And therefore some of them made their way into the US despite the fact that they ideally should have been under a higher tariff regime, if you will. So I think there are a lot of moving parts, but I take on board that completely, because a lot of it is very, very fluid. It's very difficult to pin it down, and maybe people are just taking that ahead of the weekend and ahead of the jobs report in the US.
Okay, let's take money off. Yeah. Avinash, do you think that's a good strategy at this point to let's be safe? Or would you be, trying to catch a falling knife right now with what you've seen in the markets last 20 minutes or so, actually?
No, I think, Tamanna, I think it's better to stay put as of now. I think we have been telling our clients that, you would be getting opportunities at lower levels. And I think, on the Nifty, 24,500 has been a very good, strong support level. If at all this level is broken, then I think there could be a little bit panic on the market. So I think, with these kind of fluid factors floating around, I think it would be wise enough to wait for some time. I think the earnings season also not been all that great. So we have been telling our clients that there's no need to hurry. Keep your money invested and your ammunition ready. Whenever you get good opportunities, maybe at lower levels, that could be a good entry point. So, as of now, there's no need to make a adventurous entry at these levels. Better to stay put for some time.
All right, now shifting focus to some buzzing earnings in the trade today. Ratnamani Metals and Graphite are the ones that Vansh has got on his list. Vansh, what are you picking up when it comes to both of these earnings? Graphite India not as good as HEG.
Right, so if we talk about Graphite India, the company has reported a set of numbers, and the numbers are muted on all the fronts. There has been an increase in the raw material cost for the company, and the net profit is fueled by the other income. And the company has also announced that they will be investing 600 odd crores for expanding their graphite electrode capacity by 25,000 tons in 2 phases. If we talk about the earnings, the revenue is down at 665 odd crores versus 666 odd crores. The margins are at 6.5% versus 5.9%, and the EBITDA is up at 10.3% versus at 43 odd crores, and the net profit is up 134 odd crores versus 50 odd crores. If we talk about Ratnamani Metals, the stock is down 2%, and there has been a muted set of numbers from the company. There has been a weak operational performance on all the fronts, and there has been a decline in the margins for the company. If we talk about the earnings, the revenue is down 32%, EBITDA is down 37%, and the margins are at 16% versus 17%. The net profit is down 36%. So clearly muted set of numbers that the market is penciling in for these stocks.
Okay, so a lot of buzzers over there as well, and we'll get to ITC. I think ITC is that big set of numbers, Mahima, that we're tracking this afternoon. Going to see the last of the major FMCG companies. Are they expected to be in line with what we've seen? Because now after HUL, Nestle, different business of course and different mix, but the expectations have come higher.
Definitely, revenue expectations are much higher. In fact, highest amongst the entire FMCG staple pack. The revenue is expected to grow around that 15% is what the Bloomberg analysts are suggesting. Good revenue growth, but margins are likely to be under pressure, and this is because of tobacco inflation plus the pressure in terms of FMCG as a segment as well as the paper business. Overall revenue growth of around 15%, EBITDA slight growth of around 2%, margins to come down to that 35% mark, net profit to see a good growth of around 5%, which is in line with how FMCG has done so far. Cigarette volumes will drive the top line growth is something that analysts are expecting. Agribusiness will also aid top line. Marginal drag in terms of the paper business is expected. Volume growth in cigarette to be around 5 to 6%, and FMCG volume growth is set to be around 3 to 5%. Key things to watch out for should be, how much of a margin pressure is there because of tobacco inflation and how much of that is being transferred. So that is one thing. Plus the price hikes that have been taken this quarter, and how is the value versus volume growth faring, because that gap needs to narrow in order to see some kind of expansion in terms of margins. And lastly, demand outlook and competitive intensity. So this is with respect to ITC. Avinash, any view here? Do you expect the results to be on a good footing?
Yeah, I think ITC should put up a reasonably good show. My sense is that, the volume growth of 6-7% plus, hopefully the other, components of the business look to be quite interesting. In fact, I believe, the rural market, up market, the demand from the rural market is a key driver for ITC. Hopefully, this could also be a key driver for the company. I think markets would look at the profit growth, percentage compared to the previous quarter, that is the March quarter as well as the previous year quarter. But I think in terms of margins, I think even if they maintain the margins, I believe, the traction would definitely be healthy. I think the second quarter could be equally stronger quarter, but I think numbers, if at all, would please the market is the volume growth. If they show 7-8% volume growth for the cigarette business and all the other businesses also record a good strong volume and value growth, that would definitely be encouraging. And of course, then what kind of management commentary the management speaks post the Q1 call.
Okay. So ITC, big expectations there. Amar, technical view, if at all?
Yeah, I would say that if you look at ITC seems to form a bottom somewhere, a very strong support around the 400, 410 levels, and the last couple of days it has moved up. So, but on the upside, 425, 430, that's a key zone of resistance. If that is taken out, then we could witness some upside rally in ITC, because otherwise the stock is purely in a trading range between 400 and 440 on the upside.
Okay. All right. So that's the expectation on ITC. Just want a quick check on how HUL is doing. HUL championed through most of the morning. Has it held up? But no, it's come off, but still in positive territory, about 1% up. Auto sales is the other big trigger that we've seen in the markets today. July auto sales revealed robust momentum in the two-wheeler segment, driven by premium and scooter sales, while truck makers registered impressive gains. Puneet is breaking it all out.
Well, thank you for that. So definitely strong momentum in the two-wheeler space. Premiumization as well as scooterization are the two key trends visible for growth amongst these players. That's the first key trend. Passenger vehicle, they're showing a very stark contrast, and we'll put some light on that. That's the second takeaway. Truck makers was the biggest surprise in the month of July. It's a slow month, a monsoon impact, not so much construction, but all these companies have reported mid-single digit growth against estimates. So that's one key positive, and tractors have continued their positive momentum, led by the rural sentiment as well. Let's quickly look at the numbers for two-wheeler makers first. For someone like a TVS, it's been really, again, a strong month. 29% growth on a YY basis. The estimates also handsomely beaten. So this one has shocked analysts across the board, both in scooters and in the premium bike segments, and has shown the highest growth. When you look at the other ones like Eicher and Bajaj, Eicher again a 31% growth. This is now a consistent outperformer, over 80,000 sales for the company in the month of July, and this is the 8th straight month for the company to do so. Clearly a change in strategy. When you look at Bajaj Auto, and you can see the stark contrast between TVS, Eicher and someone like Bajaj. The product profile has definitely been a key concern for Bajaj, and that's visible in the numbers, just the 3% year on year. While in line with estimates, the key aspect is the growth is very weak for Bajaj in this particular month. When you look at, Hero is still awaiting, we are still awaiting numbers for Hero MotoCorp. So let's move on to the passenger vehicle side. We had players like M&M as well as Maruti and Tata Motors come out with their numbers. For Tata Motors specifically, it's a weak month. It's down 11% on a YY basis, in line with estimates, but a weak momentum. When you look at M&M as well as Maruti, for Mahindra, it's a 20% growth. And here you see the stark contrast again between Tata Motors down 11% and M&M up 20%. This one again, Tata for Maruti, it's a 3% growth, but within segments we've seen the compact or the smaller cars come back again. So Baleno amongst others have shown growth. That's a key positive, while exports momentum has also continued. Hyundai is again in the camp of Tata Motors, very weak show in this month, and the trajectory for growth is shifting to the second half. Finally, in terms of truck makers, and here is where the surprise is. Ashok Leyland, Tata Motors, all doing very well. 7% growth on a YY basis for Tata Motors. Let's look at VECV now. Again, a 7% growth. It's the estimate was built in for a higher growth, but that has come ahead of estimates. And same thing for Ashok Leyland as well. Is the trucks and the bus segment performing well for all three companies, and tractors for Escorts as well as M&M tractors. For M&M, it's been a steady growth. They are the market leader, continuing to hold market share. And finally, Escorts as well. So within this aspect, we were expecting three key winners of Eicher, Mahindra as well as TVS, but we will have to add someone like an Ashok Leyland to that list on really strong show, while Tata Motors' CV division has surprised on the positive side.
Okay, Puneet, thank you so much for that detailed review of how auto sales have fared. Avinash, I'll come to you on this one. What are you picking up with respect to trends when it comes to these auto sales numbers?
So I think clearly, tractor sales continue to be robust, and players like Mahindra and Mahindra are going to benefit significantly. In fact, smaller players like Indo-Farm Equipments, which are small players in the tractor market, could also benefit. But I think M&M has shown a very decent performance. Even their electric vehicle portfolio has taken off very well. On the two-wheeler side, I think, TVS Motors has been showing very strong growth. I think exceptionally very strong growth. And if the company does maintain these levels, then I think it won't be surprising that there could be some further re-rating here. I think the best part is that they have been managing this on a higher base compared to other players like, say, Bajaj Auto, which has not managed a double-digit growth. So I think to a large extent, the markets would look at consistency in the next couple of months. Hopefully, if that consistency maintains, then you could see a lot of re-rating happening in stocks like TVS. M&M continues to be a strong bet, within the utility vehicle and the tractor market segment. And I think, any dip here should be used as an opportunity to accumulate, because we believe that, in terms of the balance sheet, in terms of the gearing, cash flows, M&M is very well positioned. So I think M&M and TVS, I think both can be put up in the portfolio on declines.
Okay, and guys, while HEG and Graphite India certainly fit the bill of the top losers today, or key losers today, you have to look at two stocks. On the downside, it's IIFL Finance, and on the upside, it's Trent. 3.5% up for that one. Some really solid moves on a day when the Nifty is down 1%. Kunal, very quickly, or rather Amar, very quickly before we wrap up, maybe we spoke about this earlier, but Trent and IIFL Finance on the opposite ends. Do you like the charts for a long or a short on either of them?
Yeah, see, overall, Trent seems to have formed a bottom, because the stock had corrected from almost 8,000 levels, and there is a possibility that we could see the stock rallying towards the 5,400 levels. And the current recent low of 5,000, that should hold as a short-term bottom for the stock.
Okay, Avinash and Amar, thank you so much for taking out the time and coming to us at NDTV Profit. Have a great weekend ahead. Let's take a look at markets are wrapping up. Let's take a look at how the week is ending. We'll try to pull up how the entire week is fair for the markets as well. The Nifty 50 ending 0.8% lower. The Bank Nifty also has come down, ending 0.6% lower. Let's try to pull up the Nifty heat map and see if the gainers are still the gainers on that chart. Trent, yes, continues to be the top gainer, up 3.3%, but has come off a tad bit. There's Asian Paints up 1.6%, HUL up 1.3%. So a lot of consumption names seeing good gains today in the trade. Nestle, ITC, all seeing good gains. ITC ahead of its earnings, but counters that have lost ground today. Sun Pharma down 4.5%, Dr. Reddy's down 3.9%, Adani Enterprises down 3.6%, Cipla, Tata Steel, Infosys, Tata Motors, Maruti, Shriram Finance, Wipro, all of these counters, SBI Life as well, down by about 2% each. Let's also try to pull up the advanced decline ratio, because that has widened throughout the day. There you go. This is the chart that is indicating that the broader end of spectrum is still under pressure. There's 492 odd advances versus 1795 odd declines. So when we started the show, the ratio was roughly that 2:1, but that has now gone to almost 2.5:1. Let's also try to pull up the sectoral heat map and see how sectors have fared today. It's the Nifty FMCG, the only counter in green today, ending in green today, and that's around 0.7% up. But Nifty Pharma is under pressure, down by about 3% and this is largely led by Sun Pharma as well as Cipla and Dr. Reddy's. Nifty Defense seeing profit booking yet again, down 2%. Nifty Metals down 2% as well. Nifty IT also seeing significant pressure, down by about 2%. Nifty Realty also seeing bets of about 2%. So that's with regards to where the sectors stand. Let's also try to pull up the broader markets and see how broader markets are ending. There you go, down 1.4% for the mid-cap 150 at its day's low point. Similarly, small-cap 250 also ending with cuts of about 1.7% at its day's low point. Let's try to pull up the BSE 500 quickly and then also try to pull up the weekly charts for the Nifty, Bank Nifty as well as the broader markets. KIOCL leading the pack, 14% up. Suzlon seeing gains of about 7%. Supreme Petrochem, Radico Khaitan, PNG Health's CCL products all seeing gains of about 5 to 6%. There's PNB Housing, top loser on the BSE 500, and that's down by about 17.6%. IFL, GSK Pharma, Graphite India, Sonata Software all seeing cuts of about 10 to 7%. Let's try to pull up the weekly chart if we can for the Nifty 50, the Bank Nifty as well as the broader markets. There you go. The Nifty 50 ending with a downside of around 0.8% this week. The Bank Nifty also, if you can try to pull that up, there you go, ending with around negative 1.1 odd percent. The mid-cap 150 seeing downtick of around 1.7% this week, and the small-cap 250 seeing a downtick of around 2.7 odd percent this week. And this is largely on the back of the kind of downtick that we've seen in the last hour of trade. Let's also take a quick look as to what are the cues or important events to watch out for during the weekend. You have your Indian foreign exchange reserves data coming in, your US unemployment rate data coming in, your US moving on even from that US unemployment data. There are corporate actions that you need to keep your eye on. Ex-dividend companies, Greenply, Britannia, Deepak Nitrite, Praj Industries, as well as some names like Fairchem as well as MK Global, which will be trading ex-dividend. Let's try to pull up the earnings that you would watch out for today post-market. ITC amongst the big one, Bazaar Style, Tadil, as well as PC Jewelers, Symphony, some counters, GR Infra that you will be watching out for earnings. Earnings that you'll watch out for tomorrow or over the weekend, that is Saturday and Sunday, is going to be ABB India, which is going to be a big one. Federal Bank, something like Gujarat Ambuja, as well as Balaji Amine, some earnings to watch out for over the weekend. So this is with regards to where the cues to watch out for this week. But we have Shreyansi joining in with what you're supposed to do over the weekend.
Well, absolutely, and there's a long list there, right? And we'll take you through just that. First things first, let's take a look at the top 2 movies that you should be watching out for. Both of them, interestingly, are sequels. Son of Sardar 2 is the first one that we're looking at, and the second one, of course, is Dhadak 2 that we're looking at. There you have it. Let's take a closer look at Son of Sardar 2 because this is the one that is a sequel to a 2012 hit. Ajay Devgan is the one who's starring in this one, and the budget is 150 crore rupees. Now, there's already competition from holdovers, the likes of Sayara, that we'll be talking about in just a bit. So that's also something that's quite concerning, but let's see how this one pans out. Along with Dhadak 2, that's made with a budget of 45 crore rupees, has Tripti Dimri, who's famous for her performance in Animal, Siddhant Chaturvedi as well. In this 2018 film sequel, now that's the one that had Janhvi Kapoor as well as Ishan Khatter debuting. So this one's going to be an interesting one on caste politics as well as marriages. And let's also take a look at Bollywood's guiding star than Sayara, in fact released on July 18th. Let's take a look at the next plate that has the collections as well, made with a budget of 60 crores, managed to get 270 crore plus rupees on just day 13. So Mohit Suri has really hit it out of the park with this one. It's managed to rake in all of these collections that are unheard of this year as far as Bollywood is concerned. Let's take a look at some of the OTT releases that you should be keeping on your radar as well. There you have it. You do have Trainwreck, Storm Area 51. Now, this is a part of an 8-part anthology that features all of these bizarre events. It has bizarre events that have blown up in mainstream media, and this is the one that is about Storm Area 51, which is a very big event that was very important in Nevada. Let's look at the next one as well, which is Chief of War. It stars Jason Momoa, and this is the one that is debuting on Apple TV. That's also the second one on the list to watch out for. So thank you so much for tuning in, and this is your list that you should be looking at.
Has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, markets have ended lower in red with Sensex down 608 points at 80,577 and the Nifty was also down by 200 points at 24,566 levels. Nifty closed 1% lower for the week and benchmark indices fell for fifth straight week. Almost all the sectors have closed in the red with the exception of FMCG. So the pharma sector was a major drag, plunging by 3.5%. Now this is following reports of a letter from President Trump to major pharma companies demanding they slashing drug prices. Now other sectors have also recorded significant losses there, with auto, IT and realty almost down nearly 2%. In contrast, the FMCG sector saw a slight gain, closing up by 0.63%. PNB Housing Finance's MD and CEO Girish Kuzgi will step down on October 28th of 2025 after a 3-year stint, triggering a 16% share drop. So Kuzgi resigned to pursue external opportunities. Ashok Chandra, MD and CEO, told NDTV Profit that no impact is likely on the company from this change of guard. So a rigorous search for a new leader is underway, with PNB Housing assuring stakeholders its growth trajectory remains intact. The stock is down 25% in a month, faces headwinds despite a stellar 5-year return. Nelco, a Tata Power subsidiary, saw its shares climb 7%, driven by its June 17 unified license for VSAT virtual network operator, enabling national-level satellite communication services. The license allows resellers to distribute VSAT services under their brands, boosting rural connectivity for bank ATMs and remote businesses. Nelco's portfolio, including maritime and enterprise VSAT services sector, like banking and oil and gas, with Tata Power holding a 50.04% stake. Nelco's market cap hit 2,460 crore rupees. Sun Pharma's Q1 of FY26 results show a mixed performance, with revenue up 9.5% year-on-year to 13,851 crore rupees, which is in line with the estimates driven by strong growth in India, up 13.9%. EBITDA also rises 11.3% to 4,073 crore rupees, beating the expectations with a 29.4% margin. So thanks to a favorable product mix, however, net profit has fallen 19.6% to 2,279 crore rupees, missing the estimates due to 818 crore rupees in the exceptional charges, excluding a litigation settlement and drug discontinuation cost. So the US launch of Lexcelvi for alopecia areata bolsters Sun Pharma's specialty portfolio with focus on the future growth. Swiggy's Q1 of FY26 results show revenue soaring 12.5% quarter-on-quarter to 4,961 crore rupees, beating the estimates driven by robust food delivery and quick commerce growth. However, the net losses widened to 1,197 crore rupees, with quick commerce arm Instamart posting an 896 crore loss due to aggressive dark store expansion. Gross order value surged 45% year-on-year, and monthly transacting users hit 21.6 million, up 35%. Eicher Motors reported an in-line Q1 of FY26 with consolidated revenue up 14.8% year-on-year, driven by strong volume growth in the Royal Enfield motorcycles. So net profit has risen 9.4%, supported by a 10.2% increase in the two-wheeler sales to 2.58 lakh units, boosted by rural demands and premium models like Himalayan 450. EBITDA grew 3% to 1,202 crore rupees, with margins improving to 23.9%, which is nearly 24% from a three-quarter low, though down from 26.5% last year. So the company's focus on volume over margin continues, with new launches and export growth to Latin America and Southeast Asia fueling the optimism. JSW Energy delivered a stellar Q1 FY26, beating the estimates with a 42.4% surge in net profit to 743 crore rupees and a 78.6% revenue jump to 5,143 crore rupees, fueled by renewable capacity additions and the O2 Power acquisition. So EBITDA has soared 96.7% to 2,789 crore rupees, with margins expanding to 54.2% from 49.2%. So net generation has risen 71% to 13.5 billion units, driven by a 54% increase in the renewable output and contributions from the Mahanadi plant. Adani Power reported a decent set of numbers in Q1, with net profit jumping 27.2% quarter-on-quarter to 3,305 crore rupees, driven by robust power demand and improved margins. Revenue has dipped slightly by 0.9%, but EBITDA has surged 18.1%, while margins rose to 40.3% from 33.8%. This is fueled by lower fuel cost and higher merchant tariffs. Now, power sales volumes has risen 5% to 25.5 billion units, supported by 1600 megawatt of Godda plant. So regular payments from Bangladesh, including over $500 million in the last 2 months, eased the liquidity concerns. Adani Power targets 47 gigawatt capacity by FY28, reinforcing its thermal power dominance. GSK Pharma's Q1 of FY26 results showed resilience, with net profit climbing 12.45% year-on-year to 205 crore rupees, beating the estimates driven by a favorable product mix and cost control. So revenue has dipped 1.2%, impacted by US tariff pressures and generic competition, but EBITDA has surged 8.96% to 251 crore rupees, boosting the margins to 31.19%, which is nearly 31.2% from 28.3%. So growth in specialty medicines like Augmentin and vaccines offset the declines in the legacy brands. Chalet Hotels reported a stellar Q1 FY26, with consolidated net profit soaring to 34.8% to 203 crore rupees from 60.67 crore rupees. This is driven by a 147.8% revenue surge to 894.5 crore rupees. EBITDA has risen to 357.28 crore rupees, with margins improving to 39.9%, which is nearly 40% from 38.8%. So despite the geopolitical challenges, a 17% rise in the average room rates to 12,207 rupees boosted RevPAR by 10%, though occupancy dipped to 66% from 70%. So the hospitality, annuity and residential segments grew 42%, 83% and 37% respectively. New room additions and ongoing projects like the Taj Delhi Airport signal a robust pipeline. Birla Corporation reported a 266% year-on-year surge in Q1 of FY26, consolidated net profit to 120 crore rupees from 32.6 crore rupees, aligning with the estimates. So revenue grew 12% to 2,454 crore rupees, driven by a 9% rise in cement sales volume to 4.79 million tons, despite the monsoon disruptions. So EBITDA rises 34% to 347 crore rupees, with margins improving to 14% from 11.8%. However, EBITDA per ton at 715 rupees, up from 603 rupees, lags the peers. Subdued pricing in central India, accounting for 50% of sales, and extended shutdowns at 2 plants impacted the clinker production. Wonderla Holidays reported a challenging Q1 of FY26, with consolidated net profit down 16.7% year-on-year to 52.6 crore rupees from 63.2 crore rupees, which is impacted by an 8% drop in footfalls to 9.17 lakh rupees due to heavy monsoons. Revenue rises 1% to 179 crore rupees, but EBITDA has fallen 9% to 87.5 crore rupees, with margins contracting to 49% from 54%. So average revenue per user grew 6% to 1,775 rupees, and spend per head rose 11% to 493 rupees. The Bhubaneswar Park and new glamping pods at Bengaluru's Isle Resort boosted the non-ticket revenue despite the seasonal headwinds. Chambal Fertilizers and Chemicals reported a 22% year-on-year increase in Q1 of FY26, consolidated net profit to 548.9 crore rupees from 449.3 crore rupees. This is driven by strong growth in the crop protection chemicals and specialty nutrients. Revenue rose 15.5% to 5,697 crore rupees, but EBITDA grew only 1% to 760.9 crore rupees, with margins contracting to 13.4% from 15.2% due to higher raw material cost. So the company has launched 13 new crop production products and Bajra maize seeds with 4 specialty nutrients products planned for Q2. Despite the margin pressure, Chambal maintains robust growth momentum in the non-urea segments. NCC clinched 2 orders worth 791.5 crore rupees in July 2025 from state government agencies, boosting its robust order book to 71,568 crore rupees as of March 2025. The contracts include 461 crore rupee for the buildings division and 330 crore rupees for the electrical division, complementing a prior 2,269 crore Mumbai Metro order. So despite a 33% stock decline over the past year, NCC's diversified portfolio across the infrastructure sector signals strong growth potential. So the company, with a market cap of 14,092 crore rupees, remains a key player in India's construction landscape, with no promoter interest in awarding entities. ITC is expected to report a 14.5% year-on-year revenue increase to 20,925 crore rupees in Q1 of FY26. This is driven by 5 to 6% cigarette volume growth and strong agri-business performance. Now, net profit is also projected to rise 3.4% to 5,085 crore rupees, while EBITDA may grow 2% to 6,417 crore rupees. However, margins are likely to slip to 35.1% from 37.3%, primarily due to pressures in the FMCG and paper segments from rising input costs and cheaper Chinese imports. So investors will monitor management commentary on the recent acquisitions, rural-urban demand trends and raw material pricing. Jane Street is under investigation by the Income Tax Department of India for treaty shopping through Mauritius. So, Jane Street allegedly routed its high-frequency derivative trades via a Mauritius-based entity to claim the capital gains tax exemption under the India-Mauritius Tax Treaty. So the firm reportedly booked significant profits in Indian F&O while showing losses on equity investments in the Indian companies. This resulted in a near zero overall tax liability for its India-linked trades. Authorities believe that Jane Street wrongly claimed these treaty benefits as profits from the derivative segments are considered taxable in India. Lenders are concerned about rising stress in the MSME loan segment. This is driven by economic slowdown, tighter credit conditions and borrowing over-leveraging. While MSME loan book growth remains at 29% year-on-year, lenders report a sudden strain, especially in the smaller loans below 20 lakh rupees. The sources say that although some sectors and rural markets show resilience, overall growth in the MSME lending is slowing, with the market size contracting slightly as risks mount. SEBI chairperson Tuhin Kanta Pandey has flagged concerns over the misuse of preferential allotments and fake disclosures by listed companies. Speaking at an industry event, he outlined how such schemes often involve diversions of shareholder funds, round-tripping through subsidiaries, circular transactions with dummy entities, and misleading disclosures made ahead of the lock-in expiries. 4 flight attendants from Alaska Airlines 737 MAX 9 are suing Boeing for physical and psychological injuries. Now, this is for a mid-air cabin panel blowout in January 2024, filed on July 29 in Seattle's King County Superior Court. So the lawsuits claim negligence and unsafe manufacturing, seeking compensation for economic losses, emotional distress, and medical cost. The incident caused by missing bolts led to a gaping fuselage hole at 16,000 feet, traumatizing crew and passengers. Shanti Gold International's shares hit the bourses today. The IPO was subscribed over 81 times. The 360 crore rupee issue was priced at 199 rupee per share. The company managed to raise 108 crore rupees from anchor investors like Society General. Now, proceeds of the issue will be used for setting up a facility in Jaipur, funding the company's incremental working capital requirements, payment of debt, and for general corporate purposes. Apple's fiscal Q3 results dazzled, with iPhone sales jumping 13.5% to $44.58 billion, surpassing the Wall Street estimate. Now, this was fueled by a 1% sales boost from the customers buying early to dodge Trump's tariffs. America's sales rose 9.3% to $41.2 billion, while total revenue grew 9.6%, the fastest since the pandemic. CEO Tim Cook noted record upgrades for iPhones, Macs, and Apple Watches. Despite an $800 million tariff hit in June, Apple forecast mid to high single-digit growth for Q4, but warns of $1.1 billion in the tariff cost. So shares have risen 2% after hours, though concerns linger over AI delays and a 17% stock drop in 2025. Amazon.com forecast third quarter sales above market estimates, but failed to live up to lofty expectations for its Amazon Web Services cloud computing unit. Now, this was at the heels of rivals handily beating a Wall Street forecast. Now, shares plunged by more than 7% after hours. Before releasing the results, Amazon had finished regular trading up 1.7% to $234.11. The Election Commission of India has announced September 9 as the polling date of the vice presidential election, following Jagdeep Dhankar's resignation on July 21. Nominations open on August 7, with August 21 as the last date for filing, and votes will be counted the same day. So the Electoral College, comprising 788 MPs from both the houses of the parliament, will elect the new vice president using a single transferable vote system. The BJP-led NDA, holding a majority, is likely to influence the outcome. 24 women and 3 minor girls were rescued from a human trafficking racket in Assam. 4 people who were suspected of orchestrating the racket have been detained. The operation conducted jointly by the Railway Protection Force and government. So the railway police occurred during a routine inspection on Vivek Express at the Tinsukia railway station. Officials questioned passengers in coach S1 and discovered the girls were being transported in Tamil Nadu under the pretext of job placements offered by an agency. Former MP Prajwal Revanna has been convicted of raping his house help. The Special Court for MPs and MLAs in Bengaluru said that it will announce the quantum of punishment against Revanna, the grandson of ex-Prime Minister H.D. Devegowda. A woman who worked as a domestic help at Revanna's family's farmhouse accused Revanna of repeatedly raping her since 2021 and threatening to release videos of the abuse if she revealed the incident to anyone. So during the trial, the court examined Revanna, who was arrested on May 31 last year, and all 26 witnesses. It then framed charges against him under various sections, including rape, criminal intimidation, and unlawful circulation of intimate images. The All India Football Federation today named Khalid Jamil as the new head coach of the Indian men's football team, marking the first Indian appointment in 13 years. Jamil was selected from a shortlist including Stephen Constantine and Stefan Tarkovic after a rigorous month-long process. The 48-year-old, known for his tactical discipline, replaces Manolo Marquez, who parted ways last month after a winless stint. Jamil's first challenge is the CAFA Nations Cup, starting August 29, as he aims to revive India's 133rd ranked squad. England seized the upper hand on a rain-disrupted first day of the fifth test at the Oval, with India reeling at 204 at 6. So key batsmen KL Rahul, Ravindra Jadeja and captain Shubman Gill fell cheaply. Gill's suicidal run out proving costly. So Karun Nair's unbeaten 52 and Washington Sundar's 19 offer hope. But Gus Atkinson's 2 wickets for 31 runs put England in control. A late injury to Chris Wokes marred their day. Ajay Devgan, son of Sardar 2, crossed 91 lakh rupees on its opening day, surpassing Dhadak 2's 41 lakh, but falling short of the expectations amid fierce competition from Sayyara and Mahavatar Narsimha. So the comedy sequel, a follow-up to the 2012 hit, sold 17,000 tickets across 3,000 screens, driven by positive reviews lauding its humor and vibrant Punjabi appeal. However, muted pre-release buzz and a crowded release window limited its performance, a stark contrast to the original's 10.7 crore rupee debut. Well, with that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned.
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Big exclusive conversation with Dinesh Thakkar, Chairman and Managing Director of Angel One inside a Tesla for a first of its kind interview in discussing Teslanomics and Tesla's influence on India's markets and future. Benchmarks end close to 1% lower, with Sensex losing around 600 points. Most sectoral indices close in the red, with Nifty Pharma as a top loser after Trump warned pharma companies to cut prices or face punishment. PNB Housing Finance tumbles close to 18% after the resignation of Managing Director and Chief Executive Officer Girish Koski with effect from the 28th of October. Sources tell NDTV Profit the Income Tax Department is probing global trading firm Jane Street for suspected treaty shopping after they allegedly routed derivatives trades through their Mauritius-based entity to claim capital gains tax exemption under the India-Mauritius Tax Treaty. The Enforcement Directorate searches 4 locations in Bhubaneswar and Kolkata in connection with a 68.2 crore fake bank guarantee case reportedly linked to the Anil Ambani Group under the Prevention of Money Laundering Act. SEBI proposes IPO allocation overhaul, suggests to allocate at least 35% of the offer for IPOs below 5,000 crore rupees to retail investors. As for the IPO of above the 5,000 crore, 10% of the amount must be allocated. Overall retail share cannot be less than 25%. Two-wheelers see strong momentum in July, led by premiumization and scooterization. Passenger vehicles witness a stark contrast as Tata Motors sales fall 11%, while M&M sales show 20% growth. Positive rural sentiment drives the momentum for tractors. Trump's 25% tariff on India will take effect from the 7th of August. Base tariff of 10% to continue until then. Concerns grow as there is no clarity on how the penalties will apply. The election for the post of Vice President will be held on September 9th. This is after Vice President Jagdeep Dhankar's sudden exit last month. Hello and welcome viewers, a very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets, national and also international news, so stay tuned. Let's begin with checking how the markets fared today. Nifty and the Sensex posted their worst weekly losing streak, viewers, in nearly 2 years. They declined for a second day in a row. Pharma and defense stocks were the worst hit, barring Nifty FMCG. All sectors ended lower for the week. Let's go across to my colleague Harsh for giving us a quick market wrap on how the markets fared this week.
Well, a tough day of trade and a tough day to close the week as well. It's not been a great week on the Nifty. We were down around 0.8% for the day and over 1% lower for the week gone by on the Nifty. So some pressure starting to emerge. In the last 6 odd trading sessions, we've closed in the red in 4 of those 6. That's something you want to keep in mind as well. In terms of gainers on a day like this, and within the Nifty pack, there were a few. There was Trend, there was Asian Paints, Hero Moto and HUL being the top 4 gainers in trade today. And largely for the week gone by as well, we saw similar kind of a texture. Consumption really took lead both today from a sector perspective as well as this week from a sector perspective. So some consumption names, the likes of an HUL did really well in trade, and even the likes of an Asian Paints, a Hero, a Trend were some of the top 4-5 gainers in trade even for the week gone by. When you're looking at Jio though, it was a top Jio Financial, it was a top gainer on the Nifty 50 for the week gone by. So that one really stood out for me. Now in terms of sectors, the tilt was negative towards pharma today. We were down nearly 3.5% where the Nifty Pharma index is concerned. Along with it slid healthcare as well. You saw the Nifty India Defence Index down over 2%. The metal index also in similar fashion was down over 2% in trade, and the big one, IT too, was down 2%. So largely that's where all of the drag came from. IT, especially the likes of an Infosys for the week gone by, well, doesn't look pretty in terms of points contribution, and even the likes of some of the pharma names. The Sun Pharma was one of the top losers on the Nifty today and in terms of contribution has done or has had a tough day of trade. When you're looking at the week gone by as well, you saw FMCG dominate, nearly 3% higher for the week. So the defensives are starting to play well. Nifty Realty is down 6% for the week. The Nifty India Defence Index down 5%, and the Nifty Metal down over 3.5% for this week. So that's where some of the pressure all through the week has actually come from. The Nifty Mid Cap and Small Cap indices also very similar texture, 1.3% lower on the Nifty Mid Cap Index, 1.7 for the week gone by. The Nifty Small Cap down 1.7 for today and nearly 2.7% for the week gone by. So some pressure emerging there as well. I want to talk a little bit about the broader markets.
And viewers, let's now cut across to the presser of the Ministry of External Affairs. Let's take a look.
ज़रूरतों की सोर्सिंग की बात होती है, उस पे हमारा जो ब्रॉड अप्रोच, मतलब जो हमारा अप्रोच और रवैया है, उससे आप भली भांति अवगत हैं कि जो बाज़ार में, अंतर्राष्ट्रीय बाज़ार में जो तेल मिलता है, किस भाव पे मिलता है, और उस समय या इस समय जो भी वैश्विक माहौल है, इसको लेके हम इस पे निर्णय करते हैं. जहाँ तक स्पेसिफिक आपका सवाल के बारे में बात है, मैं इससे कोई अवगत नहीं हूँ. आई एम नॉट अवेयर ऑफ इट. I don't have details of the specifics. So, on our energy sourcing requirements, you are aware of our broad approach that we look at what is there available in the markets, what is there on offer, and also what is the prevailing global situation or circumstances. Now, on the specific question, I am not aware of the specifics that you mentioned. On Nimisha Priya case, Sahil, last time when we had the press conference, I had made you aware of our position and I had informed you, and I would like to yet again reiterate that this is a sensitive matter, and the Government of India has been extending all possible assistance in this case. As a result of our concerted efforts, you've seen that the sentencing was deferred. It has been postponed. We continue to closely follow the matter and.
those are the comments of the Ministry of External Affairs on various topics, especially after Trump's tariff strike on India. He continues to say to focus on India's broad approach when it comes to our energy sourcing. We will continue to give you a lot more updates and the comments of the government when it comes to these tariffs. But moving on, viewers, Donald Trump has issued a warning to 17 major pharmaceutical companies, demanding that they cut U.S. drug prices within 60 days or face government action. He insists that American drug prices be set in line with the lowest rates found in other developed nations. Now, this policy shift could have significant consequences for Indian pharmaceutical companies, which derive a large portion of their revenue from exports to the US and typically enjoy higher profit margins in this market. What does this mean for Indian pharma players? To explain the potential ripple effects, let's hand it over to my colleague Varsha for further insights.
Yes, so President Donald Trump has issued a bold challenge to some of the world's largest pharmaceutical companies. Now he's demanding that they immediately lower prescription drug prices in the US to match the lowest prices paid by other developed nations. Letters has been sent to 17 major drug makers, which includes the likes of Eli Lilly, Novo Nordisk and Pfizer. Now specifically, if you see, Trump is calling for immediate reduction in prices for existing drugs sold to Medicaid, and he insists that any future drug launch in the US must be priced comparably to international markets from day one. Now he has also presented a unique proposal wherein the US government would help companies raise drug prices abroad to match American levels, but any extra profits earned overseas would then be brought back to the US to offset domestic drug cost. Now if you see, the pharmaceutical companies have been given a strict 60-day deadline to comply this. Trump warned that if they fail to act, his administration would deploy every tool to address what he termed abusive drug pricing practices. Now if you see the market, how this is going to impact Indian companies, so Sun Pharma will actually be impacted, and that's the reason why the stock was under pressure today, because the Sun Pharma has the largest exposure to US branded specialty drug sales, which is a key drug, Ilumya, which treats cirrhosis in adult. And if you see, the Ilumya sales were around 5,000 crores in FY25, and over 50% of Ilumya sales are supported by Medicare Part B. Now Pharma, if you see, drug generated 5,750 crore in FY25, accounting 56% of Sun's Pharma drug revenue. In Ilumya's US price is reportedly 4x higher than the other developed countries, and the lowering prices to global parity could significantly reduce Sun Pharma's US revenue and earnings. So because of this, because of this regulation, Sun Pharma was under pressure as of today.
Right, Varsha, thank you so much for explaining why Sun Pharma was under pressure in trade today. But the fresh round of US tariffs, viewers, up to 25% will take effect from August 7th with a default 10% rate continuing until then. Now, this means India's exports across key sectors like jewelry, textiles and engineering goods are now under threat. With penalties still unclear, concerns are rising across sectors. Let's now go across to my colleague Rishabh to understand the further impact of this.
Trump's tariff, we have a new date of implementation that has come in. Trump's tariff will be implemented on all countries starting August 7th. So that is when we can expect the 25% tariffs plus penalties to kick in. But till then, what we have is the 10% baseline tariff that is also applicable to all countries. Apart from that, from August 7th, what we can expect is that exports across sectors will be under threat. Number one being gems and jewelry, about $10 billion worth of exports will stand exposed to these tariffs. What we're seeing also is that these penalties that Trump imposed, there's very little clarity on why those were imposed, rather on what shape and form they might take. So there's very little clarity on those. There is clarity on why they were imposed is because of India's Russia relations, as well as being a member of the BRICS and other issues that Trump has highlighted over the past few months as part of his politics. What we're also seeing is a textile sector will get disadvantaged by these tariffs. India will lose that tariff edge that it had compared to manufacturing economies like Vietnam as well as Bangladesh. What we're also seeing is that the sectoral tariffs on aluminium and steel, and also auto and auto components of about 50% and 25% respectively, they will continue separately. So an additional reciprocal burden will not be put on sectoral tariffs. That is what we're picking up. Another sector that is expected to be rattled is the engineering export sector, about $20 billion worth. India sends to the US, and that will be hit also, about a $3 to $6 billion hit being foreseen on that bit. So a lot of things to unpack. Another 6 days now we're seeing, remember all of this with the context of the August 25th trade talks that India and the US are set for. The US team is expected to be in India for those. So lots happening. We had the Commerce and Industry Minister statement as well yesterday. So lots to unpack in this, in the run-up now to August 7th.
Right. And we're also actually learning that our sources have indeed told our NDTV Profit reporters that the negotiations over tariffs with the US is continuing to happen virtually. And, these tariffs, although contribute or affect our GDP really subliminally, but the negotiations, however, are continuing. And to give us more details, in fact, and clarity on this development that's coming in, let's go across to my colleague Rishabh, who's joining us on the phone line. Hi, Rishabh, please tell us what exactly are your sources telling you on our negotiations with them?
Yeah, so about these negotiations, we're hearing that they are ongoing, and it's not just about the August 25th in-person negotiations that I'm talking about. This is virtual negotiations on the sectoral level that are continuing. What we're also picking up from government sources is that these tariffs will not be actually applicable to about more than half of India's exports. So India exports about $85 billion worth of goods, of which about $20 billion will be around steel and aluminium, auto and auto parts. Those will make up the exports that are not hit by the reciprocal tariffs. They are hit by the sectoral tariffs. And also about $30 billion in electronics and pharma and petroleum. So those will not be impacted by any additional reciprocal tariffs. You'll have only about less than half of exports being impacted, about a 0.2 loss in percentage loss in GDP foreseen due to these US tariffs. Exports might see some slight hit, but that all of that is not enough, and that India will stick to its red lines and not allow US agriculture and dairy to access India's markets. That is something that we're picking up from our sources.
Thank you so much for that. And remember, viewers, this is an important development that has come in, and India definitely is holding its ground when it comes to its negotiations with America on finalizing a BTA. But moving on, as we dive deeper into the first quarter earnings seasons, let me take you through the Q1 report card of Adani Power. Now, on a quarter-on-quarter basis, the company's net profit surged by over 27% to 3,305 crore rupees. EBITDA too shot up by 18% to over 5,600 crore rupees as compared to the previous quarter. While margins expanded too, revenue took a slight hit, reducing by 0.9% to more than 14,000 crore rupees. Adani Power's board this quarter also approved a plan for a stock split in the ratio of 1:5. Now, this stock split is set to be Adani Power's first ever corporate action. And sources have also told NDTV Profit that the global trading firm Jane Street is under scrutiny for allegedly using its Mauritius-based entity to trade in Indian futures and options. This strategy allowed them to book significant profits while taking advantage of the India-Mauritius tax treaty to avoid paying taxes in India. Let's now go across to my colleague Shimi to understand this matter more clearly.
Well, that's right. The Income Tax Department, which surveyed the Nuvama Wealth on Thursday, is probing a potential case of treaty shopping involving global proprietary firm Jane Street. Sources tells NDTV Profit that Jane Street allegedly rooted its future in option trades through its Mauritius arm, booking significant tax-free profit by claiming treaty benefit. And at the same time, the firm booked losses in equity investment in Indian companies, resulting in zero tax paid on its overall trading activity in India. Now, the tax department believes that this entire strategy constitutes as treaty shopping, shifting profitable trades offshore to avoid any sort of Indian taxation while declaring losses locally. Department, who surveyed at Nuvama, which acted as a sole clearing agent, trying to gauge that why the tax were not deducted when it was liable to withhold tax under the Income Tax Act. Now, department is now looking at the books of Nuvama, the data and the trading details, and could perhaps move to recover dues from them, holding them accountable for non-deduction of tax on behalf of FPI. In this case, the Jane Street. For the benefit of our viewers, India-Mauritius Treaty had allowed capital gains from the sale of shares in the Indian companies by Mauritius-based investor to be taxed only in Mauritius, and due to this exemption, Mauritius became the preferred route for foreign investor for trading both in the equity and derivative. This led to, however, a lot of concern around the treaty shopping, where the entities set up shell companies in Mauritius purely to exploit tax benefit. However, the India renegotiated the terms of this treaty somewhere in 2016 to curb the abuse, and capital gains now in the Indian share acquired after April 1st, 2017 are taxable in India. However, derivative and certain more instruments still have some grey areas, and that's why the dispute like Jane Street keep emerging. Remember, earlier this month, Jane Street disgorged around 4,800 odd crore in profits, after which SEBI lifted a trading ban imposed on this global firm.
Right, Shimi, thank you so much for that. But adding to the Jane Street saga, viewers, sources say the global trading firm is not cooperating with Indian tax authorities. Key financial records and servers are maintained abroad, and officials say access is being blocked. Even the staff in India are few and reportedly not helping with the investigation. The case is now being closely watched as officials try to get more information from the global trading firm. And it's time for a slice of our big exclusive conversation with Dinesh Thakkar, Chairman and Managing Director of Angel One. My colleague Tamanna spoke with him inside a Tesla for a first-of-its-kind interview discussing Teslanomics and Tesla's influence on India's markets and the future. Catch Market Talk with Dinesh Thakkar tonight at 6 p.m. only on NDTV Profit. But for now, here's a sneak peek for you.
Tesla's India's entry has been 10 years in the making, and I'm sure by now you would have seen a lot of reviews on the car, its performance, etc. In this very special show, we're talking about the Tesla, we're talking about the economics of India that allows for a Tesla right now, the demand it could be seen, and why so much excitement about the EV space. But I'm not going to do this by myself. To help me really take you through Teslanomics, I have invited along on this shoot Mr. Dinesh Thakkar. All of you know him, of course, as the force behind Angel One, a veteran market voice. But I don't know how many of you know that he's a complete auto enthusiast and has a garage, which I think is everyone's envy. Thank you so much, Mr. Thakkar, for joining us.
Thank you very much. Thank you very much for this opportunity. As I also am a car enthusiast, so definitely I would really be very excited to drive this car with you, and plus engage in markets, and plus some talks on my car garage.
Yeah, so by the way, I don't know if you guys know, but he has McLarens, Porsches, and believes in performance over luxury. I think that is one thing that you're going to be looking for. Is this about style, and how much of it is about performance?
See, for Tesla, I would say I would look at kind of like innovation, what they have brought in. Apart from being EV, I think this company innovates a lot. And we also being into a field where we believe innovation is going to create deep penetration. So that is a common element what I am looking at Tesla. Tesla is nothing but a computer on wheels. So that way I would say it's more than a car.
You know, the biggest test, at least for any car company and even for a Tesla, is grappling with Mumbai roads. So let's see how that goes.
starting off our drive, and as has been explained to us, first of all, are you excited?
Yeah, definitely. Very excited.
I promise to drive as well as I can. Thank you. Thank you
I fully trust you.
So the way this works is pretty interesting. So I have to, everything is on this screen. There's pretty much nothing here in the center of the car. It's very different from what you see. Nothing around the steering wheel. Everything is from the screen. Now, that can be, I think, excellent if once you get used to it. Perhaps right in the beginning, it'll take some getting used to, because that's not how other cars usually work. So here we go. All right. And we're off. So you know what's exciting about this, Dinesh? I feel that the way they've made this so intuitive. I'm going to start the conversation talking a bit about Tesla, and the whole concept of this conversation, of course, with Dinesh Thakkar, has been to talk about Teslanomics. Has Tesla's time come in India? We've been waiting for this for at least a decade now. By the time it has come, there are other competitors, but Tesla still has that brand value. So some of your thoughts on that. First, Mr. Thakkar, considering that you are truly a car lover and you believe in performance over luxury.
See, Tamana, what I see is that Tesla is a company who really innovated and built all their cars from grassroots level as an EV. So technology what they are using is purely thought based on how EV should function, how EV should look like. So you look at all the functions like over here, everything is on the dashboard, which unlike EVs that we see, which are converts from internal combustion engine to this, they are more luxurious car where all the software is fitted. This I am feeling as if it is a computer on wheels. So everything is like so well kind of like designed and so user friendly.
And with that, viewers, it's a wrap on this edition of Profit 360. But do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
Has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Varsha Chandani, and of course, no guesses, likely a pharma company, right? But we've had a good set of numbers coming in from Dr. Lal. Would you say that, Varsha?
Yeah.
Yes, and therefore, you'd want to know as to whether after the entire normalization in terms of numbers post-COVID, whether pathology labs are really one way to play pharma and domestic pharma, given that there is exposure coming in from global, which is coming in through tariffs. So, therefore, this conversation becomes relevant. And we'll start off by understanding what I want to know and why Dr. Lal PathLabs. One is volume growth sustainability. Now, Q1 was a good quarter where volume growth is concerned, and want to know whether that can sustain all through FY26 or not. Really, that's going to be the one key question which we'll want answers to. The second one is with regard to margins and growth guidance. The gross margins have improved and improved quite well. And that is reflecting on the EBITDA margin as well, Varsha. The guidance seems to be 27%, but they've done 28% in terms of EBITDA, both in FY25 as well as in Q1. So that's impressive. Whether that can sustain, and therefore what's the guidance like? They've guided for, I think, 11% top line growth for FY26. So whether that changes at all given volumes. So we'll talk about all of that. The third piece is with regard to radiology. Now, is this going to be the new growth lever to kick through when it comes to a Dr. Lal? It's synergistic with its business, and therefore could this be one of those pillars on which it builds on and further creates efficiencies within its business? That's what I'd want to know. Radiology, is that the new lever? And now then there's the other lever of Suburban as well. The acquisition of Suburban has left plenty on the table in terms of room for operational efficiency to play through. timing of that has been a bit iffy from the management. I'd want to know whether there is something in terms of timing that they can give us. Swasthfit is the other one. Extremely strong set of numbers coming in, driven by Swasthfit. The margins also of Swasthfit have been really, really impressive. Can that kind of a growth clip continue? And then you have pricing. Pricing is the other lever where there's been a bit of a drag where Dr. Reddy's is concerned. Dr. Lal is concerned, and therefore whether pricing improvement can actually happen, and is that on the anvil, and that will obviously impact top line, is what I'd want to know. Unlikely Varsha on this count, but I mean, it's just something I'd want to know.
On the pricing front, I would say that Dr. Lal, they clearly, in last few quarters, they clearly told that they don't want to go for price hikes. They want to play on volumes.
Correct.
And that's the reason you're seeing that there's been a good volume growth, though.
But Varsha, you look at across the hospital space, you've seen price increases rampant, right? And therefore, on the testing side, if you're not seeing price increases, at some point that has to correct, right? It has to adjust itself for inflation. So I'd want to know as to whether they're actually doing that or not. And obviously competition texture, because that will also play through on pricing a little bit. So all of that, of course. But let me first start off with, or rather, I'm going to shift focus entirely to Varsha now. She's going to drive about the company, and she does this well. So Varsha, over to you.
Let me start with that, that as Harsh was saying, because of this all tariff situation, you have hospitals, you have diagnostic companies, so basically they are on the radar of the investors. Why? Because you don't have that overhang of tariffs, playing out in diagnostics and hospitals, and diagnostic itself is growing into double digit, and that's one of the reasons you're seeing many upcoming IPOs. Recently we had Suraksha Diagnostics, and many diagnostics are in focus when it comes to investors because of again the double digit growth and no overhang when it comes to tariffs. But shifting our focus to Dr. Lal, let's see what that company does. I think our viewers know very well what this company does, but still it operates a diagnostic chain with a pan-India presence, and in the last 5 years they have served 131 million patients, and when it comes to pathology and radiology tests, they have almost 5,000 overall 5,000 pathology and radiology test comprehensive test menu. They have 298 labs, and they are geographically spread out network. On the operating highlights, when it comes to Dr. Lal, the number of clinical labs have been improved since 22. If you see in FY 22, they were operating 277 labs, which has increased to 298 labs when it comes to FY 25. On to the revenue by geography, if I were to talk about, their major focus is in Delhi, which contributes almost 31% to the overall revenue. Now this is followed by East India at 15%, then rest of North of 13%. Then you have also South India, which contributes 6%, and others at 2%. So overall, their major focus has been into Delhi, but they are expanding when it comes to West India, West and South markets as well. And let's see how they goes up, because the point here is it's very easy to open a diagnostic lab, but it's very difficult to scale that up, and that's one of the reasons. If you see, the diagnostic industry has been clustered. You don't have any diagnostic company with a major pan-India presence. Dr. Lal has done a good job when it comes to pan-India presence, but
this is also more of heartland India, right?
Yeah.
You look at the tilt. 50% is Delhi, NCR and UP, virtually, and just the balance 50, and even out of the balance 50% is East and West, essentially. So, I mean, would you want to see South start to dominate? I'm sure, and I'm sure that's the way they look at it as well.
That will actually require some time, Harsh, because scaling up a diagnostic industry is actually difficult, and that's one of the reason Dr. Lal, being the king of the diagnostic industry, has been facing, I won't say a problem, but yeah, they're very little slow when it comes to expansion, and that's not their fault. It's the industry, how that operates, and that's also one of the reason why they are going for acquisitions. into those areas where you don't want to open up a lab and then go into all those hustle, just acquire a lab and just move on.
Sure.
So this is how industry operates. But on to the overall, if you see, so that there's nothing much. They just operate a diagnostic change. Just because I'm talking about the company, I just wanted to highlight how their Q1 numbers were. The revenue growth that you're seeing is led by the sample volume. SwasthFit contributed 27% in Q1 FY26, and EBITDA increase that you're seeing is led by sustained volume growth, and lastly network expansion and favorable mix also aided EBITDA. So overall, Harsh, a very simple business to understand, but a very difficult to scale that up.
Well, yes. Okay. So that's with regard to Dr. Lal. Let's start off and look at the metrics that we'll speak about with regard to where Dr. Lal is concerned. We'll start off with the income statement, the balance sheet, the regular metrics, frankly, cash flow, return ratios, shareholding, street cred, street coverage, and valuations. That's broadly how we always do it, and for all of you viewers, this is not new. So I'm going to go straight across to Varsha, who will start with the income statement.
Yeah, thank you for that. So overall, if you see the income statement, goods on the 3-year basis, starting from FY23, they've done a good business. So if you see, they've consistently delivered strong revenue growth. Mainly, almost they always have a guidance of 11 to 12%, and even in this financial year also they're expecting that, and they've decently done well. Now this revenue growth that you're seeing is primarily driven by increasing patient volumes and strategic network expansion into tier 3 and 4 cities. And of course, if you see the margins, look at the margins. Margins have improved. So in FY23, from 24% to 28%. Now this is on the back of favorable product mix and of course the cost optimization strategies that the company has been doing, and of course the volume growth that the company has seen. So beautifully they've increased their margins, and even net profit has been increased, of course, because of the revenue growth, the cost efficiencies and the margin improvement that you're seeing. So overall, Harsh, what they have guided in the last 3 years, on and off, 1 or 2 quarter might see some on and off things, but overall, they've done a good job when it comes to overall income statement.
Yeah, I mean, last 3 years, every single guidance that they've put out, what stood out for me when I was researching this, they've exceeded the guidance every single time. So they have a record of really doing well where guidance is concerned. So that's the one key positive which viewers must know. Okay, let me now talk about the balance sheet, and it's a fairly simple one, so I'm going to just breeze through it. You look at the equity and the reserves, they're at around 2,100 odd crore. It's trading at nearly 12 to 13 times its book value, which is on your screen. The borrowing is minuscule, frankly, and currently at FY25 it's zero when I exclude lease liabilities. So on the liabilities column, all of that 157 crore is lease liabilities. No concerns with regard to the balance sheet. Absolutely clean. When I'm looking at the cash reserves as well, it's sitting on a healthy set of cash of around 840 odd crores. So no concerns on that count either. Varsha, cash flow.
Yeah, so if you see the cash flow from operating business, in FY23 it was 456 crore, which has gone up to 569 crores. On the net cash flow, that the negative number that you're seeing in FY25 is because of the investments or cash flow from investing activity that they've done. They've invested in some investments, and that's the reason you're seeing that negative number. So overall a good healthy cash flow that you're seeing. I'll also take Harsh on the ratio side, because if you see, the ROCE has increased from 24% to 48%. Now one of the reasons why this has increased, because company do not operate in radiology. When it comes to radiology business, that business is a capital intensive business, and that's one of the reason. If you see, for Vijaya Diagnostic, the margins have been higher and ROCE has been lower because of the capital intensity that radiology business has with higher margin. So if you compare it with Dr. Lal and Vijaya, you would see the margins of Vijaya higher because radiology has a higher margin, and it's a capital intensive business, and that's one of the reason the ROCE of Vijaya Diagnostics is lower, but the ROCE of Dr. Lab is higher because they do not have much contribution from radiology business. So overall, good set of numbers when it comes to ratios. Yeah.
And fascinating nugget, you'll always get these small nuggets from Varsha when we bring her on KYC. So that's the other big positive. Let's look at shareholding now. And within that promoter shareholding, fairly steady. Again, I'm not going to waste too much time here. It's been 50+% for maybe the last 10 years odd. So no concerns with regard to shareholding. There's decent participation from FIIs as well. FII participation currently stands just above the 20% mark. The highest in the last 10 years was 26%. So some scope for it to go up. And DIs also have a fairly solid shareholding at this point at its peak of 17.6%. So that's on shareholding. Street cred also, let me take up actually. Let's quickly look at street cred. We've given this a neutral largely because you look at the 5-year returns. It's been, that's the way it's been. But the 1 month, the 6 month, the 12-month performance has been okay. The last 1 year, not any solid returns, and therefore we've given this a neutral. Let's go across to Varsha. Varsha, you want to take valuations and analyst recommendations?
Yeah, so on the valuation side, Harsh, if you see the PE, the TTM, trailing 12-month PE for Dr. Lal stand at around 51, and if you compare it with, Metropolis, Vijaya Diagnostics and Thyrocare, it's available at kind of discount to all these players. When it comes to FY27 PE, again, Dr. Lal is at 45, and Metropolis is at 42, ranging at the same level, while Vijaya Diagnostics has a higher PE. Now, one of the reasons, again, the radiology business, which, Vijaya has a good contribution from radiology, and that's and higher margins, and that's the reason the premium valuation that you're seeing in Vijaya Diagnostics. So overall, on a valuation side, yes, Dr. Lal normally has a premium valuation considering the management pedigree and the a decent business that the company has been, and of course the guidance that they meet the guidance. So overall, I would say a neutral set of rating when we would give to valuations.
Sure, let's look at analyst recommendations as well. Just a 6% upside is what average analysts on the street expect. 17 buy calls, 4 holds, 7 sells. So clearly not too many in the hold and the sell camp versus the buy. We've given this a neutral as well, just given the upside being just about 6%. But let's quickly stack up all of the rating parameters, and what we'll get is a very, very healthy 6.5 on 8 for a Dr. Lal PathLabs. And in fact, let's also go across to the conversation. Let's pull up, there you go, 6.5 on 8. And let's go across to the conversation Varsha and I had with Shankha Banerjee, the Chief Executive Officer at Dr. Lal PathLabs earlier today, and understand what the outlook is, not just for FY26, but what is in store for FY27 also. Listening. Let me first start off, sir, with the Q1 numbers, especially on the volume front. It's been a decent quarter for you. Question is sustainability and any one-offs at all. Is this at all weather linked, given the early onset of monsoon? Has the testing in the system gone up in terms of, are you seeing better volumes because of that, or is this largely just better trends playing out?
Good morning. Thanks for having me on the show.
Good morning.
I think that's a very interesting question, and thanks again for the compliments. Yeah, so the numbers this quarter are obviously quite good in terms of our sample volume, which is now seen a 10.7% growth in our overall revenue growth of 11.3%. Now, our quick analysis shows that this is really not driven by seasonal swing or anything getting preponed. It is primarily like for like versus same quarter last year. So yeah, I mean, this should be sustainable, and all the efforts that we've been making in the last 4 to 5 quarters are kind of bearing fruit in some way.
Right. Hi, Mr. Banerjee. Welcome to the show and pleasure to have you. Mr. Banerjee, if I remember, you had guided for 100 basis points margin compression in FY26 due to the reinvestment that Dr. Lal has been doing. Was Q1 strong margin an anomaly? And if yes, should we expect this compression to be delayed?
So, our margin profile usually is better in the first half compared to the second half. and Q1 margins are not really indicative of the full year. However, the margins that we have seen in Q1 are kind of also making us recalibrate the whole margin situation for the whole year. I think we'll be in a better place to maybe look at the guidance again after H1 is over. But as of now, it appears that we should do slightly better on the margins compared to, I think, what we had guided at the beginning of the year.
Okay, so basically, you're not expecting the compression in the margin going forward, at least for the H1. Okay. Also, please go ahead.
No, sorry, I'll just correct that a bit. I'm saying that we have H1 is definitely a better margin profile than H2 for us, and we had guided a compression in the margin for the full year compared to last year full year. So we will recalibrate by end of H1, and then we'll see. But it looks like we should be able to do slightly better than whatever we had guided earlier.
Okay, understood. Got that point. Also, Mr. Banerjee, so there's been good growth when it comes to pickup points as well. Now, when do you expect to see a significant step up in revenue beyond 15%? I mean, I agree that Dr. Lal has been growing above industry, but can you see, because of the uptick in the pickup points, can you see your revenue growth beyond 15%?
So right now, I think our revenue growth that we have guided is between 11 to 12% for this financial year, and Q1 is kind of in line with that. We will prefer to take this step by step. One would obviously like higher revenue growth. The infrastructure addition that we are doing, whether it's in terms of the new labs that we are adding, the collection network, including pickup points, have a trajectory or a maturity trajectory which is slightly longer, and it usually will not have a direct correlation to growth in the immediate future. So I think that infrastructure work or addition will continue, but our guidance for revenue for this year remains between 11 to 12%, and we are hoping to achieve that primarily driven by volume growth and whatever mix improvement that we can get. We haven't yet factored in any price increases.
So what's happening on the suburban front? Give us that perspective. You've guided that you're being cautious with regard to making large scale changes within this model. How quickly do those changes come in? What should be the year in which everything should be effective, and what should the impact of that be on your numbers?
So, what we have done is last quarter of previous year, we have now completed the full integration with all the whole range of IT integration also completed. That has given us a bit of a market, disturbance, which has caused in a bit of a slowdown for a period of time. We are recovering on that growth. Also, now with the whole suburban diagnostics as an entity getting merged, we are more looking at West as a region to see how is that going to grow, because now there is, fungibility between suburban and Lal PathLabs in certain areas. So that's what we are going to track. And our West region growth, we are looking forward to kind of start coming back to the numbers that we want maybe in another quarter or so.
Got that. Also, Mr. Banerjee, now coming to your, Swasthfit portfolio. Now you've seen almost 20 to 22% growth when it comes to, that portfolio. Is this growth sustainable, or you're expecting a higher growth also in the coming quarters?
So our Swasthfit growth, as you rightly said, has been 22% for this quarter, and the contribution has inched up further. It's now 27% of our revenue numbers, and we still see some bit of headroom available for this growth to continue. specifically, driven by the fact that not only urban markets, but we are seeing, the acceptability of the Swasth Fit bundle packages in some of our tier 2, tier 3 towns and below as well. So that is kind of helping us besides whatever we are driving in our core markets in terms of Swasth Fit portfolio.
Okay, also on the radiology, so how do you view radiology as your, future growth driver? Because there are competitors, offering services like ECG at home. How will Dr. Lal PathLabs approach these basic and advanced, radiology services going forward?
Yeah, so radiology, like you said, can be broken into basic and advanced. So in some of our metro markets, we offer the basic radiology services like X-rays, ultrasound, ECG, treadmill tests, etc. But high-end radiology, which is CT, MRI, and all, that's not something that we are kind of into too much. But even in the basic radiology that we do, currently that contribution is pretty low. So that is something that we are continuing to evaluate as to, how can that business model help us grow in the future. As of now, our focus remains on pathology and scaling pathology. But that radiology option is also always available to us, and we are continuously evaluating, that part of the, testing portfolio as well.
Mr. Banerjee, any kind of any number or any target that you have when it comes to radiology? Maybe in next 2 to 3 years, you want to take X percentage of revenue contribution from that segment.
Right now, like I said, we are just evaluating because the business model around the high-end radiology works quite differently from the way the pathology business works. So we haven't yet, we don't have a business plan which is, targeting a certain growth coming through radiology. But yeah, we will continue to evaluate that, and maybe when the opportunity is right and our plans, maybe then create plans to see how we can add that to our portfolio.
All right, that's in fact all the time we have on this edition of KYC. From Varsha, myself, everyone who puts the show together, thanks so much for watching, and we hope you found this helpful.
Has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
You can tell a lot about yourself by the way you react to something that you had not anticipated, especially when it comes to money. And this is usually not something that you can analyze in the moment. If you were an investor in the equity markets in 2020, I want you to think about the reaction that you had in the month of March. I, for one, was on a holiday, and for the most part, blissfully unaware that the equity markets were plummeting. I'm not sure when I realized, but I distinctly remember looking at my mutual fund portfolio and seeing that it was in the red by more than 30%. I remember that visceral fear that my savings had evaporated in just a few days. Equally, I've been guilty of going overboard when the equity markets were on a bull run, making all of us feel like kings and queens and like we could do nothing wrong. Greed and fear, two opposing factors that dictate the course of capital markets, and the way that you navigate them determines your individual success. Doing this well is easier said than done though, and that's what I want to talk to my guest about today. Joining me today is Ashish Somaiya, Chief Executive Officer at White Oak Capital Asset Management. Ashish, thanks so much for taking the time.
Thank you. Thanks for inviting me.
So, I'm hoping that people remember this because a lot of people started out at that point. They bought the dip, so to speak, or entered at that point, and a lot of wealth was created. But those people that started in September of 2019 saw the crash. I was lucky enough to learn from that, I think. And I saw this interesting post that you had on LinkedIn where you were talking about meta thinking, which is thinking about thinking.
Yeah.
And is that the key?
Yes, Alex, I just realized because, I'm lucky enough to meet a lot of people and observe many people and their thought process, etc. So one thing I've realized over time is that everybody spends a lot of time trying to figure where the market will go. Everybody tries to figure, predict the course of the markets. And what I've learned is that, markets are not predictable, but irrespective of where the market is, how people behave, how they react, that is kind of, that carries a lot of insight. So you may not know which way the market will go, but just by observing how people are conducting their affairs, or even by observing how you are feeling about markets, you can get a lot of clues in terms of the market direction. So, meta thinking obviously is something which differentiates us from other species of living beings, because we are one of the only species, probably the only species, where we can think what we have been thinking. We can analyze what we've been thinking. More importantly, we can even analyze how we've been feeling. So, if you find, if you react to the market in a certain way, before you actually act on it, you can think how you have responded in similar situations in the past. And when the market behaved this way, say 5, 10, 15 years back, at that time, what did you feel and how did you react? And also by observing what others are doing. So I think thinking about how you think or thinking about how you're feeling, it has a lot of clues. So don't waste your time predicting where market will go. Invest some time in observing how you are responding, and more importantly, how people around you. The last thing, like say, Mr. Buffett is often quoted to have said that, be greedy when others are fearful and be fearful when others are greedy. You know what? The most important word in that statement is others.
Yeah.
And the clue to success, the key to success is not to be part of others. And how can you ensure that you are not part of others unless and until you observe what the others are actually
and you
doing.
are in that cohort essentially, because you cannot remove the experience of fear and greed. And look, this is written about a lot. Fear is not or conquering fear is not the absence of fear. It's what you do once you have experienced that fear. And so therefore, even from an investing perspective, from a lens, you have to understand what that feeling is. And it's quite a I said visceral. I'm telling you, I was on a beach and I looked at my phone and I'm like, no, what? And my wife was looking at me, and we were pretty much one year in from our marriage, and she'd given me all the money to manage, and I was like, how do I tell her that it's down 35%? So it teaches you stuff, doesn't it?
Yeah, absolutely. See, I mean, if you don't want to be part of the others, as I said, of course, we are all part of the others. We are all part of the crowd. But every once in a while, our past experiences and what we glean of what the others are doing should enable us to kind of a little bit, stand apart. Because as they say proverbially, you buy when there is blood on the street, including your own. So unless and until you are observing how others are reacting or how you yourself are feeling, how will you bring yourself to actually acting against your own worst fears, right? Like you rightly said, fear, overcoming fear or courage is not about not having fear.
Yes.
Courage is about recognizing or validating that I'm feeling fearful and then kind of going beyond it. So how do you bring yourself to act against the crowd? You cannot do it unless and until you have observed how others are feeling, how you are feeling, and then, kind of take a step back and then, tailor your response.
But equally, Ashish, would you agree that acting against the crowd, you can look at it in retrospect and say it was right. But in that moment, it's not always guaranteed to work, right? So for example, let's talk about COVID-19 and let's talk about the week up till the 21st of March or 22nd of March, whatever that was, when the Nifty 50 fell 13%. In the run up to that also, it had fallen 5% one day, 8% one day. You could have thought, oh, wow, it's fallen to this point, it can't fall further. And you've deployed whole hog. You've taken all the money that you had lined up. And you said, okay, you know what? It can't fall further. And you've deployed everything. But it's fallen 13-14% after that. So there is danger there as well.
Yeah, so I have a couple of clarifications to make. Good you brought it up. See, it's not about thinking in extremes. right? So when we say that be fearful when others are greedy, or when we say buy when there's blood on the street, and I want to throw in one more example here. We always say that the stock market, over the last 30-35 years, it's compounded 14-15%. All those things we say.
Yeah.
So long range compounding is 14-15%, but Alex, pretty much every calendar year from its high point, the market does fall 14-15% or 20% once, right? So there are enough opportunities to act against the crowd. But the key thing is not to think in extremes. Like, say if in 2019, 2020, let's say market started falling, or even say recent times, 26,000 was the peak of Nifty, and then we saw it go all the way to 21,700 at the low point. You don't need to think in terms of, all
Can
in.
you catch the bottom? Yeah, and
right?
yeah.
So basic point is you need to calibrate. See, we know that the long range return is 15% compounded, but we also know that every once in a while market does fall 20% from its previous high.
Sure.
Now, I don't know whether the bottom is 20% or 30%, but the fact that on average, every year it falls 15-20%, the moment it goes below 12% from the top, can I start throwing in some, let's say if I'm doing an SIP, can I throw in one extra installment or two extra installments?
Yeah.
So don't think in terms of extremes. You're not trying to catch the peak, you're not trying to catch the bottom. But every time you find that it is 10-15% below the peak, can you start throwing in a few extra installments into your SIP? And the other way, opposite, when the market is expensive, let's say that long period average is say 14-15% compounded. Every once in a while, like recent times, we may have seen that our portfolio is showing 25% compounded return for last 3 years, for example. And then we start thinking, wow, I'm the best investor or the best.
You feel like a king or a queen.
But the point is that if the long period average is say 14-15 and your portfolio is currently showing 25, what does that tell you? Again, you don't need to think extreme that, okay, remove all the money from equity. Can you start reducing or calibrating? So we need to think in terms of continuums. We need to think in terms of calibrating. We don't need to think in terms of extreme steps. You know what, like in 2020, if somebody says, okay, let me leverage, let me borrow against my house and put money because market is 40% down. That is crazy. That is thinking in extreme terms. That's not what we are talking about.
Is that also true in the selection of the schemes that you do? Because look, the data will show. Look at the data that's put out by the Association of Mutual Funds, the AMFI data that comes out every month. You'll see that the largest category by far is sectoral and thematic. You will have a significant amount of money that has gone into small cap funds, significant amount of money that's gone into mid cap funds. I know for a fact that your fund house decided to hold back on the launch of a small cap fund at some point.
We don't have an open-ended small cap fund.
And so I understand why you've done that, but this extreme way of thinking and this idea that a tactical allocation, because I think that banking is going to be the next big thing, and having 30%, 40% allocation to one sectoral fund or thematic fund, even though it's broad, to say, okay, I'm not doing a banking fund, I'm going to do a financial services fund because it also includes insurance and mutual funds and asset management companies. But it's a flawed thinking. But why is it a flawed thinking?
So I'll tell you, see, what happens is that we all need to be mindful of the playground we are playing in. We all need to be mindful of what I call base rates. So let's look at it this way. If you look at our stock market construct, the construct, let's look at by market cap first, because you mentioned, say, small cap. If you look at the entire market cap by construct, we are still about 60-65, the market in the long period average is still about 65 to 70% large cap and 30 to 35% small and mid cap, right? If you think sectorally, the market is still 60 to 70% banking and financial services, IT, consumer, maybe healthcare, right? But when you say that people have been putting bulk of their money, and I actually did the math, in the last 1 year, you can imagine almost 40% of all net flows went into thematic funds. And then you add small and mid cap to it, you would imagine that 70% of all flows went into small and mid cap. Even if you talk thematic, it's not like money went into the big ones like banking or healthcare or IT or consumer. It all went into narrow segments of the market, which is, say, PSU, energy, railway, infra, defense, etc. Right? Nothing wrong with. The point is why I talked about the playground and the base rates. You look at it in terms, sometimes you go to a restaurant and order thali, right? When you see a thali in southern India, Alex, the thing you see big and in the center is rice. and then there is certain the utensils are arranged, and then there is somewhere where there is some chutney and there is some pickle. Imagine a thali where green chilies pickle is placed where rice was to be placed, and rice is placed where chilies were to be placed. And then I consume that thali, and then I come and ask you, Alex, what do you think is the impact of Mr. Trump's pronouncements on my portfolio?
In any given year, you have a situation where a sectoral or thematic fund is the best performing scheme of that year. It could be an infrastructure scheme in 2024. It could be a defense scheme any other given year. And so therefore, can I select the next winner?
So that is a game that's a game which it's fascinating, but you just can't win, because in 2024, ultimately, in 2024, all our conversations were dominated by PSUs and energy and defense. But surprise of surprises, in the calendar 24, the best performing sector was healthcare, actually.
Right. Okay.
It was up nearly 40% for the calendar year. Right, people would have started the year thinking it will be PSUs or PSU banks, but no, it was actually healthcare. So the point is that even this year, we don't know, it's mixed. We don't know which sector will actually end up on the top. Right, and if you follow the theory that we need to think about how others are thinking, then maybe digital and IT is actually the most contra bet today. Correct. So I think
it's not affected by tariffs.
Yeah, exactly. So what I'm saying is that people want to identify the next winner. But the point is, even if you want to identify the next winner, there is a way to participate. You don't bet the house. I mean, you can't, as a sum total of investors, mutual fund participants, they can't be putting like 70% or 75% of the net inflow into sectoral funds, thematic funds, and small cap funds, right?
Small funds.
And even if you talk about sectoral and thematic funds, even if it was banking or digital or consumer or healthcare, I could understand, because they are big parts of the market, right? They are not exactly rice, but they are at least, say, veggies or the chicken, right? But when you pick something which is not even 1% of total market cap, and then you have 15% of your portfolio allocated into that, then you're calling for trouble. Because at the slightest hint of any shift in the market, you will find yourself playing in a completely different playground, isolated all by yourself.
So, but that's the danger.
Right.
That's the danger that you're highlighting, Ashish. But people who've experienced 25%, as you've pointed out, they want to keep experiencing 25%. And so therefore, they will say, the only way for me to do this is for me to pile on the pickle.
So the probability of experiencing significantly high return in some part of your portfolio is if you are well allocated. Right, but generally what I find is that people chase a theme after the 25% has
already done.
Right. See, the entire market will experience 25-30% return only if you catch COVID. But one particular sector in which you allocated, and that sector outperformed or outshone the others, and you got 30% on a sizable part of your portfolio, is like calling for too much risk. There are very few people who catch it. In fact, most people, as we discussed, put the money after the performance is delivered. Right? See, when did people put maximum money into PSUs or energy or defense? It was mid 2024. When did we see maximum money going into small cap? It was early to mid 2024. Right? Did we see maximum money going into healthcare funds in the end of 23 or early 24? Answer is no.
No.
Right?
Yeah. So you saw it towards the end of 2024.
Yeah. So what I have seen is that usually speaking, money comes after performance comes. And performance goes away after the money comes. So I think the best thing is that, it's better that you keep the lay of the land in mind. Make sure that your portfolio allocations are somewhere plus minus of the broader, that's why I said keep base rates in mind.
So from that perspective, and obviously that conversation then comes to asset allocation, it comes to sensible, pragmatic diversification of your investments.
Yes.
Because in any given point of time, a particular sector, or three, will outperform the others. At any given point of time, one particular asset class is going to come to the foremost. You saw it with gold. And the comparisons that are drawn to the Nifty 50 over the course of a decade, and the fact that it's beaten it hands down. A lot of factors go into that. The fact that central banks have been buying, and there's a de-dollarization that has taken place over the course of the last 5 years, has gone into that. The average person is not going to be thinking about all of that. So therefore, what is the key to having a good diversified portfolio? You have to buy into being willing to get lower returns, right?
So I'll tell you, First of all, when you say buy into or show willingness to get lower return, the way to think of it is that whether it is life or business or investing, it's all about optimizing. None of it is about maximizing. People who try to maximize more often than not run the risk of Mr. Market turning around and minimizing them. Right? So if you try to maximize, every once in a while the market will turn around and minimize. So it's better that you try to optimize. Second thing, while we were talking, I just want to clarify one thing. I'm not saying that you should never bet on something which you feel convinced about. Okay, let us say, for example, right now in my own conversation, if I say, not a recommendation, but just for example, if I say that tech and digital seems to be the contra bet. So I'll say, okay, in the broader market, tech is 8 to 9% of BSE 500. If I'm feeling extra bullish about it, so how much of my equity portfolio will go there? Maybe 15? 18 tops, right? Will I redeem some 10-20% of my portfolio and buy everything into tech? Not really. It's just about being slightly overweight or underweight. You don't bet the house, really speaking.
But you say this, but yet we do another show on a daily basis. It's Ask Profit, and I get callers, Ashish, that have one stock that has done incredibly well, that is giving them gains of 1 crore plus. I've had this, okay? It's a little known infrastructure company. It's done particularly well. And this is accounting for 60-70% of their portfolio. It's one stock.
Yeah, but they'll have
it gives me the palpitations.
They'll have to bring themselves about to take some money off the table. Because see, there is another learning, which, like I'm nearly 50 years old, so I can say all this and some people may not be able to relate to it. But there is a reality that you never question your decisions based on the outcomes. So if you tell this person that, sir, 70% of your portfolio is in one stock, you should take some money off the table, right? Then you say, but Alex, what if it goes up another 50%? First of all, a lot of the times it's not well researched, right? You bought it for a certain reason. It's gone much further than what you ever thought in your wildest imaginations, right?
In this case, it's well researched. He's looked at the land holdings. He said, oh, the value of this is X, the market cap is X, and so therefore
but there are so many determinants, Alex. So what I would do is that I would take some money off the table and diversify it. I'll tell you the reason. The reason is because knowing fully well that it can go up further. So that's why I'm not taking all the money off the table, right? Second thing, if it goes up further, and when I look back at, why did I take some money off the table? I should always be mindful that probabilities and the alternate reality could have been something else, right? Some news can come and the stock can tank. So my point is that it's all about optimizing. If you try to maximize, let's say there is a juncture when you thought, I should have sold, and then the stock is 50% down. Even that can happen, right? So we are dealing with uncertain outcomes. We are dealing with probabilistic outcomes. At any juncture, you need to see on balance. In future, anything can happen. But today, where I am standing at this juncture, what do I make out of this situation and what do I think is the right thing to do?